Good morning. Chips are bid. Morning, everyone. I'm your host, Cousin Benny, coming to you from theclosingprint.com. It is Monday, July the 20th. Got about 11 minutes to go. Hope you had a good weekend. Kind of disappointed. The World Cup was kind of boring. I thought there'd be more aggressive trade, or more aggressive play, I should say. My brain's on the markets. Looking at chips seem to be bid. The top 10 on the NASDAQ 100 to start. AMD is in there, Micron, Western Digital, SanDisk, Lam Research, and Marvell. Marvell climbing up the list right now. Okay, so we'll look for chips. We have positive gamma in the markets. If you read the gamma update, positive gamma above and below price. You can see right here where the arrow's pointing. That curve or linear line is above and below price. We got positive gamma. And we've got earnings this week. Earnings this week, Google, Tesla, Intel. S&P managed to stay pretty much flat thanks to rotation into more supportive sectors. We're sitting right there at the 50-day. Sitting just below the 50-day. We will be above it this morning. Futures are up. We're up over 30 handles. Last time I looked, 30, 31. Okay. Got 9 minutes to go. Okay, SPY's on the move here. SPY, S&P 500, starting to move. Pre-market, we're up here at 747. All right, let's get ready. Chips are bid. AMD moving up the list. Pre-market over here. Pre-market. Okay, looking good. Okay, a little bit more than a minute to go. Chips seem to be bid, so we'll be looking at that. The watch list populated with stocks that were moving in the biotech group, transports, real estate, energy. We'll also be watching those areas. But chips, we need a nice bounce in chips to make up for some of the losses from last week. Semiconductors. Okay. So we're up here, pre-market, 3-candle reversal potentially. Okay, semis. All right. First 15 minutes or so, I'll be assessing whether or not I want to take some profits off the table. We're open. Might want to take these put flies off. Okay, I'm going to take these put flies off for now. I don't really need them. Let's see, SPY. They're pretty cheap, right, if I recall. SPY, and they are there for September. So we'll see what those do. All right, SPY's bouncing. Looks good. All right, S&P is on the move. S&P on the move. Nice volume at the open. Let me take this. All right, SPY bid. S&P is bid. We continue to move higher. Futures moving higher. All right, we got a nice little move so far. Nice bid in the markets. S&P is rising. Top 10 on the S&P 500, LITE, Teradyne, Domino's Pizza, SanDisk, Micron, Seagate Technologies, Western Digital, Intel with earnings this week. Intel. Okay, nice move on Intel. Reversing. Intel. Okay, Intel continues to rip higher here. Intel on the move.
CYBT, SKYQ, CYBT halted to the upside. DGXX, IRE,
If it does break through, you still have 50% of the position. You can always add back. But if it
SNXX, SNDU, SNDG, SKYQ, DGXX, PEX, SNDU,
Sorry about that. Little technical difficulties. Intel on the move. Intel.
LPGG may resume in less than a minute. SNXX, SNDU, DGXX, SNDG, NVIG, AOX, SKYQ may resume in less than a minute. IRE,
let's say Alphabet comes out here and sets its tone and they raise their capex spending again this year, as a lot of these companies did just 3 months ago. How do you think the market digests it? Well, at least I think today we're a little bit better positioned to handle that because we reset as we started bid. Going back to the question you asked,
Yeah, if you're just joining us, I'm your host, Cosmetic Image Chief, theclosingprint.com. Had a little bit of technical difficulties there for a few minutes. It is Monday, July the 20th, 9:36. So far, we've got a nice bid in semiconductors. AMD looks like it wants to bounce. Intel's on the move. Intel's got a lot of ground to make up. Intel. Coinbase. Michael Burry covered his short on Oracle. Thank you, David. Oh, boy.
IRC may resume in less than a minute.
All right, so S&P is on the move.
NVIG halted down. NVIG, CIFC may resume in less than a minute. IRC may rise in 10 seconds.
All right, I'm out of the put flies for now. Hedge flow, hedges. Okay, with all this positive gamma, we're more than likely going to see markets continue higher for now. Okay. A lot of purple above and below. We got a little red towards the end of the day. Let's see what end of the week looks like. End of the week. All right, we're currently trading. S&P is currently trading 75.10, 75.07, 75.08. Okay, so we're in this purple area. We need to see more fill in. You can see today right here, purple above and below. We want more purple to fill in below. That'll be more supportive. You can see resistance overhead above 7,600. Don't think we're making it past there this week. This is a look ahead to Friday. All right, here's today again. Okay, S&P is starting to fade a bit.
More recently, over the last couple of weeks, we did upgrade financial, we upgraded healthcare. This is the data point out the market has shown boring. People are the stocks are uptrending. That's a healthy sign. Money isn't leaving the market; it's just rotating. And then even though we've seen some
Okay, so we did have some rotation in the markets. Let's take a look at that real quick. See how the markets are doing. So far this morning, a lot of tech, Caterpillar with a bounce, Caterpillar with a 3-candle reversal, big bullish candle on Friday. Goldman Sachs, banks bouncing, Amazon bouncing. Okay, so we got a little mix. Insurance continues to show strength. What is SoFi doing? SoFi was down on Friday. All right, it's catching a bid back above the 50-day. SoFi, Home Depot. All right, that still looks a little weak. Home Depot, AMD. All right, back above the 50-day. This is critical for these semiconductors. Need to get back above the 50-day. Here's NVIDIA. Intel looking pretty good. Intel, nice reversal, but it's got a lot of resistance overhead as it climbs into earnings. Okay, what's Bitcoin doing? I saw Mondo mentioning Bitcoin over the weekend. All right, it's trending, coming out. Big base, a big base on crypto. Okay, so this basically looks like so. It's in this box. If it breaks to the upside, then we'll know. If it pulls back down into the base, we'll have to wait. So for now, the 67, 66, 67,000 level is where we need to make it back above. All right, so Bitcoin looks okay. Coinbase, all right, just consolidating, not much to do there. So look aside, look at semis. Semis are bid right now. Okay, let me take a look. We've got 226 stocks advancing, basically half, 50-50 right now. The Qs got beat up more. The Qs look a little better. 63 stocks advancing out of 100. Core 1M, 5.29, still pretty low. Got to get back above 8. Maybe this next couple of weeks we can get that correlation to correct itself. S&P is still bid. Big gap above the 50-day. I took my protective hedges off for now. Protective hedges off for now, looking for the markets to climb. If it can perform today and we add more positive gamma, that would be good. I still have the VIX calls. I bought those at the lows, so I'm not really that concerned about that. It's the put flies that'll evaporate if we continue to move higher. So I took those off. NIMO is flat at -4. It hasn't really gone anywhere for several weeks. Part of the reason why the S&P hasn't moved much The momentum is clearly flat on the S&P. Okay, range bound sideways. We really haven't gone anywhere between 7,600 and 7,200 over the last several weeks. Let's see what the weekly looks like. Weekly. Yeah, look at that. I mean, that's pretty flat. We're right in the dead center of last week. We got to stay above the 50-day. I'm not going to jump into the markets aggressively right now. I want to see if they can hold this bid and push higher. Then I'll start to concentrate on tech because tech seems to be bid. Let's go take a look at the watch list and see who is the top dog for now. Let's sort these by performance. Okay, so Apple's number one. It is consolidating. I'd be interested in getting back into some Apple. What's up down volume look like? Up down volume. I'd like to see 2 to 1, 3 to 1 up volume. Probably in the NASDAQ. Let's see. Survey says tech. Okay, so 2 to 1 up volume, 1.7 on the Qs. Up volume is running, but it's not plus 2 to 1. IWM is 2 to 1. Let's see what IWM looks like. Okay, that's flat. The 10-year yield, necessary to check what's going on here. The 10-year bouncing again, so that's not good for IWM. Junk bonds, we'd like to see this higher. For now, it is inside days, so all of this taken together is telling me to just wait for some more trends to continue to develop. SMH, semiconductors, bouncing. Okay, so it needs a hold up here. We don't need to see a fade. Okay, let's see, AMD. Okay, we got some selling already. SPY at the highs. So far, we're not following through. Profit taking quickly. It's not even 1046. I mean, it's not even 946, 947 now. Okay, let's see if the chips can hold it. Teradyne, LITE, CoreWeave. Okay, let's look at CoreWeave. I haven't talked about CoreWeave in a long time. CoreWeave bouncing. All right, so the triple bottom, CoreWeave. Michael Burry covering his short on Oracle. Not that it matters. Oracle's still looking pretty ugly for now. Intel with earnings this week. Intel with earnings. Okay, you can see where resistance is right overhead. 75.25. We're just off the highs of the day right now. Let's see if this is just some people taking profits. We got some big offers on SPY up at 754. Where'd they go? 769, 760, 748, 748. SPY. Let me look at 748. SPY. All right, 748. There's like a few shorts up there. Looks like 748. So that's the high for now. Okay, Cerebrus, CBRS. Still sitting around down here. Not much to look at. Cerebrus. Need to get back above 200 for starters. Cerebrus, not much going on there. Okay, Google. Google, nice ripper. High of the day for now. 358 and change. Okay, after last week's close below the 50-day, I'm very, very attentive to that 50-day. We want to pay attention to that 50-day. We have to stay above it. S&P 500. Okay. That'll show us persistence after we try to get above it and stay above it on Friday. New York Fang, let's take a look at that. That'll give us an idea of what we can anticipate. Many of them are up this morning. New York Fang index, all right, inside day for now, holding right near the 50-day. Okay, so if we can put in a higher low and a higher high this week, that'll be good. Looks like it so far. Looks like semis want to keep going. Texas Instruments bouncing. Astera Labs, ALAB. S&P 500. Okay, Teradyne, LITE, COHR, Intel. It's up almost 6%. That's a lot for Intel. Remember the days when Intel was down there near the 30s, 40s. Okay. RSI is starting to turn up, so maybe this has a bid and will continue. MACD stochastics rising. I already have a position, so I'm not going to add to it right now. Okay, so Google does look good. Google does look good. We hit the high of the day now. 9 minutes to go for the opening range. New York Fangs look okay if we can hang in here. S&P is fading. S&P is fading. Okay, that's 748. There was couple of big orders there at 748 at the offer. Let's see if they come back again. Wow, what a fade. Shit, I should have held on to those freaking SPY put flies. Damn it. All right, I still have my VIX hedge. Let's see what VIX is doing. VIX climbing. VIX climbing, SPY dropping. SPY's still fading. VIX is climbing. All right, so the way they're playing it right now, they're making people question this pop. All of a sudden went from looking very positive to, a decent fade there. Okay, right back down to the gap. All right, so 12 points off the high, just like that. Okay. VIX, nice little spike. Should have held on to those spy put flies. The only problem I have is that the heat map looks really green right now, so I don't want to get too bearish at the moment. Okay, so there's a lot of green on the screen. If this was more red, especially in the tech group in here, I'd be a lot more concerned. Things that we were looking at for follow through this week: energy, real estate, those have a bid there too. Okay, industrials, that's 50-50. Consumer staples, Walmart down 0.5%. Costco up a little bit. Yeah, tech looks like it could continue. We need a bounce, though. We need a bounce. If we just fade all day, that won't be a good start to the week. Have to put hedges back on. SPY still fading. Future's still fading. We got two bearish 60-minute candles so far this morning on the futures. Two 60-minute bearish candles. Okay, S&P fading the entire gap. This looks like it wants to keep going. Let's see. I'll give it a few more minutes. We're just fading now, so it's too late to try to take a short. Into the gap. That was quick. That was really quick. Okay. SK Hynix. That's off the highs of the day, but that's a nice little bounce so far. SK Hynix. SK Hynix. All right, the chips continue. That should work. Don't want it to turn into another SpaceX. Okay, so SK Hynix is right here in this situation right here. Does it continue? SK Hynix. Chips so far look okay. 60-minute. This reminds me of Cerebras as well. Remember Cerebras we were looking for? We're so eager for this to get back above the 20 MA. It did a couple of times and it rolled over. CBRS. Okay. Double bottom now. We could see something here on Cerebras. NVIDIA back above, trying to stay back above the 20 MA, get that to turn up. AMD. Okay, all of these are jumping, but they got to keep going. SNDK. Futures still fading. Futures are still fading. Below that 20 EMA on the 60-minute. Not good for now. Hedge flows. Okay, you can see all this negative gamma over here. We're slipped right down through it, coming back to support at 74.70. That's also a flip point right around there, where things could get ugly. We do have some purple down below, so selling some puts. Watching the hedge flows. This is S&P 500. Let's see what equities now. IWM. All of these fading. Okay. Qs. Not a good start. Fading right out of the gate. That congressperson who was long crude oil, triple long crude oil. Let me see, crude long. Keep an eye on VIX. Keep an eye on VIX. Slow start to the morning. Nice real rise and then a fade. Let's see if they run this back up. Up down volumes 1-to-1. Still green for now. Okay, SPY just went negative. The Q's leading 1.5. Okay, another bearish bar here on the S&P. VIX still pushing. VIX. I kicked myself for selling those put flies. Wasn't even 10 o'clock, Vinny. Shaking my head. Okay, SPY. I had these put flies right here. All right, make me right for taking them off. I could have taken them off at a better price, obviously. I got out right around 18 cents. What are they going for right now? Let's see. Monitor. Put flies. It's not that much. All right, so I didn't give up much. It's only about 5 cents really. The offer keeps jumping as we start to turn back up. So I got out right around 18 cents. It's it's offered right now at 20 cents, 22 cents, 24 cents. So we're starting to bounce now. All right, I don't feel so bad now. VIX, what's VIX doing? VIX retreating, probably. All right, VIX retreating. All right. S&P starting to turn back up. S&P. Okay, I'm not going to bite. I would normally want to take a long, but I'm just going to sit here. We get the supports down a little bit lower. So I'll wait a bit. If we get past 10 o'clock, all right, we are past 10 o'clock. 10 o'clock snuck up on me there. Let's see. Number one stocks, top 10 on the NASDAQ. 100. Okay, so we've got an opening range breakout so far on LITE. Let me just pull up level 2 on that one. LITE. Okay. Okay, chart looks really good. LITE, Teradyne, CoreWeave, a multiple bottom on CoreWeave. Opening range high is overhead. Intel had a pretty decent morning, and then we just dipped there. Micron. Okay, SK Hynix is one that I'd like to trade. That's turning back up. SK Hynix. Okay. Intel. Okay, let me take a look at Intel again. Intel. Just flat at VWAP. All right, I'm at a profit right now. What do I have? Okay, so maybe I'll do something protective. Keep some Intel. I have January calls for Intel. The 100 strike. I might do something protective on that. I might also do like an iron condor or something on Intel. Intel's got a pretty inflated implied volatility. Let's see. All right, hedge flows have yet to turn markedly higher. We're just kind of sitting here. Okay, Intel. What do you say? Okay, Intel. All right, we're starting to slide again. SPY's starting to slide again. All right, so a little short covering right there. All right, we're starting to slide some more. All right, so good thing we didn't bite there, right? Okay. Tick cumulative is trying to stay green. Try to turn up. The selling's not intense at this point. It's tick is only minus 300. It's not like minus 800 or minus 1,000. It's minus 300. So it's relatively tame. That's a 5-minute. Let me take a look at the 60-minute. Trying to get a read on what we might anticipate for the day. We need to stay above the 50-day, obviously. Okay, so right now, could be a doji day where people just get chopped up. Right now, if you didn't catch the short from the high, I did see those 748s on SPY. There was a bunch of offers came in, 4,000 lots, like 4 or 5 of them, right at 748 as we started to roll over on the SPY. Those 748s came in right there, and I just sold that. Do we bounce? I don't see anything on the bid right now. Oh, that's LITE. Let me go to SPY. So far, it looks like a doji day. We are fading. Probably going to fade this gap all the way. I believe, Russell, you're short, right? Okay, NVDX, NVDX. Okay, 1785. Okay, we're trying to bounce here. Okay, we got more rotation. Is that what's going on? It's hard to see here. SPY, we just continue to fade. It was too quick. I didn't catch this short here. I sold my hedges. I had some SPY put flies. Didn't give up too much because they were out in September. Why September, you might ask? Because August tends to be one of the weaker times of the year. They were pretty cheap. I'll probably be able to get back into them very similar price. They didn't jump that much, only about 5 cents at this point, 6 cents. SPY, this is what I had here. SPY right here. Okay, these put flies, this is what I had. So if we drop below the 50-day, I'll have to start putting some hedges back on because this feels like a trap. Feels like a trap. Okay, again, a second time above the 50-day. They jumped it back above the 50-day this morning, only to sell it. Okay, so with that in mind, let's go see the watch list because there was a lot of defensive positioning that I was looking at on the watch list. 19 summary. Okay, Dell. What's Dell doing? All right, Dell's weak. ORKA. That's pharmaceuticals. Okay, that continues. Trying to press that upper Bollinger Band. This breaks out above 98. That'll most likely go. There's a lot of biotech related and pharmaceutical, medical, therapeutics companies that looked really good. Biotechnology, FBRX. A lot of strength last week. Dave is down. Let's see. Materials bouncing. CRS. Cheesecake Factory, the restaurants, those were catching a bid. Restaurants. Cheesecake. There was the other one, BJRI. Let's see, BJRI. Okay, those are up. Okay, Apple's off. Apple, a lot of upgrades last week. We had a lot of chatter about China. Probably coming back to the 21 days, so you could probably afford to wait a couple of days on Apple for now. Okay, so what I was looking at was potentially selling some premium on some of these more bullish trades, sell put premium. All right, let's see, BJRI. S dot, restaurants and bars. Okay, that one gapped up. S dot, when did I say? All right, RXO. What's RXO doing? RXO. Okay, so the SPY trying to bounce again. I would assume that they're going to be more bear flags. All right, so I wouldn't bite as far as going long until we see a nice trend. These moving averages need to flip and start trending. For now, we just continue to fade. VWAP is overhead. Okay, Microsoft trying to do something here. Microsoft opening range high overhead. Okay. Let's see, what's junk bonds doing? Junk bonds, those were moving a bit higher early. Okay, flat doji for now. The 10-year yield was higher, more than likely reflecting the military excursions in the Iran area. TNX bid up a bit. What's gold and silver looking like? Those were building bases. Still down there. Nothing to do here. So healthcare. Okay, biotechs. Real estate, XLRE, that was looking good last week. It's kind of flat right now. Energy, XLE. Okay, that has a bid. So energy is probably the place to be looking at the moment. Energy, technology is up more than 0.5%. So if we can get a bounce in, all right, Apple's starting to bounce, a little short covering. If you're confused right now, no doubt. Okay, watching Microsoft for an opening range breakout. I need to see the volume. SPY. Expect more bear flags. SPY. Don't go long yet. Don't go long yet. Okay, everything I'm looking at is below its opening range high. So that's saying expect more of the same. Oracle making a new low. Michael Burry closing his short on Oracle, but it's at 120. Wow, I can't believe how much of a dog Oracle's been. Broadcom off the highs. Everything I'm looking at is off the high of the day for the most part. Microsoft's trying to push a bit higher. See, ARM Holdings is off the highs. Microsoft has got an opening range breakout right now. Watch Microsoft might do something here. Okay, SPY, no follow through yet. More bear flags, more bear flags. All right, so let's go look at something a little bit more appealing to the eyes. Microsoft showing relative strength. The markets are moving lower, Microsoft's moving higher. So let me just check out Microsoft and see what the bid is looking like here. What are they doing underneath the surface? Microsoft. All right, so the bid isn't really that bullish, really. This could fade. I already have a position in Microsoft. I'd like to see this above the 50-day like we were last week on Thursday. A lot of moves above the 50-day got sold, both on the indices and individual stocks. Let's see, SK Hynix, what's it doing right now? SK. Okay, SK Hynix, trying to bounce. Nothing yet. SK Hynix, Microsoft. Okay, so Microsoft has to last a little bit longer. An initial pop there, maybe a liquidity grab. They might be trying to sell, knowing that we're not going to get back above the 50-day. If we get back above the 50-day, then that changes the complexion of what Microsoft might have to offer. Right now, we're just spinning top. We had a doji on Friday, a long-legged doji on Thursday. Got rejected at the 50-day, closed below it. Couldn't get back above it on Friday. So it would be important if we got it back above the 50-day and start trending. That would indicate they're lifting their offers. S&P is still moving lower. I don't like the markets right now. Just a fade right out of the gate. Didn't get that short from the high. All right, we're right on the 50-day. Right on the 50-day. Okay, Spy, what are we going to do?
The morning after, I am both a little sad that it's over, given it's been the centerpiece of discussion around the world, but incredibly proud of.
Yeah, the game yesterday was pretty boring, I thought. One score in 100, what was it, 110 minutes? One score. A lot of shots on goal. Spain definitely deserved to win that one. Anyway, just watching Microsoft for a bounce here or not. All right, S&P continues to fade. We're going to fade this entire move. Wow. Wow, wow, wow. We're below the 50-day now. All right, we're below the 50-day. Hedge flows. All right, so there was a support level right there, positive gamma. Okay, they just took that off. That was 99. It's 90% now. Okay, we got a 98.85 percentile at 74.30. Another 98 at 74.40. Okay, energy did take over the number one spot now. Okay, energy. Tech dropping down. Energy looks good. Okay, so let's look at some energy stocks. CVX. Okay, CVX on the move. Energy's on the move. CVX. Let's look at XES. That is the oil and equipment services. Not so much energy though. Okay, Apache, APA, ConocoPhillips, the big ones, the big players. All right, what about the refiners? PSX, Phillips 66, PSX, PSX. What about ExxonMobil? You know ExxonMobil's got to be moving too. ExxonMobil. Okay, Microsoft, like I was saying, don't bite on Microsoft. It needs to continue. This feels like they were enticing bulls to chase this, sell into that strength. Microsoft, the offers aren't that big. All right, so that's selling the crap out of it. S&P continues this fade. Okay, like I was saying before, opening range high is up there. We just keep fading. Bear flags assume the same. These moving averages need to flip up and to the right in order to start thinking we got a bounce. We don't have a bounce yet. Continue to fade. Hedge flows. Okay, you see where the support is. A lot of times I'll talk about in the weekend video. Let's wait for Monday morning and see what if we can determine a trend. Right now the trend is down. Quick fade from the high. 50 days in question. A lot of psychological levels around the 50-day. Semis very quickly this morning looked like it was going to catch a reprieve. Okay, we've already settled into a doji. Up down volume is not telling us much. It's 1 to 1. SPY 1-to-1, NASDAQ Composite 1-to-1, New York Stock Exchange 1.3. The Qs are a little bit more bid. The Qs are a little bit more bid, even though energy is catching the trend right now. XLE looks good. I don't have any energy stocks that I'm aware of. Let me see. Let me just check here. What's on Home Depot doing? Home Depot fading some more? Yep. Home Depot. I have to cut that loose. Still have a profit there. Half a position. Home Depot. Let me just check this out. Home Depot. How big is my half a position? Okay. I hate to sell it right here at the low. HD. Microsoft. Okay, Microsoft is hanging in there. I don't know, let's keep an eye. Okay, so S&P. Now watch those moving averages. All right, so this is a 2-minute chart. 1-minute chart works as well. Okay, watch those moving averages. They need to cross over and start trending. Okay, that's the first crossover, right? That's the first crossover. And what's Apple doing? AMD is turning back up. Moving averages are crossing back up. Apple. Apple's still trending lower. Microsoft looking a little better. Okay, SPY is starting to turn, but assume a bear flag. Okay, this needs to start trending. Get our first higher high, and then a higher low, and then another higher high. That should do it. Okay, so bear flag for now. Got to make a higher high. Moving averages. Let's go to the 2-minute. 5-minute. I assume this is just shorts covering for now. Let's go see. Okay, NVIDIA. Broadcom. It's almost 10:30. Still waiting for a trend. The trend is down for now. Is that what we're going to have for the day, or are we going to reverse this? We got people to chase on the upside this morning. Then they sold that. Some very large offers came in, about 5 or 6, 4,000 lots came in. Actually, that was 40,000 lots. Sorry. And then we sold that. The gap. All right. So if we defend the 50-day, that's going to be good. I'd really like to take a couple of swings on tech because tech has been down for the last couple of weeks, right? Micron's been down for 3 weeks, 4 weeks. So I'd like to get these back up. SK Hynix. I'd like to do something here. SK Hynix. That needs to, all these moving averages need to turn back up. MACD's already starting to turn. RSI is rising. This might be a trade here. Watch SK Hynix. Okay, if we can get the indices to do more than just print bear flags at this point. SKHY. I said I didn't have any energy, right? Let me see. Energy. No. Amazon. Apple's still kind of ugly. Apple, I said before, Microsoft, we needed to see that follow through. Now it's following through. Okay, Microsoft, note the moving averages are rising. Volume's picking up. We still don't have a spike in volume. Let's see. There we go. There's your orbs right there on the 1-minute chart. are going to start trending. Immediately overhead, we've got resistance levels. Okay, the 50-day previous price action. So if we clear these levels, you can see how this would make it a lot easier heading towards the 200-day. So if we clear Thursday and Friday's price action, that we might get something going on Microsoft. The S&P is starting to look better, folks. All right, S&P is starting to trend. And okay, we just made a higher high off of this, so negating this potential bear flag. If you just took puts, looks like we're going to reverse this now. Okay, SPY just made a higher high on the 1 minute. SPY. Okay. S&P. Let's see if we can follow. We got to follow through. Okay. Still early. Okay, AMC. Okay, let's look at AMC. Okay. 227, 227, 238, 238. Okay, S&P looking a lot better. Okay, starting to climb. Okay, we got another level now. Next higher high that we need to take out right there. That wick, okay. Volume picking up. All right, New York things are mixed. I generally don't like to commit too early on a Monday. Microsoft SPY. Let's see, Microsoft looking better. Okay, watch that volume. Microsoft looks good. Microsoft. Microsoft looks good. Okay, if it breaks out above this level, we're good. Watch SPY. SPY starting to turn again. Okay, so we need to make it above that high and VWAP. For now, this could go either way. This could go either way. Microsoft, keep an eye on Microsoft. Yeah, what's up?
Do you have $20?
What do you need it for?
Shower gel?
Huh?
Shower gel?
Antoine just bought it yesterday. Are you going for him or you?
For me.
Okay.
He bought shower gel for himself?
I bought it for him. We went to the store after he got off work yesterday. I reminded him that he had yours. So he said, yeah, he'll buy some. All right, we're starting to fade already. All right, so SPY. Yeah, Microsoft looking pretty good. Microsoft, despite the little fade there, Microsoft is about to break out. Okay, let's do it, Microsoft. I got a position in Microsoft. I'd like to take some risk off. Last week, the last couple of weeks, we've been taking risk off the table as Core 1M stayed so low, if you will. We were concerned that we would continue to move lower. So I took profits off where I had profits. Okay, so Microsoft moving a bit higher. Snowflake, Tesla. Tesla's in the doghouse right now. Tesla. Microsoft trying to take the high. Friday's high, just a little bit more to go here. Friday's high. Let me just delineate where Friday's high is. Friday's high. Let me just do that real quick. Oh, that's Friday's high. Okay, so let me extend this. Friday's high. Okay, that's Friday's high. Friday. Opening range. High of the day. Okay, there you go. So if we can get up there, that would be excellent. It looks like we're going to go. Looks like Microsoft wants to go. Microsoft, good trade so far. If you took it, Microsoft showing relative strength. Microsoft showing relative strength. All right, let me just check it again. How much do I have and do I want to add to it? I got September and August calls, so this is good. September, I got the September 400, August 400s. I also got September 410, 415s. So this is good. This is good. I took the 410s thinking we were going to get above the 50 day last week on Friday or on Thursday and pop above it on Friday. Instead, we got rejected, as you can see over here. So I have these 410s right here, but I also have 400s for August. And I got some other calls that are completely dead unless this like shoots up to the upside, which it won't do. So the August 400s look good. I got September 410, 415s. Microsoft looks good. Okay, Microsoft. Microsoft. Looking good. Looking good. By the way, if you are not getting the emails on the weekend, please DM me. Give me your email address. I'll double check what the problem is. A couple of people said that they weren't getting the emails. Those generally go out around 12 midnight on Sunday into Monday. I usually finish up the watch list around that time, 11:30 or so on Sunday night. So if you're not getting the emails, especially a new member. Okay, Microsoft. I don't want to get too excited about Microsoft.
How long is all of this whole, sort of how dire is the stockpile issue right now? How low are they in the U.S.? And then what does that range look like? What does quickly mean?
Apple's starting to turn. Okay, New York banks are looking a little bit better. We got shorts covering. It looks like bear flags on Tesla. Microsoft looking the best though. Microsoft and Amazon. Microsoft and Amazon holding hands now. Looks good. Where is my? Got too many open windows here. Okay, close that.
Something else I wanted to ask you about is you produce these new interceptors that you're talking about. You're producing them with European partners, not just with the U.S. Is that about sort of that speed to market? Is it about politics in a certain way, or are there other sort of motivations?
You may rest in 10 seconds.
Yeah, so there's a number of factors that are really critical. First of all, we recognize we need to build in countries all throughout Europe. We need to build in the Middle East. We need to provide that capability close by, provide them sovereign capability. We know that.
Okay, we got to get Microsoft push a little bit more. All right, Amazon's starting to look good now. Watch Amazon too. Amazon showing some relative strength for the most part. I mean, it did dip a little bit with the S&P, but now it's starting to accelerate. Amazon accelerating.
We have the opportunity to not just increase the numbers within the United States in terms of production, but also supplement those with significant production overseas. So it really is a
Okay, watch Amazon.
what's I think so attractive about this is, for example, in Europe.
Okay, let's look at hedge flows turning up a bit. Got a lot of negative gamma here. What that means is if prices start to move up into this, we could see this accelerate. The support is kind of gone. Let's go to 0 day. Let's see what this looks like. Why am I so zoomed in? Oh, that's right. I zoomed in before. All right, let's look at net open interest. Net open interest. You could see GEX, you didn't see it. With GEX, you didn't really see it. Okay, with net open interest, you can see where the support was right there. Resistance at 7,500. Okay, Nike looked like it was going to do something last week. It's off at the moment. Okay, is that a trend for retail? What's retail doing? Okay, retail, consumer staples. Teradyne's up 6%. Western Digital. Okay, so you can see tech. Tech is everything right now. Tech is holding its own for now. Everything is tech except for Domino's Pizza. Okay, so Teradyne looks good. Teradyne. Amazon getting rejected at the high of the day. Teradyne. Microsoft. Less is more. Less is more for now. As far as starting the new week with a bunch of new trades and not doing it. Okay, Microsoft. Okay, so far this looks like the high of the day. Pharmaceuticals are very strong, I agree. Yeah, pharma looks pretty good. Let's look at J&J. That was pretty strong last week. Okay, so that's holding. ABBV, Abbott Labs, Abbott Labs looks good. ABT. Let's see. On the watch list, there were several pharmaceuticals. Let's go take a look at those real quick. Markets chopping people up at the moment. Apple is starting to turn. Apple turning. Shorts covering. I mean, we're at a 1043. A lot of plays have already played out. Short-term plays like Microsoft. This has already, made good money off the low. Okay, Apple turning up, Apple turning off the low. Note the moving averages. This is what you want to see on the SPY, okay? Okay, you want to see the SPY start trending, not roll over like that, okay? So Cayman took a short there as we hit that high. Nice one, Cayman. Okay, so we were looking at the watch list because there's several pharmaceutical plays on here. Pharmaceuticals, ORKA. I think this was with cancer, ORKA. ORKA. Biotech. All these are off. Okay. Exelis. That looks pretty good. Exelis is rising. Biotech. What's XBI look like? XBI. I wanted to sell some put credits. Maybe it pulls back a little more. If this pulls back towards the 50-day, I might sell some put credits on XBI. IBB, those were pretty strong coming into last week, and then we faded. So I'm watching if it bounces at all. SPY. Apple. Microsoft. You can see the difference in Microsoft. Nice trend. Apple. I don't know. I think this is probably going to roll over. This is probably going to be another bear flag. We're below VWAP. Okay, DoorDash is trying to move back above its opening range high. DoorDash. Bouncing. 200-day overhead. Okay, what's Broadcom? We said once it gets back above the 50-day, we'd be interested. Still not. We sold it right there on that last touch of the 50-day. And we're looking for it to get back above the 50-day to do anything. So we sold that into strength. That's still working there. Okay, Broadcom. All right, what's SK Hynix do? SK Hynix. Okay, looking a little better. Those moving averages need to turn up. SK Hynix. AMD. Okay, so all of these are kind of sitting here in a doji spending top, trying to figure out what to do next. NVIDIA. Same thing, spending top. Okay. Nobody's winning this. You're just getting chopped up if you're trying to trend trade this for now. Probably going to move back up into VWAP, maybe stall. We'll see. Microsoft, S&P. Okay, S&P, a fairly large spending top for now. We got to stay above the 50-day. If we lose the 50-day, even though I already took the put flies off, I'll probably take some again. You can see the ones I took off this morning. At the high of the day, it just kept moving. DoorDash is okay. DoorDash is trying to do something now. DoorDash. What's Best Buy doing? Best Buy. Okay, that's off today. All right, so I had a nice run up in the previous week. Palo Alto Network at the highs. CrowdStrike, security stocks. Those are okay. Adobe. Micron. Let's see, Micron. Notice they're all off the high of the day. AMD. Okay, at BWAP. This is not a strong market right now. Not a strong market. Everything got sold. if there's a good thing, the silver lining is that it's the selling is in the morning. So the morning sessions tends to be more amateurish. There are professional traders that do a lot of trading here too, but evening session, that's when the institutions usually will come in and start buying, adding to positions or whatever. Google, fading back to VWAP, high of the day, right there. Opening range high. Google, nice little reversal. I guess you could call this a Morningstar doji pattern. You get a big bearish day, a doji, and then price action rises on the third candle. Think rising sun. Morningstar doji. DoorDash looks like it wants to keep going. Uber's been just sitting here forever. This is one the Pelosi's have. Just to show you that the Pelosi's, they're not always right. Okay, they have the 55 strike, I believe, in the money calls, I think, for March of next year. I think that's what it was. Uber. So it needs to break out of this range, Uber. Pretty obvious, right? Uber needs to break out above this level right through here. Get above the 200-day. So Pelosi's aren't always right. And they're right a good bit of the time. They're probably like a 80%, 80% or better. Microsoft's still stalling here, Microsoft. The energy feels like it's been taken out of the markets. I don't feel any energy right now. I'm looking at level 2 on most of these, and the speed is slowed down dramatically. Okay, Microsoft. SK Hynix, SKHY. Okay, let's see if we get a bid off of here. All right, Cerebras, CBRS. Got a lot of work to do here. Cerebras. If you got a long-term thesis on this one, it's going to take a while. I mean, I got so much work to do here. 250, 200. SpaceX, same thing. SpaceX just keeps descending. S&P, not much to do. Apple just look like shorts covered, and we roll right back over Apple. Okay, so you've had a nice run up in Apple for the last 2-3 weeks. This is your first bearish day, so wait for it. This is the breakout level down below. Maybe a pullback to breakout. There was a number of stocks that looked really good. Let me go back to the watch list again. Let's see who's doing what. S dot, this is a restaurant and bar group. Big gap up. S dot. Okay, S dot, restaurant and bars. Let's see, Cheesecake Factory. Doji for now. BJRI, the restaurant group. They own lots of restaurants. Microsoft looks good. Apple, not so much. All right, looks like we're going to make a new low here, S&P. S&P, looks like we'll go for a new low. Apple's moving lower, so that's probably going to take everything else with it. Okay, we just made a new low. Okay, Apple making a new low. Below the 50-day. This is SPY making a new low. Apple trying to hold. I don't like the market right now. Not only is it very slow, but we're fading. Okay, Microsoft trying to do something here. Microsoft going again. Okay, that's good. Microsoft, let me just see. I have those 400s. Now, the last few weeks, I've been taking profits off into strength, reducing my exposure. This is another good example. I have until August with the 400s. I got September 410. What was it? 410, 415s? 410, 415s for September. We could get there if we can get above the 50-day, but the 400s were right. That's the 50-day, and we've already hit the 50-day once and got rejected. So we get to the 50-day. I'm going to let these go a little bit more. I'm going to take the 400s off for a profit and reduce my exposure. I have other positions in Microsoft, so that's fine. Meta, what are you doing, Meta? Meta, August. Okay, Meta's turning back up. Don't forget, Meta is they're monetizing their build, so they spend a shitload of money. Excuse my French, but they spend a lot of money building out the Prometheus. I think was something like 600,000 of the Hyperion, whatever the most expensive processors at the time when they were building this last year, when they started building over the last 2 years, I guess, right? It's been that long. They're starting to lease out. They're starting to lease out and sign contracts to lease out space on these monsters that they're building. Okay. So let's see. Let's see what else they say about Meta. Um, okay. Anthropic, that's who it was. All right. So leasing AI, they're discussed. They haven't signed contracts. Okay. So that's a kicker. So the stock is higher because of the discussions about leasing out space to Anthropic. So if we can get, we can hold on to this 200-day. That's a good milestone. All right. So Apple still pushing a bit lower. Microsoft still going. So we got a couple of that are working out okay. Apple and Tesla continue to move lower. Nvidia as well. No follow through in Nvidia. S&P still drifting lower. S&P. Okay, we just made a new low. S&P. I kicked myself for selling those put flies. Oh, yeah. Microsoft. Microsoft. Let's see. I've got earnings. Microsoft earnings on Wednesday, the 29th.
Low tick alert minus 800.
That's our first low tick of the day. Okay, so Meta, Microsoft. Okay. Microsoft looking for this to follow through. Considering the move lower, I'd expect to see the New York Fangs a lot worse looking, holding up respectively. They're holding up. Banks, personal products, Elf Beauty. Elf Beauty still consolidating a 3-week tight pattern. Okay, so with a 3-week tight pattern, you're looking for a run up into prices, resistance, consolidation, and then a continuation. Elf Beauty is probably a day or two, if not this week, ready to break above the 200-day. So watch Elf Beauty. That might be a play if you're a swing trader. The other stock to watch in the group, obviously Ulta. That's just breaking a downtrend. Ulta and Elf. Okay, Ulta, Elf, leading. 3 weeks tight pattern with Ulta changing trends. Okay, Microsoft opening range breakout looks good. Microsoft looking really strong. Very nice. Microsoft about to break out again. Here goes Microsoft. Okay. Mhm. Mhm. Microsoft trying to push a little bit more. Not in a hurry this morning. Okay, Microsoft going. Looks good. S&P turning back up. Apple took out some stops and now is starting to turn a little bit more. Apple's borderline, but it needs to consolidate the recent gains. 4 weeks up. Apple, it's due for a day off or two. Where? There you are. Okay. What is okay? That looks good. The Qs. Trying to turn the corner. Okay, up down volume. Okay, let's see. Microsoft. Okay, Amazon also got there. Amazon back to the opening range high. Very few stocks have made it back to the opening range high. Microsoft's above it, but quite a few stocks have failed to get back up there. DoorDash made it back above its opening range high for now. Just don't feel, you can see the momentum. The volume is hardly any volume there. Axon, that was on a run until last week, profit taking. SPY, just don't feel any energy in the markets. Okay. VWAP overhead. Okay, what are we doing? Microsoft's still going here. Microsoft. Mm-hmm. SPY. Okay, trying to turn back up. Got to watch those moving averages. They still have yet to turn forcefully and start trending. We had a little brief turn up. That turned into a bear flag. All right, nice bounce in SPY. Shorts covering. Microsoft still at the highs. Apple slowly turning the corner, maybe. Double bottom. Hedge flows turning back up. All right, Apple turning back down again. Apple turning back down. Assuming another bear flag that this is going to roll over one more time. DoorDash looking okay. DoorDash taking off now. Starting to see a little bit more volume, but not a lot. People are not that active today. LITE, no. Teradyne. Imagine a lot of people maybe headed back to their home countries, those that came to the U.S. to watch the games here in the States. Teradyne, Marvell. These are the top 10 on the NASDAQ 100. NASDAQ 100, S&DK. You can see these, all of these are below their opening range high. There's not a lot of energy in the markets. People were fine with fading the high of the day. That will gap up. People doing what I've been doing and recommending, which is to reduce your exposure as the S&P continues to flirt with this 50-day moving average. Keeps flirting with this 50-day, and we haven't gone anywhere. So it's not only is it frustrating, financially depleting, sitting and hoping for a position to continue to work, and just watching, if you're trading options, watching theta kick in. That's why I like having further out in time, September, October, some out in January. Okay, let's look at seasonality still with us. More favorable for July. The industrials have lost a 21-day, only 30 stocks. The New York Stock Exchange, when in doubt, you always want to check the New York Stock Exchange. That's testing the 21-day. 3,300 stocks every so often, 33 to 3,500 at the last count. The comp, NASDAQ Composite is what I'm thinking. COMPQ, comp. I misspoke. The comp is what I'm thinking. 3,300 stocks. The New York Stock Exchange Composite, 2,400. And we're testing the 21-day. I'm hoping that we get back up to the highs. Stay above the 50-day for at least a few days. Looks terrible. Flat. There's no trend here. Microsoft looking a little better. Okay, if Microsoft can lift a little bit more, get through 400, this might start trending. IGV, good to watch that too, the software group. ETF. What's Snowflake doing? Snowflake, ServiceNow, Palantir. Okay. SpaceX trying to do a little bit, still in this downtrend. Looks like shorts covering right here. I'm not going to play with this one until it starts trending again. Broadcom, DoorDash continues. DoorDash continuing. The volume's not there though. DoorDash. It's above its opening range high. Very few stocks are above their opening range highs. Microsoft, DoorDash is 2. Okay, Amazon's trying to go now. Amazon's trying to take out its opening range high, that orange line there. Meta's starting to go now. Meta, that's trying to take out its opening range high. So we got the initial selling. It's 11:15 on the East Coast. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's Monday, July the 20th. Apple dropping off. All right, Apple was due for some consolidation. So if you're still holding on to Apple calls, probably going to see a few days weakness.
The S&P 500 has been in this kind of choppy consolidation over the course of the past 2 months. Now, kind of bigger picture, the trend is still very much intact. What I think is happening here is the market is just kind of digesting the big move that it had off of those spring lows. So a little sideways consolidation makes sense. A little back and forth, some up weeks, some down weeks. Very similar
Amazon.
pattern that we're seeing here
I got
today.
255s, Amazon 255 calls. Okay, starting to go here, Amazon.
We look at a 60-week moving average for the S&P 500 as our measure of intermediate to longer term trend, and that is still very much up and to the right. So quantitatively an uptrend. Similarly, here at Potomac, the way that we like to view the market is
SPY's trying to make higher lows.
as measured by market
Futures,
look at the NYSE
tick cumulative on the 60-minute still pointing down. If you look at tick, that's another way of judging momentum. Tick is like plus or minus 300, nothing over plus 500. We had a low tick earlier. Not a very exciting market at the moment.
All right, Kevin. So as we look at the S&P 500 and we take a closer look at the technical setup here, Dan just highlighted the choppy consolidation we've seen. But as you look at the technicals, are you still seeing an uptrend that's intact?
Yeah, absolutely, Marley. Completely agree.
Meta looks good. Meta. Meta.
Rally from early April to our peak in mid-June there, and this is exactly what you expect after big moves like that. We need time to digest them. And I also
Meta. Okay.
to Dan's assessment of the broadening out of this rally, one other area that traders might look to is the equal.
Let's see if they can fill the gap here. Meta starting to push a bit more. Meta looking better.
Up against the 20-day moving average. So while we're looking at the standard SPX here, 74.70 approximately, the 50-day moving average, you traders who are trying to fall back on your basics of technical analysis 101, higher highs or matching highs, higher lows, even though we haven't broken out.
Microsoft moving higher.
Elevated and have sustained some of these recent shocks.
Okay, Microsoft looking better. Microsoft.
Leaning at least at this point. Now, obviously that can change at a moment's notice, Marley, you know that, but that's what we're watching right now for sure.
Okay, that continues. All right, so looking pretty good. Trying to take out Friday's high. Microsoft. I got to take a couple minute break. I'll be right back.
ETF, your ticker AGG. I mean, how are you looking at investment grade bonds right now? What are you seeing there?
I think we're kind of looking at the bond market broadly, largely because the default for many strategic portfolios has been to use bonds as your equity diversifier, and that was a great default for about 22 years, from about 2000 to 2022, and then all of a sudden something shifted in 2022, and the shift was obviously inflation. And our work, and we've done a deep dive on this, when CPI is sticky above 3%, bonds no longer act as your equity diversifier. What happens there is above 3% on CPI, stocks and bonds tend to move together. So to the extent that folks are still using, bonds broadly, or, we always hear about portfolios, SPY, ag, right? To the extent that folks are still using ag as a diversifier to their equity exposure, we think that that's misguided, right? Ultimately, the bonds are not doing what you put them there to do. For a long time here at Potomac, we've argued that there's a bear market in diversification, largely because just 60-40, 70-30 worked for a long time. However, we think that to the extent that inflation is sticky, and there are some indications that it is, notwithstanding the CPI print last week that came in below expectations, to the extent that inflation is sticky, that bear market and diversification plays out in the form of portfolios not being structured properly. What we're seeing here in the ag is a sideways consolidation for multiple months. It goes back to about early 4Q of last year, and now ever so slightly beginning to lose their 40-week moving average. It's Monday. We're looking at weekly charts. 40-week moving average roughly lines up with a 200-day moving average. And if you look at that 40-week moving average, it's beginning to shift from rising to flat. So potential change of trend there. The key takeaway is if you have bonds in your portfolio because you think they're protecting your equity exposure, they might not be doing what you think they're there to do.
All right, and Kevin, as we look at this, are you also seeing the potential for a change in the trend coming our way?
Well, it's certainly possible. When we look at it on the daily chart, it's going to appear that we are much closer to that shift than it might appear otherwise. Interestingly, we're just barely above that. What I'm pegging as short-term support on the chart from a technical perspective, at least 97.70, under which we are very likely to see some macro headwinds on the broader U.S. equities. And of course, if you're bullish in the broader U.S. equities, you want to see this AGG get itself back in gear. Something above 98.5 would be a good starting spot. But yeah, this is not ideal as it relates to broad equities at this moment. And if we shift it over in a second here to look at a longer term view, as Dan was suggesting, we're basically sitting on a 200-week moving average at this level as well. And the uptrend line, as you can see drawn in here, was broken. So we've been below that now for about the last 2 months. We need to establish 97.70 as support if we're going to have any opportunity for this to not hamper U.S. equities going forward, is the way that I would look at this.
All right, so 97.70 needs to be our support right now. We're at 98.03 for ag. This last one we're looking at today, I don't think we've ever covered in the big three, Dan, so thanks for bringing us a new one here. We've got GSG. It's a broad basket of commodities futures in a publicly traded trust that gives you some exposure to the four major sectors: energy, agriculture, industrial, and precious metals, and livestock. So how are you looking at the commodity space?
Well, first off, we're looking at the commodity space as a read on inflation, right? As I alluded to in the previous chart, to the extent that inflation could be sticky above 3%, it presents correlation problems across asset classes. And again, to the extent that there's a bear market in diversification where investors are still blindly just, using bonds as a diversifier to their equities, the commodities are telling a different story. You've seen the commodities rebound here, didn't even make it down to their 200-day moving average. To us, it looks like a retest of a breakout from a 4-year consolidation for the commodity basket. To recapture.
All right. Microsoft pleasing.
So let's be clear. The sell-off was fairly.
All right, we're almost back up to Friday's high. Futures continue to rise, so that's good. A lot of the New York FANGs have turned back up. Looks like Tesla, some short covering. NVIDIA's turning back up now. NVIDIA back above VWAP. That's a good test. Not to get back above the opening range high. Amazon's at the opening range high. Microsoft, though. Microsoft looking really good here. Microsoft.
Stock, bonds, and commodities. And then, for most of our careers, it's basically been stocks and bonds where commodities have been left for dead. I think
Microsoft cruising higher. Looks like Meta might go too. Watch Meta.
Is sticky. It's an area of opportunity, or it could be.
I started my career on the commodities desk at Bloomberg, so you picked a special one for me. But I mean, as I look at the performance here for GSG, I mean, outperforming the market. We're up more than 35% year to date in the commodity space overall. Looking at this broad basket, Kevin, what are you seeing in the technicals?
Well, a big bounce here this week, as Dan was calling out that 50-day moving average important, recaptured it with the Friday close. So today could be day 2 back above the 50-day. Some traders are going to look for a little bit more confirmation than just 2 consecutive closes, maybe looking for a
okay,
third.
Amazon, can we keep going, Amazon?
Sloping nature does mean that we may have to give this a little more time
Amazon still pushing.
The daily chart looks just fine after having recaptured that 31.5 zone. The weekly
Okay,
chart
Meta looks like he wants to go. Watch Amazon. Amazon's doing well. Okay, so we got 1, 2, 3, 4, 5, 6, 7, 8 out of the 10 New York FANG components either at the highs, turning, or looking bullish. The only two that aren't really working that well are Apple and Tesla. Everything else looks good. So as you would expect, the New York FANG looks good. The index looks good. Okay, here's the New York FANG index. We're stuck between the 21-day and the 50-day. Need to pop through this and give us another higher high. That's a good way to start the week, though. Okay, so these were all pointing down, still pointing down except for RSI. RSI is trying to turn back up. Okay, for now, RSI is trying to turn up. Okay, so we'll extend this out a little bit more. Okay, New York FANG components.
Stay connected to what moves markets. Download the Schwab Network app.
Okay, the New York FANGs. Microsoft's still going here. Watch Microsoft. Microsoft is on a mission now. Okay, we got an opening range breakout late in the evening, so probably, I don't know. It's hard to read this one. Microsoft, right before 11:30. All right, so we're getting that opening range breakout. This is probably just, I would probably sell into this level. If you got a nice trade on and you've been trading it from the open, take some profits up here. Microsoft looks good. Okay, so let me see. I might take some of these 400s off here. Microsoft. That looks a lot better, right? Meta. Beta. Okay, it looks like a little. Let me see what Microsoft. Okay, what's the offer side? 10,000 shares. 8,000 shares, 4,000 shares, 4,000 shares. I'm just watching level 2 on Microsoft. Not a lot, not a heavy selling right at the moment. Okay, let me go to the 1-minute chart. 1 minute. All right, we got 2 red candles already. All right, so you know what to do there. Okay. Down. Microsoft, you're going to keep going. What a day, huh? All right, so more selling on Microsoft. People taking, okay, 3rd red candle on Microsoft. And no, they're going to go green. Okay. Probably one of the better stocks today. Can't believe I'm saying it. It's Microsoft. Nice run up. Almost a bullish engulfing candle. Very close to it. If we close above Friday's high, that would be great. Almost took out Friday's low. Microsoft. Okay, well, they're selling some more here.
Hey, Carl. At least 930 people have now died in Congo's Ebola outbreak. That's according to the country's health ministry. Officials say 37 deaths were reported in just one 24-hour period. That's among the highest daily totals since this outbreak was declared in May. More than 2,300 cases have been confirmed. Says many new cases are coming from unknown transmission chains. And Andy Burnham is now Britain's prime minister, becoming the country's 7th leader since 2016. Burnham officially took office after meeting King Charles at Buckingham Palace, then delivered his first remarks outside 10 Downing Street. He promised to decentralize power, make politics more collaborative, and put what he called life's essentials under stronger public control. And President and Vice President J.D. Vance and his wife Usha have welcomed their fourth child. The couple says that Alec Neil Vance was born Sunday at Walter Reed and that mother and baby are both healthy. President Trump posted a photo of the Vance children with the new baby on Truth Social. It's believed
Broadcom also showing some strength here. Broadcom breaking higher. Watch Broadcom.
Okay, thank you, Angelica. Angelica Peebles. When we come back, early SpaceX investor Gavin Baker will join us. We'll break down the
Broadcom now.
Moonshot AI's Kimmy model on OpenAI and Anthropic. Of course,
Okay, Microsoft. What's SK Hynix look like? SK Hynix. Okay, SK Hynix climbing. SKHY climbing. Okay, that looks good. SK Hynix is climbing. Need to get back above VWAP. Opening range high way up there at 163.50. Maybe we'll do something. We'll see. What time is it? 11:30 on the East Coast. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. Futures back up to and above the 105 on the 1-minute chart. Futures and the S&P climbing back up to VWAP. Okay, looking at hedge flows. Haven't turned and started trending. So this could trap people. So just be careful. We are turning the corner. Looks like we'll break above this level. If we break above these pivots, okay, we're starting to do that right now. That's looking better. 50-day spinning top. Critical that we hold the 50-day if you're bullish. Critical also that we get the 10-year to back off. Get the 10-year to back off. 10-year is not backing off. Okay, so that's not good for the IWM. IWM has some headwinds as long as the 10-year is moving higher. Tech also should get affected by a higher 10-year. So far, tech is looking good. That's what's moving right now. Semiconductors up. 1-minute charts showing strength. Volume isn't off the charts though. Look at Friday's volume compared to today's volume. Okay. Dead center is the open today. To the left is Friday's price action. Note the volume compared to this volume here. That's nothing. Very slow volume day. Up down volume is 1-to-1. The Qs have the best, 1.75. NYSE is 1-to-1 down, so that's not really doing much. New York Stock Exchange. The comp is 1-to-1 up. The SPY is 1-to-1 up. The Qs are trying to go for 2-to-1 up. If Microsoft keeps going, that would be helpful. Okay, Amazon's going a little bit more now. Amazon's going for more. There goes Amazon. Okay, Amazon going. Amazon's on the move, trying to get through the 50-day. If we can blast through the 50-day, if we do blast through the 50-day, that'll tell you that institutions are buying this dip. If you read Brent's Gamma update this morning, we talked about buying the dip. Okay, so we got the dip this morning. As unpleasant as it was, they are buying the dip, so that's good. If we can push it back above the 50-day, it's going to take the institutions to do that because you and me, we're not going to do it. Okay, volume looks pretty good so far. Apple's starting to turn. It's been bear flags for Apple today, so I wouldn't jump into Apple, but keep an eye on it. Amazon looking really good here.
Welcome back to Squawk on the Street. You might remember our next guest from SpaceX IPO Day indicating he would hold his position for the long term. Stock is off more than 40% from the highs, trading below the IPO price ahead of Thursday's Starship launch reattempt. Which made some bold calls on China AI competition and the direction of the market overall. Joining us here at Post 9, early SpaceX investor and Treaties managing partner and CIO, Gavin Baker.
Unusual price action on Microsoft in that usually Microsoft will run up in the morning or whatever and fade. Any bounces usually get sold. This is holding up very well. Broadcom turning up Amazon's taken off to the upside. Amazon.
Answers, I'm not really thinking about it. Just we'll see where we are in a year, 2 years, 3 years.
Yeah.
My friend Welldenoff once came on CNBC and he said, he was on the show Fast Money, and he said he tried to be slow money, think long term, and I think there's a lot of wisdom in that.
Yes, there is still a process though to.
Okay, we're at the 50-day. Amazon. Okay. Amazon pushing through the 50-day would be significant. Pushing above and closing above the 50-day would be significant. S&P is squeezing right now. After that little bounce, S&P is squeezing.
Markets are missing with respect to SpaceX is they monetize
It's at the upper Bollinger Band on the 5-minute chart.
meaningful premium to anyone else. They bring on
Up down volume is really
faster and cheaper
could be better.
so they make the most profit.
Google's starting to turn up now. Microsoft looks more like some profit taking. Microsoft, if you have profits off the low, keep an eye on this. Don't let this pull back too much. Okay, it looks good, Microsoft. Okay, SpaceX has been grinding off the low, still off, but grinding off the low, SpaceX. Netflix,
People are a little bit concerned, I guess.
I'd like to get that back above 70, Netflix.
Right, of Starship. I mean, part of the bull thesis here is that they are able to do this much more frequently at lower cost. So any hiccup in that causes some concern.
Starship is a really hard engineering problem, and I think they've made incremental progress each launch. But if you're a long-term investor, it doesn't really matter whether we get to reusability for Starship in 3 months, 6 months, 9 months, 12 months. And I would focus, respectfully, people more on terrestrial compute in the next 2 to 3 years.
Come on, Microsoft, you can do it. Blast higher one more time. Unusual price action. Unusual for Microsoft. Usually fades by this time of day.
There are questions about the
Amazon is looking really good. Amazon.
changes very quickly and
Back to Amazon.
come out and leapfrog
That's on the move. Amazon on the move.
from China, where they're open source and they're a lot cheaper about the entire economics of the system.
I guess there are questions.
Yeah.
I don't
You don't have that.
I don't
Why?
really
Why?
have questions.
What's your thesis
Well,
here?
so open source models fundamentally just shift margin percentage and margin dollars from the kind of model layer to the infrastructure layer. If you have cheaper tokens of an equivalent intelligence, we're going to consume more of those. And if you believe, like I do, that we're structurally short compute, then you don't worry so much about margins at the model layer.
And that's why that feeds you to a bullish thesis on neoclouds and other elements of the actual infrastructure build. Yes?
I mean, I don't know if I would use the word bullish, but I do think it leads you to an interesting risk.
Amazon looks good. Amazon looking good.
Providers of compute, whether it be to frontier models or open source models.
But talk a little bit more about, we were teasing out what you were just saying about, so we get these Chinese open source models like the Kimi one, and everyone freaks out that they're better and they're cheaper and they're open source. You don't necessarily think it's bad for OpenAI and Anthropic. Why?
Well, it may end up being bad for them, but I just think the fundamental principle, I think open source software, like Red Hat, back in the day, now part of IBM, that is much cheaper than software. It's free. But a token, AI, when you consume it, it costs the same amount of compute, of watts, of energy, of CapEx, of OPEX to generate an open source
Oh boy.
to generate an Anthropic token.
So then why do corporates have to pay so much more for Anthropic?
Well, because it turns out that there is and this has been very surprising to me over the last year, that there is an enormous return to be at the frontier of intelligence. And I think the future is likely to be one in which maybe a majority of economic returns continue to accrue to these frontier tokens, but the majority of tokens processed are these very cheap open source tokens. And you can think of it, you use, every enterprise, they're going to have a symphony of AI models that they use.
All right, there goes Amazon.
The conductor.
Meta looking good too. Meta's next.
And then you're going to have
Okay, Meta is next. Watch Meta here.
and those are these cheaper
Okay, Meta looking pretty good. Meta's looking good. Amazon at the high of the day. Amazon.
To a closed source frontier model provider, and I think that is a likely future.
Where the U.S. frontier models remain sort of in charge.
Amazon looks good.
Customers.
I think so. And there is also a lot of Eric Vishria, partner Benchmark, posted something maybe 18 months ago that I thought was fascinating. Just there may be as much lock-in at the product layer, at the harness layer, as there is at the model layer. And the products that Anthropic and some of the other frontier model companies have created, Cloud Code, Grok Build, around their models are, I think, an increasing source of competitive advantage and switching costs.
Meta looking better.
Will a corporate have a lot of vendor diversity in this symphony that you describe? Can it be one player delivering a suite?
I think it is highly likely to be a multiple model future. And maybe some of these frontier models over time incorporate the ability to make it really easy if you're Claude or your Grok to bring in a cheap open source model that, you know, maybe is a violinist.
Right.
and the conductor orchestrates.
I mean, it sounds, I'm just trying to figure out whether companies will want to minimize complexity.
Meta.
Vendor diversity.
Meta's trying to break out, opening range.
Complexity, but they will also want the most intelligence per dollar. Yeah. One thing that's really unique about AI, for the first time in my kind of history as a tech investor, being the low-cost producer matters. Intelligence per dollar is what matters, and that is a function of what is your cost per token, and having the most efficient infrastructure is really going to matter, and then how much intelligence do you have per token. So to get to an equivalent answer can be K3, which is a great model and an achievement for China. It processes it needs 2 to 3x more tokens, and each token costs compute, watts, energy, capex, all of that. And so if you need to produce 2 to 3x more tokens, well, you know, and so token efficiency and cost per token, I think, are gonna
matters.
Yeah.
As long as American corporates are able to buy, I guess, to subscribe for. There's all sorts of regulatory questions there with China.
Well, I do think you will see. We do have a really great American open source company.
All right, starting to show signs of a break higher.
Really, really good, and I think that they are probably throttling it to a degree. You know, they don't want to scare and upset their customers, but I think they could very quickly bring an American American open source model close to the frontier whenever they want.
Really? Do you have a position in NVIDIA?
I do.
Just for
Okay, there goes Meta. All right, these are looking a lot better. Meta, Microsoft, all of these looking better. Meta, Microsoft. Okay, trying to push a bit higher, Microsoft.
actually competing relative to the.
Okay.
I think that the market reacted in exactly the wrong way to Kimi K3. It's wildly bullish for all of compute, wildly bullish for the AI infra trade. But I think it did really underreact to Grok 4.5 and Muse 1.1 for Meta. Grok 4.5 is on what is called the Pareto Frontier, which just
S&P is still trying to make higher highs and higher lows. Watching Trace with net open interest showing we're in between these two levels of support and resistance.
It is more intelligence per dollar.
Clear where resistance is at 7,500. Microsoft pushing a bit more. Wow, very strong day for Microsoft. Very unusual strength.
You know, I think there's a lot of people who maybe own stock privately and are shorting the stock to hedge that. Right. We'll see. And then there's always, for whatever reason, a big kind of New York hedge fund short case and Elon companies. And, there's a graveyard of funds that shut down because they're Tesla short.
But a lot of people look at the valuation in this one.
And then that comes down to how many gigawatts of power can they add? And the estimates on the screen might be really wrong. And then what happens? Grok 4.5 is a 1.5 trillion parameter model. They're training a 2 trillion parameter model right now. I think the Cursor acquisition for $60 billion is looking very smart. That was doing $3 billion in ARR when they bought it. I think it's probably materially higher. So I think there's
Okay, so they are definitely buying Microsoft, looking much better. All right, 50 days coming up fast. We're about to take out Friday's high.
And we'll see how those trading runs go, and we'll see how those models benchmark when they come out. But if they are able to bring on a lot of power and sell that to other AI players at very high rates, and they are also able to bring on enough power where they can also serve their own models at a very low cost.
Okay, watch SK Hynix.
It does feel like Wall Street has really put a premium on like the model supremacy over the cost so far.
SNDK, thank you.
Yeah.
Thank you, dollar.
Because that's the edge that you think Elon has.
I do think, to the best of my knowledge,
Tesla and Apple are dragging their feet. Other than that, the other New York FANG components look really good. All right, so Microsoft just hit Friday's high. Microsoft just hit Friday's high. I'm going to reduce my exposure here. Okay.
You know, you're employing a lot of electricians, a lot of HVAC contractors, a lot of plumbers at like truly unimaginable rates.
Yeah, New York doesn't want them.
Yeah, it's crazy.
Yeah, home builders can't get those guys.
Yeah, exactly.
Kevin, please come back.
Yeah,
This
it's
is
great.
Thank you.
Yeah,
This is
whenever
great.
you're around. It's great to have you.
Thank you so much.
Thank you. Still ahead, CEO of Archer Aviation joins us. Company unveiling a new aircraft today in partnership with Anduril as it looks to build its defense portfolio. We're back in just a moment.
All right, I reduced my exposure in Microsoft. Rode this trend all the way up in the 400 call. And we're just shy of that level right now. It's probably going to keep going, but I just want to reduce my exposure a little bit more. I've been doing that for the last couple of weeks. Down to, let me see how many positions I have here. Down to a dozen positions. Mostly in tech. Mostly in tech. I do have some Home Depot. I'm just talking about my options positions. Longer term stuff, longer term positions like TRBCX. That's just consolidating at the 200 day. The weekly is below the 10. I might take some of this off actually. TRBCX, I might take some off, thinking that we might see some weakness into the midterms. Okay. August tends to be not the best month of the year. So I'm contemplating it right now. TRBCX, I'm contemplating reducing my exposure. This is long term. Got okay, the long term accounts. Microsoft looks like it wants to keep going. I still have September 410, 415s for Microsoft. I just took off the 400s for August. Could have just left it on, but I'm seeing a few things that I would like to move higher. Like, for example, the S&P weekly, we're just sitting here. And the longer you sit there, your options start to lose value, especially if you're in July or August. So I have most of my positions are out in September now or further out. Okay, Amazon's starting to pull back in a little bit. Amazon at the high of the day. Okay. All right, Amazon, I've reduced my exposure in Amazon at the high right here, Amazon. Looking for ABCD patterns. If I'm going to buy anything for Amazon, it's got to get above the 50-day now. I've been riding some Amazon. What did I just sell? I've been riding some Amazon calls. Those are August. Okay, so that could have been okay, but I have the 255, 260, so almost there, almost there. I took those off. Oh, good thing. Now we're starting to back off now. Meta, another one. Let's see if that's just people taking profits off. Meta, just off the highs. This is another one I'd like to reduce and maybe get something like October, November, because this looks pretty good. 2 wiki candles right at the 200-day. Apple trying to turn. Snowflake turning back up. Snowflake.
Thank you very much, there, Adam Goldstein. Good to see you again. Let's talk about Thunder.
Okay, hedge flows turning back down, as you can see. Okay, S&P still weekly. You could sell premium probably. Premium above 7,500. You could sell premium up there. You could sell premium down below, although this is probably going to fade a bit more. All right, so I'll steer away from that for now. Let's go check out the watch list again, see if there's any improvement here. Okay, so S dot, this is restaurants and bars. BJRI. Okay, Doji, that's been running. Restaurants and bars have been doing well. Cheesecake Factory, this has been on the watch list off and on. Let's see, Microsoft. Okay. Microsoft looking very strong. All right, so I do have more Microsoft, but those are out in September. I took the August off a few minutes ago for a nice little profit. Okay. Okay, so Amazon, I took some Amazon off, some Meta off just now. Was that Meta I just took off? Amazon. And no, Amazon and Microsoft. Okay. Meta, I'm still dealing with. Looking at the top 10 on the NASDAQ 100, we got LITE, Marvell, Teradyne, SNDK, which is one that Dollar just mentioned a few minutes ago. Trying to bounce. Okay, SMH, bouncing a little bit. It's got a lot of resistance overhead. Notice the 21-day is about to cross down through the 50-day. We've got August coming up. Doesn't tend to be the strongest months of the year. On the contrary, it's usually one of the weaker months of the year. So I'm looking to sell into strength, buy the dip, sell into strength. Make sure I have at least, if I'm trading options, I'm making sure I have at least August, preferably September at this point. Now that OPEX is behind us, we're looking for this positive gamma to continue to build, especially underneath price, so that we have support. Today looks pretty good so far. Nice little bounce. We had a huge move this morning that we faded. Snowflake is on the move here. And we're moving back up. All right, this is pretty strong. Moving back up through VWAP would be ideal. Okay. So opening range highs overhead, 7,500 looks doable. 7,500, it's not too far away, right? And you got resistance there, 99 percentile at 7,500. Okay, looks good, right? You're so cute. You're such a cute kitty cat. This cat, like, new thing for her. She starts sitting back on her hind legs like dogs do. Okay, what's Benny talking about? Talking about my cat, my kid's cat. Okay, so that looks good. Okay, I see you. Let me pay attention here. S&P back above VWAP. We could run here, folks. Watch it. Looks like we're going to run. 7,500, 99 percentile, resistance, resistance. Oh boy. Hope everyone's having a good day. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Monday, the 30th, or the 20th of July. I wish it was the 30th. Okay. Looks ready to go, folks. Okay, Cat. 1 second. There you go. Okay. S&P, you can see the doji clear as day. Doji, we're right in the top of Friday's price action. We absolutely must close above the 50-day to continue this trend. Microsoft, like I said, I took some 400s off. Took the 400s off. We're through Friday's high now. This is persistent. I haven't seen Microsoft do this in a while. I think if anyone has traded Microsoft in the trading room, you know what I'm talking about. This is very unusual price action. Okay, so we're looking for it to spill over into other stocks. Amazon doing well. Oh boy, let's see. Who is the most active?
Welcome back. AI is front and center in Washington today. Axios reporting this hour that the head of the Trump administration's AI security agency, the Center for AI Standards and Innovation, is resigning just months after taking that role. Meantime, the CEO of Google's DeepMind speaking with lawmakers today and tomorrow about regulating the growing technology. Our Mackenzie Sagalos joins us with more on that. Morning, Mac.
Hey, good morning, Carl. So Google DeepMind chief Demis Hassabis on Capitol Hill this week to argue that Washington needs something more permanent than today's voluntary reviews at the Commerce Department, right as the person who leads that team is resigning after just 3 months on the job, according to that Axios report you just mentioned. Now, Google's vision for how to regulate the industry is a FINRA-style watchdog, federally overseen, industry-funded, and empowered to test the most advanced models for national security risks before they're released. Now, Asabis is taking that proposal to a mix of lawmakers, including Congressman Jay Overnolte, who's based out here in the Bay, and a key architect on bipartisan AI legislation. The White House moved in this direction last month with the new executive order on AI, but Asabis wants a permanent body that could eventually make model approval a precondition for entering the U.S. The push comes as both Washington and Beijing impose increasingly protectionist and often improvised limits on foreign access to cutting-edge AI. At the same time, DeepMind is struggling to get its own LLMs out the door. The next Gemini Pro release is delayed, and senior researchers have left the team just as Chinese models gain ground, with U.S. businesses and new releases from Moonshot AI and Alibaba narrowing that capability gap. But Google shares moving higher this morning on a report that it's trying to ease the compute crunch with
Okay, we continue to move higher. Microsoft.
Up to 10 times more efficiently. But compute, that is only part of the problem. 3 people familiar with DeepMind's operations tell me the bigger bottleneck here is really organizational, multiple layers of approval, too many decision makers slowing down launches, leaving Google technically. So are there any restrictions on U.S. corporations using Chinese large language models? I mean, you showed the chart showing that it's growing, it's cheaper, they're getting faster and better technologically, but are there any rules around it? At this point, no. That's why it's been this vertical line up since April when we migrated into the days. Now, 45% of token use among American companies, at least according to this Open Router data, is from
Okay, Amazon trying to push a bit higher. There goes Broadcom. Okay, Meta fading a bit. Apple turning the corner. Microsoft at the highs.
At one point, was looking at putting some of these AI labs out of China on the entity list. That would make it a lot more difficult for U.S. companies to use it, but at this point, no.
That is a remarkable chart. Takes you back to the DeepSeek moment and a reminder of the echo that we're getting these days. Mac, thank you very much. By the way, Google, just one of the big names reporting to this week, as we'll get them on Wednesday, in addition to Tesla and IBM and ServiceNow throughout the course of the week.
Yeah, it really is a week of earnings because very little on the macro data, and the Fed's in a quiet period ahead of its big meeting next week with less than 20% chance that they actually raise interest rates. Let's see what the companies are saying about things like inflation and AI and the labor story, which has all remained good. I mean, we're still looking at more than 22% earnings growth for this quarter.
Yeah, meantime, bonds have been a little stubborn in the UK too, which we didn't really talk about as the market starts to get its arms around Burnham's policies.
New Prime Minister.
Yeah. Let's get to Leslie Picker in the half.
Welcome to Halftime Report. I'm Leslie Picker in for Scott Walker. Front and center this hour, the next test for the market. They were just talking about it.
Okay, Microsoft still climbing.
In the coming days, our investment committee is standing by with the setup. Joining me for the hour, Joe Terranova, Shannon Zakosha, Steve Weiss, and Saran Shetty. Once again, we're looking at the market midday. You got the Dow down about 0.2%, the S&P up about 0.4%, and the NASDAQ higher, up about 0.8% as we see some rebounding of the semiconductor names today. But as we mentioned, earnings, we're getting Alphabet this Wednesday. There are a lot of questions involving CapEx as we start to see the hyperscalers report. And I want to hear from the committee today about what you think happens with
Microsoft at the highs.
market reaction. Do you think at this point in time the market
Okay, what's Dell doing? Dell.
lower CapEx or just slowing
Okay, trying to get back into the swing of things. Dell bouncing off the 50-day. That was needed to happen. Okay, pharmaceutical stocks. ORKA from the watch list. Big doji today, fading a bit. AC, HC, healthcare. All right, that's trying to push a bit higher. Dave, that's been on the watch list off and on. Dave making new highs. Dave headed for 500. Eton Pharmaceuticals, Eton, ETON. Okay, that's inside of Friday's price action. LQDA. What was it about LQDA? There was something about it that I noted on the watch list. Okay, what's special about LQDA?
you can see return on invested capital now, but then if you have this looming threat of these open source models abroad and what that means in terms of the overall equation here, how do you think about those two levers moving forward?
Well, so Go back to your first question. What does the market want to see? It depends where you are.
Okay, Snowflake pushing a bit higher. Amazon about to break higher. Microsoft, wow, this is a pretty nice looking buying opportunity. It looks like people are jumping in.
If you're in the semis, you want to see budgets increase, right? So the max
LQDA,
there's no one answer.
commercial execution, legal tailwinds, and a rapid profitability and lucrative rare disease market. Okay. Speaking of rare diseases and doctors, Dr. Frank, hope everything's going okay. I know you've been taking it easy lately. Pipeline is good. L606. Upcoming earnings. All right, so watching LQDA. What else? Snowflake looking pretty good here. Snowflake taking off to the upside. Snowflake. All right, so we had a little bit of a indigestion on Friday. The dip got bought. Now we're following through. This has been a very, very strong stock. It just keeps trending in an ascending flag. Okay, this ascending flag just keeps trending higher. Looks good. This is the previous high, all-time high, 285.50. Looking for that to break higher. Microsoft still going. Okay, Microsoft, solid day for Microsoft. Amazon, Broadcom, Snowflake.
So it's a convoluted answer to a question that's just easy to answer.
Solid day for Microsoft. Very unusual. Microsoft continuation. Looks good. Okay, look at that move. And holy smokes, we're going to take out the 50-day at this rate. People chasing. Tesla. Yeah, we got resistance overhead, but it's a ways away, right? Is that what you're thinking, Dollar? Yeah. Microsoft, Tesla's starting to turn the corner. Tesla, Microsoft is kicking it. Like Beastie Boys, kick it. Beastie Boys.
I think that the appetite for the digestion, you have to look at not only the equity issuance that's happened in the market, but also on the credit side. If you look at, spreads have been incrementally wider for the hyperscaler credits over the course of the last.
SK Hynix, SKHY, SK Hynix. Trying to push a bit more.
Are we in a position where free cash flow actually becomes negative? Now, that's the question that really comes forth in the growth story. How much of this growth will be realized? How much additional cash flow can be generated by these companies to justify the spend that they've made so far? I don't think we're at the end of that. I think that there is still continuing to be meaningful demand. If you look at the denominator in terms of the number of companies that have actively invested in AI and put that forth in their core businesses as a strategic priority, there's still a lot of talk and a little less action. In some areas, a lot less action than talk. And so if you just look at financials, industrials, you look at healthcare.
SK Hynix looks like it wants to go some more. Okay, I'm open to it.
Sectors and in certain industries within those sectors. And so I think it's premature to say, okay, we're kind of topping out. But I would say I wouldn't anticipate
SKHY.
kind of meaningful increases to CapEx.
As long as the chips are strong, this should do well. SK Hynix is breaking higher.
Through the end of the year, and we haven't really seen a big change in demand over the last, 3 months or so.
Yeah, I was surprised with the bank earnings last week how token cost was basically a rounding error for most of them at this stage. They expect that to be higher in the second half of the year. And
Microsoft, good day on Microsoft.
Not a big margin compressor. Joe, you own Alphabet.
I do.
What would you like to see in terms of CapEx color or guidance or announcements?
I'm going to take a little bit of a different perspective here. The market overall, it's kind of idling in place, waiting to rev the engine in a particular direction. You're bearish, you're hoping it's down for a pullback. If you're bullish, obviously you're hoping for a continuation.
Broadcom.
When I think about the CapEx, what is critical is monetization.
Okay, Broadcom breaking about above the opening range high now. It's later in the day, but still it's showing strength.
Over the last 2 years, and we are waiting for them. We're going to hear from Alphabet next week. We're going to hear from Amazon, and if you think about the Max 7, there are 4 of them who have had really strong performance so far year to date. You've got Apple, which has made a new 52.
Broadcom. And keep an eye on SK Hynix. Come on, let's pop through here. SK Hynix. Need to see some volume. Amazon pushing the highs. Microsoft pushing the highs. Same with Broadcom and Snowflake. Okay, Tesla turning the corner. Tesla. Okay, Tesla, you want to see those moving averages flip to positive like they're doing right now? Looking pretty good so far. It'd be something if this is an outside day by the end of the day. I don't see it happening, but it would be something. This big candle right here.
Year on year, it's 3 straight quarters of acceleration. AWS, 28% growth rate. That was the fastest acceleration in 4 years. So that's exactly what you want to hear.
Wow, Microsoft is just killing it. Thank you.
Later on in the earnings cycle, we're going to hear from
Finally having a good day with Microsoft.
insatiable demand relative to supply. But we're coming into a really moment hearing from these mega cap earnings corporations.
At the same
Tesla.
time, Friday with the sell-off, Alphabet, Amazon, Microsoft all declined over concerns that more firms would switch to an open source model, given what we've seen with some of the Chinese competitors. Save on inference cost. Do you think that kind of sell-off makes sense?
I think Friday was a liquidity more than a fundamental sell-off. I think it was just paring back of positioning as the market seems to lately be trading with a little more of a heightened sense of urgency, in particular because of the decline in the memory names and semiconductor names. So a lot of times you have to look at positioning and you have to say to yourself, when you see that type of a sell-off, when you see a little bit of reversal in the price of Apple, when you see some of the mega caps go down, understand they're an ATM for portfolio managers. And it's really raising liquidity, getting cash availability ahead of a weekend where you have this geopolitical concern. I don't read anything more into it than just a near-term dynamic in the market itself.
I would echo that. I think that we have seen, I'm seeing additional questions around volatility. I'm seeing questions around the re-escalation in the Middle East. We're entering into a period where we still have a number of companies left to announce. But then we move into August.
All right, Cerebras, CBRS, chips. All right, so we need to get above 200, so I'm not going to jump up and down about anything right now, but Cerebras needs to get way back above the 200-day. I mean, above 200, and then the 250 call wall over here, overhead. Tesla's still turning. Looks good.
Perhaps that's a little bit of a lag or delayed effect.
I look at this one, that the bar is always high for mega cap earnings. In fact, the bar is always high for every company that's reporting, because we're seeing moves of 20 to 30%, in some cases looking at post earnings, up or down. So my advice would be to make sure you like the companies that you own, make sure you know the companies you own, and own it through the quarters. Because as we saw, these stocks recover. We've seen it in every single cycle. They still the debt that they're taking out to finance the AI expansion. They can cover that debt. Debt coverage is not an issue for these companies. They print.
Okay, CBRS making some progress. Buyers at the low. Technically a double bottom. Okay, chips are working, so we're looking for these stocks to move higher.
Trying to guess what the quarters can be. There's so many levers they have to pull. How's cloud growth? How's ad growth? Right? How's their spending? What's the ROI on the spending? So, not all are going to come in as you want to see.
And news today, we had that Alphabet chart up. It's up about 2.5%. There is a report that says Alphabet is working on a new chip to enable its Gemini AI models to run 6 to 10% more efficiently. Sarah, what are you looking for on the conference calls as it pertains to China's moonshot?
All right, Cerebras having a nice go of it right now. Cerebras CBRS ripping off the lows.
Commentary do you expect to hear on that front?
I think in addition to the fundamentals, I mean, Steve was talking about cloud growth for all of them in terms of what's advertising growth, what are they looking forward to. I mean, that's still very important for these stocks, right? We're so focused on what are they doing with their free cash flow. Where is their free cash flow coming from? So let's get back to fundamentals on that. But I think to your point on GPUs and all of them doing TPUs, what is your cost coming down, right? We're going to see efficiencies coming down, whether it's in memory, whether it's in semiconductor, whether it's data centers. Where is that cost going to be contained or improved or be more efficient? And I think those companies that have that advantage. The other thing that's going to be interesting.
Okay.
Are you going to go to the open source with China, or are you going to go to a closed loop for security?
Amazon pushing more. Okay, Amazon looks good. Amazon.
Customer data, whether it's you're talking about businesses or you're talking about consumers. So that's kind of another thing to watch.
Cerebras looks good. Amazon breaking to new highs. Snowflake at the high of the day. Cerebras is going. All right, something's up with Cerebras. Got a nice bid here off the low. Since about 11:15, it just keeps climbing. Cerebras. Brookfield back. C Square valued at 3.24 billion as shares fall. Blah 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 blah. Okay, haven't seen much on the way of news here. Cerebras on the move.
Memory and semiconductor and semi-equipment went parabolic. We're just now moderating that momentum that was embedded there. So we're seeing a significant sell-off. With that significant sell-off, let's bring the word rotation in the conversation because everyone's talking about.
We needed 14 minutes without rotation, though.
Right, exactly.
Kudos to us.
But there are rotations that continue to dominate the market in 2026. And you have to pay a price for rotation. The price for rotation is volatility. And it's tempting you to kind of exhibit the wrong behavior. I think it's important to understand that this personality of the market has changed because of what we've seen with memory and semi-equipment, the fever breaking. I think the personality of the market is now wanting to pay a little bit more of a premium for the degree of safety. You have to ask yourself, okay, these Mag 7 companies, they do offer a degree of safety that I can't find in other places. I have yields rising back towards the high of the year. A 10-year is at 460. I think the high is 468. Mag 7 really doesn't care where yields ultimately go. Longer duration, semiconductors and software, yes, they do. So I think it's important if they deliver here on earnings to understand you may see capital push in that direction, but it's pushing in that direction not because the market's saying we want more risk. It's a risk-on element. Or
what's SpaceX doing? SpaceX turning off the low. Oracle. Michael Burry closing his short position. I don't hear anybody talking about it. They talk about it when he takes it, but they don't talk about it when he closes it, apparently. Oracle. Intel with earnings this week. Okay, trying to get back up to the highs. SK Hynix, SKHY. Just got rejected at VWAP. Tesla. A little short covering on Tesla, bounced for a few minutes there. Tesla bounced for a few minutes. Okay, we're right back to VWAP. Okay, we need to get above VWAP and get these moving averages turning up and to the right. Okay, back to the watch list. Back to the watch list. Things are improving a little bit. Healthcare, restaurants and bars, pharmaceuticals, personal products, Elf, beauty. Okay, so that's a 3-week tight pattern. Okay, so a breakout here would be very bullish. Okay, Elf Beauty, 3 weeks tight. Nice run up off the low. Plus you got Ulta turning as well. Ulta. Breaking a downtrend.
Weiss, do you think earnings, as we get further and deeper into earnings season, really help support that as well? Because the last few weeks we've had a bit more of a vacuum as it pertains to the hyperscalers, and we've had a little bit of semiconductor reports. But do you think as the weeks go on and we start to hear concrete numbers, we start to hear commentary, that could provide a level of support, or do you think that the bar is really high this earnings?
What's the other one? Cody? Is that considered the same group? Cody?
I mean, I don't recall the bar being this
Cody.
in terms of what analysts are forecasting for S&P earnings. And the pre-announcement period, aside from like an IBM, has been very, very light, as it has been the last few years. So
That's a good point.
yeah, so I think so it's going to go by sector. It's going to go by S&P sector rather than overall when it ultimately washes out. So, but to your point, Jen, last couple of August have been tough. So I think, going back to what I said before, I think you can drive yourself crazy trying to trade earnings seasons, any particular earnings season. So I don't know how you get in front of it. What do you do? Do you sell? Do you sell because you're worried, only to be surprised by a better than expected quarter or a quarter in line, or for the stock to recover shortly thereafter? It's the best thing to do. If you have convictions in the companies you own, you stay in those companies. Now, if you think there's reason to be concerned, and most of these positions, particularly in semis, even though they're making lower highs, everybody's still, I would say everybody, people that were in early have still made a lot of money. And I suggest, as I've seen my own portfolio, that they could be outsized positions relative to what your normal risk management is. There I pare back, and that's just simple portfolio management. So my point is, I don't think you abandon what your portfolio management strategy is just because of all the heightened issues that we're seeing for this quarter.
Which could be what some of the recent sell-off is akin to as well. Just this idea of portfolio management and some of these things becoming outsized.
Comes back to
the portfolio.
Is the stock performance, has the stock performance peaked?
Yeah.
Based upon the cycle. That's the overriding question. If it is, then Caterpillar is still overvalued, significantly overvalued.
I mean, if you ask Ed Yardeni, he was on the tape saying this morning that Infotech looks tired as we talk about kind of the personality of the market. He says there's AI fatigue and a lack of catalysts. That was from his note this morning. Sarat, do you agree with that? I mean, that kind of, to me, suggests, at least from a sentiment standpoint, that he thinks that it has peaked.
So there are a couple of things that could happen. One is money flows out of the market or just goes through the broadening phase. And we saw financials did very well, right? But financials need another tail and what could provide that is if you get decent earnings from the big tech stocks coming, then you can see more capital markets activity coming, right? On the other side is if you don't get good earnings, the market pulls back, then the IPOs coming could get deferred. M&A activity could slow down. So they're all counting on that as well. So I think you have economic activity, capital markets activity. You could have a base to the market. You could have a broadening still continuing on some of the other financials, industrials, and other areas that will partake in more capital markets activity.
All right, so you have three names. You have Micron, you have Marvell, and you have Corning. Each one of those names off the peak, somewhere between 25 and 40% has been the correction. Each one of those names, Micron, Marvell, still sitting above a supportive 100-day moving average. Corning, sitting above its 200-day moving average. So I think that just shows the degree of which these names went parabolic. And when these names go
all right, so Cody, Elf. All right, looking for these to break out. Elf gets above that 200 day, it's going to run, most likely.
Quantitative algorithm capital being allocated in that direction. And what has been happening ever since is that capital is just moving out, going into other places, to your favorite word, it's rotating.
Well, the momentum factor itself has erased the gain since the end of April. And Goldman says that momentum's volatility has surged to the highest.
Okay, Amazon's still going. Microsoft is kicking ass. Wow. Look at Microsoft. This is highly unusual for Microsoft. The volume doesn't reflect a lot of conviction, but very unusual price action. We don't usually see this kind of thing with Microsoft. Earlier, I said that about 3 hours ago, I said that this barely making it back above the 20 EMA on the 60-minute. If this starts to trend, we could take out 406. I have the 410, 415 call spreads. I also have the August 400s. I took those off already. All right, so I left a little money on the table. That's fine by me. That's fine. Tesla trying to turn up. Microsoft looks really good here. Microsoft is just, whew, this is really something. There goes Meta. Meta just popped. Meta just popped too.
All right. Up next, more of the day's biggest movers and our top calls of the day. Halftime is back in 2 minutes.
Wow, Microsoft.
And that's never happened in America before, not in peacetime anyway. And I guess you could argue that this is not exactly peacetime, but regardless, checked out. At the same time, you have a little more than 7 million open positions. I don't think that's a coincidence. And so to answer your question, where is the will? Where is the will to do the work? It's a fair question. It gets hopelessly politicized because everything is a polemic in 2026, but it still needs to be asked. It still needs to be grappled with. And let me just step back and say what I think is going on.
Yeah, Elf, I really like this chart. Okay, got to get above the 2. If it can get above the 200, that means it's going to take out this pivot as well. Once it's above the 200-day, that upper band, that lower band will probably move away from each other. So we'll check this. It's on the watch list for the week. So if we get going, Elf, I'm not in a hurry to jump into anything. I've been reducing exposure as the markets diddle with the 50-day. If we can get above the 50-day and resolve this weekly chart to the upside, that'd be great. But for now, we're still dealing with the 50-day. It's a doji. This could go either way. I mean, they could start selling this like crazy in the evening session, and people will be stuck that don't take stops. Okay, Meta's looking good. So the bottom line is I'm going to take some ELF maybe tomorrow, next day, if it gets above the 200. Meta breaking out now. Meta's breaking out. Meta looking good.
Welcome back. Let's get some stocks on the move today. Bristol Myers buying NVIDIA's latest AI compute system for drug research. Right? You own both.
Drug research. Bristol buys NVIDIA computing. All right. So it's about I thought they were already doing this. I thought these big pharma companies like Bristol Myers Squibb, I thought they were already using AI. Since the whole genomics thing, 25 years ago, they started using computers. Now they got AI splitting the genome, figuring out the DNA, the quirks in people's DNA that creates disease, hereditary diseases, Pretty exciting time to be a young person in a lot of respects, with the technology being what it is. They could probably cure cancer already, right? There's a lot of speculation about why the cancer hasn't been completely cured. Anyway, whatever. Meta's still pushing higher. Microsoft looks like it's going to go some more. Microsoft acting highly unusual.
Maybe you get a restart after earnings, which I think are July 28th. I'm not sure there, but right now it does categorize itself as a momentum.
Yeah, down about 3.2% year to date. Lockheed Martin planning a new bargain rate. Patriot missiles replenish low stockpiles. Now, this is also one that you.
Another example of a position that we just took at the end of April. When I
Meta's gone.
we just take a position.
Yikes.
The last 90 days, it has this prove itself element to it.
Yeah.
All right, can you see what's going on here? This is very unusual price action. Look at Microsoft. Microsoft never does this. Never say never, but for the last all of June, we just faded. We couldn't get a break for anything. Today, a lot of people are probably on vacation or playing golf or doing things, and here goes Microsoft at the 50-day moving average. Constant bid all morning into the noon hour, and the volume is picking up now. Microsoft, wow, what a nice move in Microsoft, huh?
Because they've struggled, and I think it's been surprising that we've seen the struggle in defense names.
You'd say Lockheed caution, maybe.
I like that.
There you go. Moffett Nathanson saying it's going to get worse for Uber before it gets better. Surat, you own it.
We do, and if you look at the stock chart, you go back a little bit. It almost hit 100. Now it's back.
Look at Microsoft. Ay. All right, a lot of stocks that were well off of their opening range highs have regained strength. DoorDash, we mentioned DoorDash about an hour and a half ago. DoorDash above its opening range, that orange line right there. Turn back up. DoorDash needs to move a bit higher, but it's looking pretty good. Nike looked pretty weak this morning. Nike dipped. I thought for sure that was going to keep going. Home Depot trying to turn back up. Uber, they're talking about Uber right now. Uber hasn't done anything. Talked about the Pelosi's, not always right. Microsoft just keeps going. Microsoft. Wow.
So I don't know why I have to own it. I own it because it's scarcely value. That's out the window right now. Because you've got Waze, you've got others that are coming into the market. And I just don't see where it's an attractive holding. There are other ways to let your money die.
You mean AVs or EVs as competition?
I'm sorry, EVs and AVs.
Okay.
EVs are important because we're seeing gas prices going up.
Right.
And while Uber doesn't pay for the gas, drivers do. So drivers are going to want more money. And I think that's going to be here to stay for gas for a while, as long as we're in a situation with Iran, which there's no sign of that ending anytime soon.
Microsoft.
Downgrading Charles Schwab to neutral. Joe, this is another one that you own. Stock's kind of up about 0.5% right now.
Yeah, so we'll hear from them within 24 hours, I believe. You're probably consensus is $1.55 on EPS, 6.92 on billion. I think net interest margin looking somewhere around 2.98. Given what we've heard so far about the trading environment, that they are benefiting from significant retail engagement. Stock has been somewhat disappointing.
Okay, S&P is starting to fade now. Don't lose sight of the indices. Indices are pulling back. S&P fade.
To a new all-time high. Get this stock above 107.5, pushing 110, 115, and let's see if the retail community can be that catalyst.
Yeah, we saw with Morgan Stanley last.
S&P is fading here.
Their entire wealth division took in $148 billion, which was 3 times the comparable period last year. A lot of that.
The Schwab has already responded off of those reports with a rally. So now you're ramping up the expectations.
Microsoft.
Yeah, it's amazing how much of a role IPOs just play in that interest level and those flows. Now to Angelica Peoples with a CNBC News update. Hi, Angelica.
Hey, Leslie. 3 people suffered minor injuries after a man described by authorities as an anti-ICE activist set off fireworks outside an immigration court building in Lower Manhattan.
Law enforcement told MS Now that the suspect had 2 airsoft rifles and poured accelerant on the fireworks. That suspect was arrested, and the FBI and NYPD are investigating. Multiple UK officials leaving government following Andy Burnham's swearing in as Prime Minister as the country welcomes in a new cabinet. The Deputy Prime Minister and Justice Minister David Lammy and Finance Minister Rachel Reeves announcing their departures.
DoorDash still pushing. Okay, Axon above its opening range high, so is Palantir, Uber, Microsoft, Amazon. Okay, Nvidia just rolled over again. Meta following through. Meta.
The investigation involved U.S. agencies working alongside FIFA, media companies, and law enforcement partners in several countries. A lot of people wanted to watch that game, huh? Leslie, back over to you.
Absolutely, Angelica. Thank you. Straight ahead is your ETF Edge. We are back after this.
Okay, Snowflake. All right, ABCD patterns are likely, more likely this time of day. So still waiting for an A pivot, and Microsoft just keeps going. Crazy strength. Looking good, Microsoft. Thank you very much. Okay, what are the banks doing? Citigroup got smashed. Last time I looked at it, Citigroup, what's it doing? Citi. Okay, trying to bounce. Goldman Sachs was active this morning. That's just sitting there. Morgan Stanley. The banks, people don't seem to be interested in banks. They did mostly beat. They're consolidating. What's SoFi doing? SoFi. Okay, bouncing off the 50-day back above. People sold. An inexpensive name like this, I'm not surprised to see shares being thrown away last week because it's a cheap stock. So what do you sell when you're a new investor? You sell. Most new investors don't buy expensive Micron at $1,500 a share or whatever Micron's at right now. Micron. 800. Wow, it came off the high, huh? 1250. Just shows you how long it's been since I've traded Micron. Back to 900. Back to $900 a share. So most new traders don't buy Micron. They get stuck on the penny stocks first or whatever, cheap stocks trying to make a buck. But they fail to look at stocks like I don't know. Let's look at what's GameStop doing right now. GameStop's at 21.75. Has gone nowhere for 3 months. And look at the ATR. So you get a new investor or a new trader coming in. They want to make lots of money. They see people talking about GameStop. It's in a range. For whatever reason, somebody wants to go long. You can expect to see 60 cents. 60 cents improvement. That's not going to cut it. That's not going to cut it. Microsoft, on the other hand, if you could afford to buy some Microsoft, whether it's options via spreads or call flies or whatever, $400 stock moved a lot today. Microsoft is up on the day. What is it? $8. So that's $400 for a 50 delta call. So you buy a 50 delta call for $9, $10, $900, $1,000, and you make $400. 50 delta on a $8 move. Now Microsoft keeps going, so I've already sold some into strength, and that just keeps going here. Amazon still pushing. Amazon. Yeah, I did take some profits off into Amazon's the rip higher. Same thing with Microsoft. Meta. I'm looking to do something with Meta as well. Meta. Let's sell some into strength. Meta looks like it wants to keep going.
That are going to be reporting over the next several weeks. We're expecting a fairly strong earnings season. So far, you've seen 20% year-over-year returns. EPS. That's the second quarter.
20 trillion in U.S. ETF assets.
And when you see
20 trillion. Wow, that's a lot in ETFs. Oops, what happened? I just closed that. Hope everyone's having a good day. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. We're halfway through the trading day. We have 3 hours and 20 minutes to go. It is Monday, July the 20th. Come on, Schwab, come back on. Okay, Schwab. All right, Microsoft is still going. All right, so this is really, really unusual. I mean, it's not even stopping for major resistance levels like the 50-day. That's telling you it's institutions buying. Not even stopping. Wow. Wish we had one of these every day, right?
When you look at that, it looks like it's about the competition and the competition lapping GM. But is some of this consumers, delaying purchases, or is that not factored into your data right now?
So we're seeing, I guess, sort of medium strength when it comes to consumer landscape right now. And we talked about this before.
Low tick alert minus 800.
All right, low tick alert. What is FIG doing? This was one from a week or so ago. FIG trying to break out. Figma, FIG. I got a low tick alert. All right, something just happened. Spiked it down. Do we have any news? Let's see. Where's my financial juice at?
So I don't think that's going to be a huge factor. It's going to affect all of them pretty much across the board, and it's not going to be a factor in this coming earnings report. I think we could see it if the data continues to move in that direction. We could see it in the next maybe 2 or 3 quarters.
What time is it? 12:42. Every time Iran kills an American soldier, they will pay for that killing many times over. Okay, so that little drop there was President speaking.
Team, you saw both of those charts. It looks rough out there. Your final thoughts before the example trade?
Yeah, I thought it's pretty interesting the negative to have on it. If you look at this stock over a 3-year period, the stock's up over 90% from levels that we saw 3 years ago. So it's had a great run, even though the last several months we've seen some consolidation. It's trading right between its 50 and 200-day moving averages, between about 76 on the downside and about 78.80 on the upside. It's kind of gone in that channel. But Kevin, you look at this one, their data is really negative. We talk about those divergences. Usually it's the divergence the other way around where the data is good, but the stock is lagged. Here they've got a flip-flop where their data is lagging, the stock's still,
Figma.
at this point.
Figma, they report August the 5th.
About a $4 move in either direction. How do you want to look at this one from an example trade?
Yeah, and one more thing, it's sitting right on the 200-day moving average at about 76.15 is where I have it. So based on Lightfolio's data, Tom, I got to take that $4 expected move, and I did the 1 week $72 put calendar. Lined up the expected move with my strikes, bought the July 31st 72 put, sold this week's 72 put. It was trading about 40%, trading about 45 now, but for under $0.50, you can get some protection here in General Motors. The divergence between implied volatility.
Okay.
72 in the July 24th.
Thinking about those SPY put flies that I took off this morning at the highs. I don't know. As long as we stay up here above the 50-day S&P 500, as long as we stay above the 50-day, that's good. I just don't like dojis. Especially starting off the week, you got a doji. There's no momentum. You got a lot of stocks like Microsoft moving higher. Very unusual price action in Microsoft, Amazon. All right, Meta's at the highs now. Meta. All right, so I've been taking some off of all of those. I took some off of Meta into that strength a few minutes ago. Figma, I had a position in Figma. I just took it off. Made about $10 per contract, but I've been sitting here doing nothing with Meta, with Figma. Okay, I just took it off right there. It's probably going to get going. Okay. Maybe short-sighted on my part, but positions like Figma, I'm just like eliminating these. I want to be paying attention to big cap names. All right, Microsoft's starting to fade. I would take profits.
Data, Diane, and at the same time, it's an inexpensive way as far as risk goes to get that downside exposure if you think it's going to sell off post earnings.
All right, thanks, guys. Coming up, are you still watching? We've got our eye on Netflix off the back of an upgrade. We'll have more Fast Market after this break.
Okay, Figma, watch it turn up now and blast higher. That's fine. That's fine. I know some of you might have taken this. I believe it was Jason or Joe K. I believe Jason has split up. His contract ran out with Option Hawk. He was bashing poor Jason, man. Jason just had a baby boy. Not him, but his wife. Not too long ago. That sucks, You work for somebody, you work 12-hour days, you give it your best, you expect more. I don't know. Sometimes Joe K comes across a little bit too, what's the word I'm searching for? A little bit too arrogant. I don't know. Something about it. Just something that sticks with me wrong. I see Jason as being a younger guy. I guess he's, what, about 30, 35, whatever. Married, has a little boy. Saw a little spat over the weekend with those two. They're both really good options traders. So, all right. So figures. Look at Fig. Now it's going to go. Fig is going to go now. I just sold Fig. Now it's going to go.
Stay connected to the market with Schwab Network.
Tune in 24 hours a day, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services. Schwab Network. Available anytime, anywhere, on any device.
All right. So Fig. Amazon at the highs. I'll take a little bit more. Amazon and Microsoft off. I don't have any Snowflake or Broadcom. Meta's stalling. I want to take some more Meta off. Okay, SK Hynix. I'd like to see this get above VWAP and just keep going. Okay, it keeps trying to get above VWAP. SK Hynix. Chips. I love that commercial. That's pretty funny. All right, Tesla rolled over. It didn't follow through yet. Still has a possibility of a higher low. The heat map looks a lot better than it did last week. Okay. Restaurants and bars. BJRI owns and operates restaurants. Cheesecake Factory. Gapping up. What's Jack in the Box? Jack in the Box? No. What about McDonald's? McDonald's MCD. Just sitting at the low. Disney. dogs of the Dow. Google. All right, just sitting there at the 20-day. You can see a range. Needs to get above the 50-day. After earnings would be good. All right, Snowflake trying to turn up. Snowflake. All right, Snowflake looking good. Just trending through this area. Elf Beauty. Elf. Okay, the interesting thing about Elf is you got a cup and handle pattern. The handle's a 3-week tight. If it breaks above the 200-day, I'll probably start a position in Elf. Not going to do it today. It's at the high of the day right now. Okay, but it does look like it wants to go, right? Elf looks like it wants to go. 60-minute, 20 EMA, flat, 3 weeks tight pattern. 3 weeks tight, you're required to have a run up into the consolidation. Next leg is most likely going to be higher. Let's take a look at ELF, forward PE, ELF.
Well, I mean, I can certainly see why the analysts are looking at this carefully. Netflix is still a premier brand when it comes down to distribution of content, whether it's live streaming content, original content. They've got a global brand. If you look at the price action in the last year, there's been down about 45%. The year to date, it's down about 27%. Phillips Securities did up.
All right, forward PE on Alpha is a little rich, 22 to 32. Price to sales, 2.5 to 3.8. Usually makes about 5 to 8 times. So Elf Beauty. All right, so you see what's happening with Elf, right? Elf is in a 3 weeks tight pattern. What's the likelihood after it broke a downtrend that it's going to continue? Well, it's consolidating for the last 3 weeks, looking for a break above the 200-day. And if I look at the metrics, fundamental metrics, gross margins, 70%. That's huge. That's huge for gross margins. Maybe not for this, for a retailer, but I think it's pretty good. EBITDA margins, roughly 20 to 23%. Okay. ODD, yes, please. Yes, please.
Operating margins only grew by about 11%. So operating income only grew by 11%, whereas sales grew by 13%. Ideally, we like to see the opposite, where you see operating income grow a little bit faster than sales growth. And if you look at the numbers on an adjusted basis too, based on what they adjusted for next quarter as well as a full year, they're expecting essentially low teens or high low teens growth versus
here we go. Okay.
double-digit growth or high teens growth.
No, whatever. Okay, so we know that it's got pretty good numbers. Elf Beauty. So this one's probably going to do something. Just can't buy it at the high of the day right here. That would be a mistake. I mean, because, in the next couple of minutes, this could drop off. It could break out, sure, but I can look at it tomorrow too. Once it breaks above this 80-50 area. All right, Microsoft is starting to show a lot more signs of profit taking. I would take profits in Microsoft. Okay, I'm looking for another entry and shorter dated options for a day trade. I won't day trade it today, but I have 410, 415, so looking to do something with those. I took the 400s off this morning or about an hour or so ago. Looking for BNC pivots now. Okay, I should make some lunch. All right, I'm going to take about a 5-minute break and make some lunch. I'll be right back.
Yeah, so I mean, it really comes down to what they're doing in terms of not only maintaining viewership, but the cost of viewership. And so this is where the question lies. Are they going to be focusing more on original content, which is expensive? Are they going to better monetize live streaming through advertising? So this was a questionable quarter, and that's why we're seeing the response we saw post-earnings. Ideally, they slightly missed on sales. They came in a little bit ahead of estimate. It wasn't all that bad. Stock has already been down. Valuation on a trailing basis now, 21 times, forward basis 19 times. That's about half the historical average. The question lies probably in the next quarter or two. How do they get better monetize their content and, of course, advertising?
All right, thank you, George. That's George Sillis, our senior markets correspondent. As we say goodbye to George, let's welcome back in Tom for example trade purposes. Tom, your approach as you set up your example trade.
Yeah, I think initially when the stock came out with those earnings, stock popped up to $76 in the post market right after they released. It's been falling ever since. It bottomed out just above $65 a share post those results last Friday. So I looked at a strategy. If you think the stock is done going down, or maybe that $65 level becomes a base case for support, that's 2-year lows. Remember that in the shares. I looked at a combo trade. This is bullish because both segments that create this strategy are bullish, right? Out in the September monthly option. So you got 60 days to expiration. This is a longer duration type of trade, giving the stock time to recover if you think it's going to go higher. It's got a lot of risk. Because you're short and naked put in this, but you've got a lot of upside exposure also for profitability. So going out to that September monthly cycle, 60 days to expiration, we're going to buy the 68 strike call just out of the money to the upside. That's bullish. And then to help finance the purchase of that call, we're going to sell the September 65 strike put. So $3 wide between the put and the call on this combo trade. It's a bullish risk reversal, sometimes how we refer to this. But you're paying a debit of roughly $1.60, right? $1.60. So that's your risk, $160 per spread between 68 and 65, right? That's all the risk that you have on it. But below 65, because you're short and naked put there, you've got risk all the way down to zero. So you've got $6,600 in risk basically down to zero if the stock were to somehow continue to go zero. So keep that in mind. You got to be comfortable owning the shares if the stock does fall back below 65 and you get assigned on that option over the next 2 months. So keep that in mind. But if you pay that $1.60, takes your break even up to $69.60 to the upside on this one. Anything above that's pure profitability on it. So it's a bullish risk reversal using the short put, which is neutral to bullish, helping to finance the purchase of the bullish call also. So this is a type of strategy you only do if you think over the next 60 days, the stock is going to go much higher, get above that break even, maybe go back to $75, $80 a share. But you've given yourself plenty of time on this one, but you've got plenty of risk on it also. So the combo trade here, the bullish risk reversal here in Netflix, but you got to believe in this one, Diane.
All right, we looked at this one on the charts today, and we took a 1-year and a 5-year view on it to go back and find some momentum. All right, good stuff, Tom. That's going to do it for us today on Fast Market. I'm Diane King Hall alongside Tom White and, of course, Kevin Haynes. Download the Schwab Network app. It's in the App Store. Tune in 24/7 on SchwabNetwork.com. Stick around. You've got Next Gen Investing coming up.
Live insights, actionable data, and market-moving analysis. Schwab Network connects the headlines to the why in real time. Watch free 24/7 at SchwabNetwork.com.
So what is unique about Schwab coaching is the community.
There's a lot of energy. Like-minded people are learning with you. You can just see and feel all the excitement around getting to learn a new topic.
Some of you want to get everything face to face with you and 400 or 500 of your closest friends.
Some clients like to be in the privacy of their own home on an online workshop, but still having that live interaction with the coach.
As I'm talking, questions are coming in from that live audience. They help me fill in those gaps as an educator. People learn differently, but all those ways we actually teach it all come back to the point of making a difference and helping you make progress.
And so that means not just giving you theory, it means giving you the practical implementation using our platforms.
So we want it to be fun, we want it to be informative, and most of all, we want you to walk away with a skill set and independently be successful in achieving your goals. Welcome to Schwab Network, where real-time market coverage meets expert strategy. From the opening bell to the closing bell, we've got you covered. Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute. With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand. Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com. Real-time access, data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at SchwabNetwork.com. Welcome to Next Gen Investing. I'm Jenny Horn alongside Alex Coffey, and we check in on markets here to kick off what's expected to be a pretty busy week as far as earnings and overall volatility. We have seen a bit of a pullback since the open, initially opening higher across our four major averages. Now seeing some weakness trickle in, although we are still seeing some strength that is led by the Nasdaq, which is up now about 0.8%. S&P is also higher as well by about 0.25%, for the Dow pulling back now 0.3%. Russell 2000 modestly lower as well. And so stocks relatively mixed as, of course, we approach what is expected to be, again, a busy week for major earnings with, Alphabet reporting Wednesday, a huge headline. A company, of course, naturally, that can move the overall market.
Yeah, and with the exception of Apple and Tesla, it's actually a pretty nice day for the mega cap tech firms. Microsoft having a decent day, Broadcom having a decent day, Micron higher, Amazon, Alphabet, Nvidia, AMD. So you look at the names that are leading today, it's certainly your momentum names, it's certainly your growth-oriented names, and as you say, it's going to be a pretty critical week, especially in the latter half.
Yeah, it is. And so a full slate of earnings moves to get through. And of course, we continue to see geopolitical tensions somewhat play into the market. But
All right, a lot of these high flyers are coming off the high of the day.
this week, but I was saying we were on stronger footing, obviously, out of the open, because we saw a pretty substantial downturn, especially in a lot of these chip and memory linked names towards the end of last week.
Yeah, exactly right. Whether that was tied to some of the news of breakthroughs out of some of these AI companies in China, as some have said, I'm not sure. Whether it's the natural ebb and flows of the volatility of some of these names, perhaps. Or it could be the example of, how I've just, heard it described. I think it resonates with how I'm thinking about it. This AI, trade, if we go back to the beginnings in 2023, really hasn't been an all-out bubble. It hasn't been everything in the market's done well, but it has almost been like a rolling bubble, where whatever the sort of trade of the moment is in AI has these incredible returns, but it doesn't last forever. Are we watching the transition from, memory and some of these AI infrastructure names to something else? Maybe it's too early to tell, but you look at some of these moves off the highs, whether it's SanDisk, whether it's Micron, and it's hard not to say, is this over? Because you don't see the kind of movement off the highs so dramatically, so steeply in the middle of the bull market.
That is true, and it does go to show. When you have such a portion of your strength and such a part of the overall momentum of this market being derived from such few names, and I know that it's widened out. It's not just like the Micron trade; it's the SanDisk, Western Digital, even AMD. But
a lot of these names have made notable pullbacks. I mean, AMD now is off of highs by 13%, and that's actually dwarfed by Micron's off of its highs by 29%.
Yeah, and today alone, I mean, we opened and we were a little bit higher. We had closer to 50% of the names higher. You only got about 40% of the S&P higher now. So that rotation is kind of into some of those concentrated names. Now, granted, in the NASDAQ, 60% of the names are higher in the NASDAQ 100. So certainly a better day for the NASDAQ names, the growth stocks, the momentum names. And we'll see if that's the tone for the rest of the week.
Yeah, so we'll start off with, a name that is seeing some upside volatility today, and that's Momentum, which is up now 7.4% on the session, adding to its 113+% rally this year. So really nice move here this morning. Barclays further really illustrating this bullish narrative, upgrading shares to overweight from equal weight with an unchanged price target of $1,000 a share. But they did say that they're adjusting their ratings for the broader semiconductor and capital equipment space as part of this broader second quarter earnings preview. They see the opportunity to re-engage selectively in compute, interconnect, as well as analog. And Momentum, they did note, underperformed peers by 40% in the last 3 months, and has seen multiple compressions on the thesis that scale-up co-packaged optics is somehow pushed out. But they actually believe the company's underlying fundamentals remain strong, and they still like the stock's risk and reward given the recent pullback. And so, again, another name that has seen a notable pullback. We've now slipped below our 50-day moving average, still holding up well above the 200-day moving average, but pulling back about 27.5% from those highs that we have not seen since about mid-May now.
Yeah, this is an example of an AI infrastructure name, and I think it puts into perspective what I'm trying to say. So if you look at it over, going back to February, they're basically unchanged. Doesn't take away what happened from January to February, so it still had an incredible year to date so far. But if you go sort of high to low over the last 2 months, it's like a 40% decline. Now, look, it bounced back 7% today, so you do the math on that. You're like a week away from getting back to the highs if you do this a few more times. But that's a big ask, and it goes to show that these are the winners in the market this year. Up over 100% over the last 6 months plus over the last year. Going 6x, and it's lost 40% of its value. Like, these are not for the faint of heart.
Yeah, they're one of the several names that we discussed that's still, up like 100% plus. I mean, like, some of these names are up 200% plus and still have pulled back, 30, 40% from highs.
40% is almost half.
Yeah, it's ridiculous. And so, yeah, if you're, into the volatility, into that risk that we could see that huge movement, this is a name that continues to see that swing all the way. We'll say, interesting to see this call because, again, we are still so elevated on a year-to-date basis. But
before we move on, you mentioned the 200-day moving average. 200-day moving average for Momentum is 575. Its high was 1085. Basically, its 200-day moving average was a 50% pullback. So, goes to show, that's how impressive the rallies were.
Yeah, that's true. And so, seeing an interesting call today to still maybe re-engage with Momentum. But now to shift gears into a pure earnings mover that is Domino's Pizza, which is up nearly 2%. We have pulled back a bit from the session open here, but we saw some numbers that were at least enough to, I'd say, signal a further turnaround as revenue beat expectations, also signaling some strength in their supply chain business, which helped offset some weaker restaurant demand. So global retail sales rose 3%. Domino's also added 209 net new stores during the quarter. Again, this continued unit expansion, which the street likes. They did emphasize positive order growth across both delivery and carryout, as we are still seeing a more challenged consumer, which does suggest the company continues to hopefully regain some of that lost market share. Now, earnings expectations.
All right, all the New York bangs have faded from the highs of the day, so taking profits off into strength made a lot of sense. Now we wait for BNC pivots to see if this strength will remain. If we can get some higher lows, that'd be great. Microsoft coming back in after a pretty big run up, looking for a BNC pivot. Started the day at around 391. Made about a $12 move so far.
expectations, it was disappointing. So the numbers on paper, really impressive, huge growth, everything. Very different than in the case of Domino's. The numbers are not particularly impressive, but they're better than expected in the right places. So whether that's the same store sales being better than feared as the street sort of favorite moniker when it doesn't really totally make sense. But I also thought that's something that really stood out to me, and you mentioned this, the idea that the order count growth was meaningful. The CEO pointed out that that's actually their most important driver of long-term success. So if more people are ordering, that's a good sign, and that's really I think that's the takeaway was here. So maybe the financial picture isn't wonderful today. They get more and more orders, things are going to work themselves out in the future.
Yeah, hopefully we continue to see this turnaround and really some of those same-store sales trends, especially here and as well as, of course, overseas, start to just normalize, I think would be welcome for a company that is operating, again, in a very difficult pricing environment. Anything with that restaurant or food cost exposure, seemingly seeing a bit more weakness for same-store sales growth this quarter, but obviously they're one of the first major chains that have reported. Now, to speak to a name that already did report, and we saw a pretty massive move to the downside, is Netflix. And so it's amazing because the trend from at least sell-side perspective is not broken, but does remain now, I'd say, fairly cautious following a lack of visibility is really what it seems like was characterized on their earnings last week. But Phillips Securities did upgrade shares to buy from Accumulate, unchanged price target of $110 a share, setting valuation for the upgrade following that recent sell-off. And they did say that Netflix has healthy membership trends, resilient pricing power, and expanding advertising monetization, as well as industry-leading profitability. They see no signs of slowing engagement, and they believe the company's earnings growth will reaccelerate as advertising monetization continues to ramp, creating an attractive entry point for some of these long-term investors. And so you look at the chart of Netflix, and I mean, it was a pretty brutal gap down last week. We're down now 28% this year. And another great example, although I guess the trend still for year to date is not positive, we are off of highs though now by 47% nearly.
Yeah, this is a stock that does tend to trend, and I don't know if that'll continue, but when it starts moving lower, like it's shocking how far it can go. I mean, this stock was 126, and just traded on Friday $65 a share, which is not much lower than where we are right now. It had that huge move lower in 2022, but once it turns around, it seems to go the same way, and so it's commodity-like in that way. But I look at the choices that they seem to be making as a company, and it's a focus on things that seem to be about engaging you on a mobile device, whether it's focusing on shorter form content, whether it's focusing on video, podcasts, whether it's things like games that they've rolled out recently. Those are all things that tell you that they're trying to drive engagement, in my mind, on the phone, so they can embed ads on the phone device and continue to provide value for potential advertisers. Then on the other side, they're recent leaning into live content. So whether that's roasts, whether that's fights, whether that's NFL games or other sporting events, that's another place that advertising is very, very lucrative still, because you can't. What value is it to watch a sporting event after it already happened? Well, it's very difficult if you get on social media, you already know what happened. So in my mind, they're focusing on live content, particularly in sports, that drives people to the couch, drives them to the TV, and then on the other side, all those other hours of the day, they want to use your phone, and they want you to use Netflix on your phone.
I know, I'm such a hater of the apps. I feel like, because I just hate adding an app. Like, why can't I just watch Netflix at home and leave it there? But I guess I'm probably...
Well, that's what you would do. And so they're looking at them saying, look, we have 16 hours in the day. Most of the time people are at the office, wherever they are, and they're listening to podcasts, whatever they're doing their work. Why aren't they doing that through Netflix?
I guess we'll see, because I do understand the value of having like a one-stop shop type of app for media and streaming. It's just, I'm an anti-app person.
So this is the very last thing that I'll say. Maybe you'll have thoughts on this too, though. By those actions, so this is my kind of conclusion, they're kind of telling us that they've saturated their traditional growth.
Right.
New series isn't driving new memberships.
Futures continue to fade.
To grow in North America. But they're also not really losing them because they're still bringing value. But they're trying to find ways to not just keep you, but to actually have you log into their platform more than you already are.
Yeah, that is true. I understand the logic behind it. I would just be curious if it has the same like reach as, say, like a Spotify or a YouTube, things that have multi-purpose beyond just like true streaming.
And what do we always say? Does does the street buy the story? Right now, it doesn't look like they are.
Right now, it definitely doesn't look like they are. And post earnings, and again, what was a fairly strong, actually, like headline number from top and bottom line. Still, I think the street would tell you exactly how it feels, and it's a bit doubtful right now on that narrative playing out. But obviously, Netflix will continue to watch, as at least seeing some analyst praise today following a significant pullback last week. Now, lastly, here today, we're looking at Boeing, as we did see the Farnborough Air Show kicking off today. So ahead of the show, Bloomberg did recently report the FAA would be allowing Boeing to certify 737 and 787 planes coming off the assembly lines. But the certification process was modified following the second 737 MAX crash back in 2019. But this change is good and does demonstrate progress that they've made really in restoring their trust with chief regulators. And additionally, Reuters did report that the new Air Force One was on track to be delivered by 2028. Both of these pieces of news coming ahead of that, of course, air show just outside of London. Boeing and Airbus have undelivered backlogs of roughly 15,000 jets, which is more than a decade of work at current build rates. But what's more even is that Boeing sees roughly 44,000 net new jets needed over the next 2 decades as demand for air travel doubles. The global fleet of commercial jets is roughly 28,000 planes. But with retirements, the global fleet will be closer to 50,000 planes by year 2046. So the job for both Airbus and Boeing is really to then increase their production. But still, over the coming days, it does seem like any commentary over supply chain, that will definitely matter to the narrative, perhaps even more than new orders. But new orders definitely don't hurt. And we've seen this name trade between around $250 to $190 a share this year. Volatility recently picking up after oil prices spiked amid some of the tensions in Iran. So Boeing was initially out of the gate this year, looking like a different performer than what we've been accustomed to for the last couple of years, but now down about 3.5% on the year and about 18% off of its highs that we've not seen since, January.
Yeah, this is a tougher one, I think, than some of the other tech firms that we talk about, because on one hand, you look at sort of the role that this company plays in terms of its importance on the geopolitical landscape for the United States. It's really difficult to see like a really bad outcome for the company. They have like this embedded, rock solid customer that is just there. They're on the cutting edge to some extent of sort of the space technology stuff and new defense breakthroughs. But you also look at their consumer, or the more consumer focused product, which is like selling airplanes to these airlines. It's like they have one major competitor. So you start looking and we start thinking, as like risk and reward are sort of two sides of the same coin. If there's not a ton of uncertainty with the company as to like, what is going to make it struggle, at the same time, what's going to make it do better than expected? I just don't see a ton of volatility in the outcomes, with the exception of like regulatory headwinds. And we've seen what that looks like. It's been 10 years now. This stuff has really struggled in sort of that headwind. But before that, look before the 737 MAX issues. This is a company that seemed to just be a straight line to the upside.
I know, and it's been a very different, now 6-7 years.
And almost, I think.
I know, it's been a long time since we've seen, more just like stabilization from Boeing, despite the fact that, again, we have seen some really decent, overall delivery numbers, as well as some improvement as far as the regulatory concerns are obviously definitely still an overhang, but at least some of those concerns easing. And so we'll continue to follow the aerospace space, as we will get updates, it's expected at least, coming from that London Air Show. But we're going to leave it there for the top of our show today. Now, coming up next, we will be turning and trading two names reporting tomorrow morning, General Motors and 3M, to see what technical levels to watch heading into those reports. We are seeing some modest weakness in GM today. 3M is slightly higher. So we'll dive into all of those numbers coming up next.
ABCD pattern on Microsoft. So far, it looks like A and B have printed.
moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Intern, this place is incredible. It's where I get all your office supplies. Your golf balls, your fancy coffee, your giant TV. It's everything in one place. It's like Schwab. Everything investors need, all in one place. So yeah, at Schwab they can do everything. Invest, trade, give full service wealth management, and anything in between. I think I'm gonna be sick. We have to buy that now. Schwab.
Invest your way with Schwab. Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network. Welcome back to Next Gen Investing. It's now time for the Chart Master. And today, for a fresh look on the technicals into these earnings reports, we are joined by Kevin Horner to discuss what we're seeing as of late in GM as well as 3M. Just to add some confusion, these are very similar tickers to me, Kevin, but walk us through really what you are looking at as far as GM is concerned, because we've seen a modest pullback today, but obviously earnings could rewrite all of this recent trend. So what are you watching?
Yeah, you're right, Jenny. Good morning. As always, earnings will have an opportunity to kind of shift things for us. But I think what traders are paying attention to now is certainly this 200-day moving average. We're actually dabbling beneath it intraday today. That level comes in at 76, and it's important because the last time we tested the 200-day was back in late May, or mid-May rather, May 19. I've called it out with that rectangle. We had a huge, beautiful hammer candle on the day we tested the 200-day, and then it pushed us higher. We rallied all the way into the $85 ledge up above. And so traders, I'm sure, are looking at this 200-day moving average to potentially act similarly. This is only the really this last 2 weeks gives us a test of the 200 for only the third time really since in the last year since we really recaptured it. So this is a long-term area for trend support. Under that level, we got to eyeball 72, the level we tested and held basically. There's some horizontal support that zone. So, under 72.
S&P starting to climb.
Traders are going to see some changes to their tolerance and comfort for the trend. But at least as long as we maintain...
All right, Microsoft showing an ABCD pattern. Potentially. Only see a B pivot so far, running right back up to the highs.
But obviously, with some of this has pulled back from highs about 14% here. And so now, as we do assess trading GM for example purposes, given the fact that this is not typically like a tech-generating type of volatility event.
Intel making higher lows. Intel. Chips having a pretty good day. Intel making higher lows, trying to make a higher high now. Opening range high. Overhead. All the other Palantir's turning back up. Palantir, Snowflake, Broadcom, Amazon, and Meta are off the highs at this point. Apple trying to turn the corner. Watching Intel here. Who is trading tonight? Earnings. What's tonight?
Obviously not really great at the beginning of the year necessarily, but off of the lows. We made this double bottom from early to mid-March and early May, and that's what led us maybe to an improving trend. What you'll notice since then is that simple 50-day moving average, that might be shorter term trend support. Right?
6%, 10% on service now. Texas Instruments, 9%.
In late June, to 170 or so, and then that's where we revisited that confluence of the 50-day and kind of horizontal support around 154. Now, what we're seeing now after coming off of that ledge for the last 2 weeks is a bit of an improving condition from the MACD down below. You'll notice that histogram, all that red is moving out of our pattern, and we're now starting to see an even keel here, potentially looking at a crossover on the MACD above the signal line, which could be conducive to the continuation of the bullishness. So from a risk reward standpoint, traders are certainly looking at something that's positive for the bulls in this way, because downside risk under 155, but upside potential to the ballpark of 172, the range of prior highs that we've seen over the last 12 months.
Okay, yeah, and again, modest move to the upside today, but has been a bit all over the place. When you try to find a trend, I mean, this name is fairly volatile when you just look at the last year or so, but so appreciate it. Really great technical setup today. Kevin for bringing all of the key levels to watch as far as its recent price performance. Now, as we do think through trading 3M, for example, purposes, Alex, again, not typically like a market moving event, but we'll have to see if we can continue to see some improvement from a price standpoint here.
Yeah, its most recent lows for its move where it closed was around 155, and then also its 200-day moving average was like 158, or its 50-day moving average rather was 155. Its 200-day moving average was 158. So it has a couple support lines below where we're currently at. 155 sort of being that last one, and so that's where I kind of looked at for this example trade. It's a short put vertical again below the market expiring at the end of this week. Now, you'll notice it's a $5 widespread, still only collecting $1. So this one takes a little bit more risk, although it is still risk-defined. It risks 400 with a chance to...
All right, Microsoft's still working pretty well. Intel trying to move back up.
With this, though, neutral to bullish, so still looking for a...
Microsoft.
Through its earnings event, which, of course, again, is tomorrow morning, needed a neutral, perhaps even slightly disappointing reaction for this one to have a chance.
Yeah, and so we will continue to follow those names as both of them do report, of course, tomorrow morning before the open. But we will leave it there for Chartmaster today. Coming up next, though, AMD is getting a boost from an expanded Microsoft partnership tied to next-generation AI infrastructure. We'll dig into what the deal could mean for AMD and, of course, its future competitiveness with NVIDIA right after the break.
AMD just showing a doji for now.
For instant reactions, earnings breakdowns, and hot takes that teach you about stocks and markets. Follow me on X at
Microsoft had a really great day. I did take the 400s off. I still had the 410, 415s for Microsoft. Looking for Microsoft over the next few trading days, maybe to get back up to 410. Get above the 50-day would be nice.
With robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization. And track market trends with up-to-the-minute news and insights.
Microsoft looks like it wants to go some more. Close above the 50-day would be good. Very bullish day.
Subscribe wherever you get your podcasts. Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
Hey, Bob. Hey, Andrew. Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable. Wait, had a stroke? Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time. Jim, my financial consultant. I probably met 20 years ago. Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Gen Investing. Before we get to FOMO, we have got some breaking news. A federal judge has temporarily paused Paramount Skydance's proposed $110 billion acquisition of Warner Brothers Discovery for at least 14 days, following a lawsuit from California and 11 other states that challenged
Microsoft, very strong. Dips getting bought.
to determine whether the pause should be extended. And as you can see there in real time, both Warner Brothers Discovery as well as Paramount Skydance shares are lower. Warner Brothers a bit weaker here in real time, down over 2%. Paramount Skydance actually reacted.
We have earnings coming up for Microsoft on the 29th, Wednesday,
What of course that looks like and what the future of this potential
the
deal
29th.
look like. But now to focus back on, of course, FOMO today, we are discussing all things AMD expanding its partnership with Microsoft with Azure set to deploy AMD's next generation AI chips. Joining us in studio is Marley Caden, host for the Schwab Network, for some more details. And so, Marley, what really stuck out to you here about this development from AMD, which is getting a nice
S&P is trying to turn the corner at the low.
Getting a nice pop here, but I think the bigger story here is that AMD is really setting itself up to potentially be a competitor against NVIDIA. I think that's the story. Microsoft expanding its partnership, announcing it's going to deploy its new Helios racks in its Azure data centers alongside some other big name customers, including Meta, OpenAI, Oracle, just to name a few. So I think the larger story here goes beyond today's headline, which of course deserves the pop to the upside we're seeing, but it's really more about how this could potentially change the landscape. They have had a relationship with Microsoft already, as they have AMD chips powering Microsoft Surface PCs. They're also in Xbox gaming consoles and have been for many years. Microsoft was also one of the first to adopt AMD's MI300X graphics processing unit that rivaled NVIDIA's chips. So this isn't a new partnership, but the fact that they're going to deploy these new Helios racks is a big deal here. And they're also joining these other major companies in this race to grab as much compute as possible. That's the big story here. This is the first rival to NVIDIA's popular Grace Blackwell and the Vera Rubin systems, aiming to give NVIDIA, obviously, a run for its money. Right now, AMD is roughly holds about 4.5% of the market. But with the release of Helios, which is expected at some point in the second half of 26, a specific date hasn't been provided, that could go up quite a bit. I was looking through some metrics projections from the street, sort of how they view this as potentially being game-changing for AMD. And I came across this really interesting note from Dan Newman over at Futurum, and he was estimating the cost of these Helios racks versus the comparable Vera Rubin from NVIDIA. And he estimates the cost for Helios between $5 to $5.5 million, where their estimates for NVIDIA's second generation Vera Rubin is between $3.5 and $4 million. Now, Helios is also wider and heavier than Vera Rubin, but he said he thinks there's a serious case where if AMD continues the momentum they're on and they do a good job marketing this and the Helios rack does perform the way it's expected to perform, he believes that they can get between 20 and 25% of the market. So they can gain 15 to 20+% more of the share than they currently have. And that, of course, would add to hundreds of billions of dollars in revenue. So this obviously a huge potential game changer for AMD if it performs how it's expected to. For Microsoft, it also provides more diversification. There's a lot of conversation around the reliance of these companies on NVIDIA, and if something were to happen and NVIDIA not being able to meet demand right now, this offers some diversification beyond that. It offers you another option, perhaps a more expensive option if Futurum's projections are correct, but they did not disclose the financials of this deal, so we don't actually have the numbers. These are estimates. But they're just saying they're going to start shipping later this year. Capacity details weren't included. Financial term details weren't included. But the company is saying we're very focused on providing the best total cost of ownership, the lowest cost per token, all in. And that's the head of their data center business, Forrest Norrod, saying that. And he continues to say, our customers are telling us that we are achieving that. This,
All right.
as well as AMD's
Dell continues.
today, that Helios has significant benefits over NVIDIA's rack scale systems when you're talking about inference and when you're talking about memory bandwidth and memory capabilities. So a lot of big promises here, a lot of big words being thrown around about superior systems.
But of course, these have to get shipped. They have to get put into practice, and then I think we'll start to see how much broader adoption there's really going to be here. But certainly, the potential for broader adoption is in play right now.
Yeah, do you think that it kind of explains sort of that idea that there's a lot of talk, but not necessarily a lot of detail in this? That the stock initially spiked from basically here to 530, and then it sort of retraced back to where it was, and sort of the move on the news is sort of gone now.
Yeah, I mean, it's not a significant move to the upside, but we're certainly on more than the broader market is. I think it's some. We always want more details, right? There's no amount of information is ever enough information. We want the financial disclosures. We want the terms of the contract. We want these details. We want as much visibility as possible. But I think the story here is just the potential of the visibility. And I think AMD historically has shown up when it said it would, and its products do work as expected. So there is, I mean, I see when I was reading Daniel McNeil from Interim, that base case he has of this potentially adding hundreds of billions to their revenue overall certainly looks rational on its face. All the Helios rack has to do is perform exactly how the company says it's going to. And if they're releasing it, that's likely already been tested and proven.
Yeah, I think it's also interesting that Microsoft, which has not been the same type of performer, obviously, on the year, we're down 17% this year, also seeing a nice lift on this. And so I just do think it shows, like, expanding the breadth of really your cloud offerings. And right now, these companies, especially your hyperscalers like a Microsoft, seem very hungry for more and more of these partnerships and, like, further details, like you said.
Certainly. I mean, Microsoft, I think this is a positive for them because of that diversification point that I brought up. And Alex and I talked about this earlier on Trading 360. It gives you more diversification in your chip supply. We already know NVIDIA has shortages. All we keep hearing about is how demand is outstripping supply. So if you found another part of the market where you can meet your own needs, that's a net positive. So, I mean, as we look at that, it's good for Microsoft. I think it's a net positive for them to show that they have this. And also they can power more of their Azure cloud computing services with this product. So, I don't see the downside for them, but as you mentioned, they are the worst performer right now in the S&Ps. I mean, in the Mag 7, excuse me. So, certainly they need the pop to the upside.
They definitely do. And it does feel like this was maybe a move that was even more needed for Microsoft than AMD, which is coming back from last week, the volatility that was for anything with this, like, high AI and high-tech exposure, frankly, especially these names that have continued to outperform, like AMD still 139% this year. So with all that being said, as we do think through trading this name now, for example, purposes, Alex, leaning into the fact that I'm sure there's a lot thinking we're pleased to see names now discounted relative to their recent highs. I mean, we're off of highs in AMD by 12.6%.
Yeah, and this is still a name that I think is really important to the AI infrastructure trade. So if you think that there's going to be a recovery there from the recent volatility the last couple of months, perhaps you could see a recovery in AMD back towards the highs. Its earnings are, I think, scheduled for the first week of August. So I went out to July 31st, the expiration, looked at buying or call butterfly, sort of representing the end of this month and giving just over a week and a half until that expiration date, looking for a test of those highs. So maybe not the highest probability of success trade, but a chance to make a fair amount on the risk.
All right, we're coming into 138 towards the evening session. We're still looking for the S&P to make $1 make some attempts to move off the lows here. Nothing yet.
Looking for a rally by the end of next week.
Okay, and AMD, one that we check it on here pretty much every single day, so I'm sure we'll be discussing that name throughout the week, but we will leave it there for FOMO today, and so appreciate it to Marley Caden for bringing all of that insight on the latest with AMD and Microsoft. But coming up next, markets continue to hit, relatively speaking, new highs, but is Wall Street becoming too dependent on AI spend? We'll discuss where leadership is shifting and why small and mid-cap are really starting to gain ground right after the break.
She's got your smile.
Carl.
Yep, your number one broker's here to welcome your new little dependent.
Actually, we invest with Schwab now. They have everything we need all in one place.
I can set up her college fund.
I've been learning about trading strategies. Schwab helps me generate retirement income.
All this Schwab is everything you need is making me cranky.
Does somebody need a match? Invest your way with Schwab. Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Welcome back to Next Gen Investing. Alibaba is moving higher, actually about almost 6% on the session here after previewing a new AI model that it says can compete with some of the most powerful tools from Anthropic. So for more details on this development, we are joined by Sam Vadas, host for Schwab Network. And so Sam, tell us more on the details here and what really stands out to you about this move from Alibaba.
Well, it's kind of like a confluence of factors lately. We've seen Alibaba on a pretty good run. There's been a number of endorsements. Obviously, we had that Apple news. It's been benefiting from the rotation as well. But it's starting to get credit and recognition now, Jenny, for what it's doing around AI. Obviously, you mentioned this preview of this latest model, that's Qwen 3.8 Max, and it says that it is second only to Anthropic's Fable 5 here. And the overarching sort of bigger story here as far as the larger picture is concerned is whether China is narrowing the gap with the United States. And I think that's really what many are focused on. Is this another DeepSeek moment like we saw with Moonshot with Kimi K3 last week, particularly because these are open weight, open source models. So obviously another question as to whether China is doing this a whole lot cheaper, what this is going to mean for the likes of OpenAI, for the likes of Anthropic, looking to obviously go public as well. And you know, a lot of what we talk about, guys, in the US market is based on the assumption that the US is ahead of this race as far as, you know, leading in artificial intelligence. And now you get stories like these, which really start to challenge that narrative and make you wonder if China is managing to do things cheaper and more effectively, and challenging the best that America has to offer right now. And so a lot of analysts are talking about whether this is intensifying the so-called AI arms race at the moment. So you have had Alibaba, as far as some of the details are concerned, basically coming out, making these claims, as I mentioned. This is a preview model. As I said, developers can access this.
Microsoft still hanging out below the A pivot.
Come up to Moonshot, obviously, last Friday came out with this new model, the Kimi K3, which kind of unnerved markets, rattled investors all around the world, because everyone was wondering whether this was another sort of DeepSeek type of moment. And it's basically upending perceptions as to where China is up to in all of this at the moment. Fresh concerns about whether China is managing to do all this stuff cheaper. It's raising questions about the spending and the level of spending that we always talk about here. And that's going to be really interesting going into earnings. The fundamentals are still very important for a lot of these companies that we talk about every day. But the big question now is going to be about cost. And the big question for a lot of enterprises are also, which remains to be seen at this point, is whether you see them switching to these sort of cheaper Chinese models as well. Because, you know, Qwen has 2.4 trillion parameters, Moonshot has 2.8 trillion, that's the Kimi K3. So these models are also sending shares of the local rivals over in China, the sort of newly IPO type of companies like your Minimax and your Drupu down in double digits as well. So really interesting in terms of what these companies are doing. But Alibaba's still down on the year, but certainly making up some of that lost ground over the last month, guys.
Yeah, and having, as you mentioned, I mean, a very nice couple of last few weeks. It's despite the fact that we have not seen, obviously, that be necessarily the brightest thing for here U.S. tech, but seeing this really interesting right now comparison, again, we saw last year, as you mentioned, DeepSeek between Alibaba and a lot of these U.S.-based tech companies. So a development that we will definitely continue to follow. I think it's just a fascinating story in which these Chinese tech companies are emerging. So Alibaba, 5.7% today. But so appreciate it, Sam Vadas, for bringing all of those details here for Alibaba's shares today. But now we'll shift our focus to broader market expectations for the second half of the year, with improving earnings and a resilient economy that continues to remain relatively supportive for stocks, but there are some looming risks tied to the AI trade, as we mentioned really throughout today's show. So for more details, we are joined by Patrick Ryan, Chief Investment Strategist at Madison Investments. Patrick, thank you so much for joining the show today. We have seen market leadership broaden beyond mega cap tech names this year, but how important is that shift to the durability of this bull market?
Yeah, well, first, thanks for having me on. And I think you're right. I mean, the first thing I think we like to note about the shift and kind of the rotation is you've seen a lot of volatility. The good news is that there's been a lot of places that have been continuing.
All right, looking for a higher low, looking for a C pivot, looking for a C pivot on Microsoft.
Small cap stocks, big cap stocks have done well all year long. And I think that's really just a testament to what's going on in the U.S. economy. So a continued strong consumer jobs market is questionable, but overall, retail sales have looked good, even better on a real basis here just last week. So there's a lot to like about
My Thinkorswim just rebooted. I'll have to pull that back up.
Really since late 2022 into the AI story.
So do you feel it's been a bit of a misconception then that it's been this sort of AI isolated reasoning for the market's, let's just call it general performance higher? And that if that's the case, is that kind of what gives you confidence in the next half of the year?
Yeah, if I hear your question right, I mean, I think it's unquestionable that the AI and the earnings being generated through what's going on, the build-out of the AI have been absolutely critical for the market and what we've been seeing in market performance for the last 3 years. I guess we're just more comfortable looking at the state of the economy, the liquidity behind the markets, jobs market being solid again, and all the signs you'd be looking for a healthy economy are there. You're not seeing really any fundamental cracks. So when you have these bouts of volatility, you see small caps kind of plow through. That gives us encouragement that the overall market is continually pretty comfortable with the state of the U.S. economy when you see those things happen.
Microsoft pushing a bit higher.
I mean, what we see right now, some of these small and mid-cap names that have started to outperform. I mean, do you think that this is also a sign that we're seeing more of that breadth sort of, trickle out into other areas, not just heavily focused on anything tied to like AI and just a lot of the enthusiasm that is obviously followed everything tied to technology and AI right now?
Yeah, I mean, there's little fingerprints of AI within the small and mid caps. If you tear apart those sectors, you'll see that the small and mid cap technology and the S&P 400 or the S&P 600 have actually outperformed the S&P 500. So clearly there's some positive impacts there. But I think when you look at just what's happening within the small cap space and what it means for the market, it's unquestionably positive.
When you look under the surface and you take a look at some of these names, and one of the metrics I look at is VIX EQ, which is sort of the average constituent volatility in the S&P. It's over 50. Now, some of that's due to the fact we've got earnings season just around the corner. But then you look at VIX, which is 18. It's the commonly cited, fear gauge. We put sort of the air quotes. Those two things are almost historically different at the moment. And that dispersion, that rotation is really masking just how volatile some of these trades really are. As someone who's a steward of capital and making investment decisions for individuals on a long-term basis, how do you kind of navigate that environment that is certainly different than the one of the previous decade?
Yeah, I mean, obviously the volatility has been immense. I mean, it's so much is being masked throughout this entire year, as you're mentioning. But I think when you kind of have to go back to it and look at, where are those risks really taking place? And obviously those risks are taking place largely in the evolution of the AI story. So if you could be grounded in the fact that earnings on a broad basis, if you look at whether that's on the large cap, obviously driven by the AI build out, and the small mid cap space, earnings growth estimates have been taking up as well. So I think if you just kind of look at the earnings story, that gives you comfort to get out of the way of some of the more volatile areas of the marketplace where you're seeing potential momentum shifts left and right, and you can really kind of get a much longer term view than really just what might the next 3 to 6 months trade be. You can really get a better sense of what's going on in the economy and markets and kind of pull yourself out of that volatility and focusing too much on the day-to-day momentum shifts, story shifts. AI story obviously has changed immensely in the last 3 years about who's going to benefit, who's it going to hurt, but kind of getting a little bit closer to the economy out of the equation.
Yeah, it'll definitely be an interesting earnings season to follow, as I'm sure we will see all of these themes emerge in some way over the next coming weeks. But so appreciate your time today. Really great conversation. Patrick Ryan, Chief Investment Strategist at Madison Investments. Now, coming up next, last but not least, it's time to discuss under 30. Pegasystems reports earnings tomorrow afternoon, with investors watching whether AI-driven automation demand can keep supporting its growth. We'll talk through more of the earnings expectations coming up next.
All right, so Axon on the move here. New York Fang looking for some more. Okay, Microsoft's starting to move a bit better now. After a higher low, a C pivot. New York Fangs are still mixed though.
Schwab Network delivers real-time market insights, live from the NYSE, NASDAQ, SIBO, and beyond. From earnings to economic data, we cover what matters as it happens. Streaming 24/7, anytime, anywhere, free on schwabnetwork.com.
Morning movers, be the first to find out what's shaping early market action. Check, check. Options Corner, Futures Focus, technical analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services. Schwab Network.
Available anytime, anywhere, on any device for free.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
I'm Nicole Pedalides, live at the New York Stock Exchange, and this is the Watch List. Your midday view into the trends driving the markets with a sharp focus on technology, innovation, and companies leading the next wave of growth. Big movers, real-time interviews, and insight from analysts, founders, and market voices you trust. The Watch List, 2 p.m. Eastern, only on Schwab Network.
Welcome back to Next Gen Investing. Now, Pegasystems reports after the close tomorrow, and expectations are focused on whether the company can keep translating demand for AI workflow automation into stronger revenue and earnings, and hopefully rewrite some of the recent downturn we've seen in shares. So joining us now for some more details is George Tillis, Senior Markets Correspondent for the network. And so, George, walk us through the street expectations here. I mean, this name is down 47% on the year and 54% nearly from its highs.
Yeah, the reason being, Jenny and Alex, this is a stock that is in the software space. We know the application software stocks, for the most part, have been laggards associated with potential competition and being crowded out from programs, or if you will, software that can be easily created through programs like Anthropic or even ChatGPT. But nonetheless, this is a stock that's very much tied into the ecosystem like ServiceNow. It's an enterprise app software company, provides workflow automation services, productivity-enhancing technologies. They also have a CRM engagement, if you will, customer relations management software engagement platform, as well as cloud-based infrastructure platform. So it's like a Salesforce and a ServiceNow sort of combined. Much smaller than those two companies, by all means. If you look at market cap of the business, it's around 5.4 billion, forgive me, with sales around 1.7 billion. So it's much smaller. I think that's probably why it's been suffering more so than the other names I mentioned, like ServiceNow or Salesforce, because of the high beta, low price stock aspect of the business. But nonetheless, they are going to be reporting earnings tomorrow. And ServiceNow is also this week, by the way, I believe on Thursday. They're going to be reporting an expected 43 cents on an adjusted basis. Now, that's expected to be higher by about 55% compared to 28 cents for the same quarter last year. And sales are expected to be quite modest. I would say modest to good, around 11.5% increase at 428 million versus 384 for the same quarter last year. So I think this is going to be a pivotal quarter for software names. I'm not saying it's going to be pivotal for this name, but we may end up seeing some of the hyperscalers like Meta, Google, which is also reporting this week, perhaps talk about some CapEx spending slowdown. If that's the case, then the market may interpret that as something that'll slow down artificial intelligence integration, perhaps provoke a less competitive threat narrative around these stocks. But again, ServiceNow and Pegasus will be.
All right, so we're starting to rise here.
Very much tied into each other in terms of the types of markets they serve.
Yeah, this company, Alan Trefler, I think, is the founder and CEO. He was one of the innovators on the initial AI models that were playing chess at an elite level. I read that. You would think that this would be a company that's on the forefront of this innovation, but George, it sounds like you're saying it's one that's being disrupted.
Well, that's the thing. That's the narrative around what's going on with software. The ones that are going to adapt and the ones that are going to, be able to negotiate what's happening from a competitive landscape, also on how they're going to be pricing software going forward. Because that's another problem software companies are having. Their models in terms of perceived pricing are being threatened because a lot of customers are taking this opportunity to renegotiate pricing. And that's also impacting earnings growth. But nonetheless, these are businesses that, based on their competitive threats from AI, may end up thriving based on their adoption or adaptation to AI. And that's to be seen going forward. So again, not all companies are suffering as a result of AI. Some are more than others. But nonetheless, this is an interesting company in the context of automating workflows, which again, autonomous artificial intelligence is trying to do anyhow.
Yeah, good place to leave it. So appreciate it. Pega today down about 3.6%, but earnings, of course, tomorrow after the close. But that'll do it for us for Next Gen Investing. For, of course, this Monday, we have the watch list coming up next.
All right, looking for higher lows. Microsoft's performed very well today. I did take some 400s off. I have the 410, 415s for September. Looking forward to follow through tomorrow. It would be nice to see a close above the 50-day. Microsoft.
Welcome to Schwab Network, where real-time market coverage meets expert strategy. From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it, to leave everything behind, literally come across the entire world. I think that we totally met what their wishes were.
All right. Microsoft trying to climb a bit more.
It is a big week for the markets and for your money. Welcome to Power Lunch alongside Steve Leisman. I'm Kelly Evans. Brian will be back tomorrow. Earnings are in full swing, and the next test for the tech tree that's coming up. Alphabet, IBM, and Intel on deck. Will the results further catalyze this rotation out of tech or jumpstart a rebound from a rout that's run too far?
And I'm either here because it's a big week or Brian missed his, had a late flight. I don't know which one. But plus, oil front and center is center again as tensions escalate in the Middle East. Gas prices topping $4 a gallon. What it means for inflation and your money is coming up. And small caps, big returns. The Russell 2000 outperforming the SP 500 this year. Earnings are expected to grow.
There goes the S&P. Nice move here.
The names that should be on your watch list.
Looking forward to all of that. Let's begin with this pivotal week as tech faces a major test. Alphabet headlines a very busy earnings season, just as investors are growing a little nervous about the AI trade, maybe more than a little. Today we're learning the smart money, they call it that, has been heading for the exits. According to Goldman, hedge funds have been dumping tech stocks at a record pace. They were net sellers in 6 of the last 8 weeks and have cut their exposure to the sector by about 10%. That's the largest pullback since Goldman began tracking the data more than a decade ago. Joining us now is Creative Planning President and CEO Peter Maluk and Turtle Creek Chief Market Strategist David Spica. It's great to have you guys both here. Peter, take the ball and run with it. I mean, is this an opportunity to get into tech in some areas like that, or should people be on the sidelines in the crouch position until we get through some of this?
Well, first calling hedge funds the smart money to me is
That was my question.
hilarious.
Is it?
Like as a group, it kind of doesn't matter what their strategy is or what their purpose is. They tend to underperform the market over 10-year periods of time. It's unbelievable. So I really don't look at that as an indicator. It might actually make me feel the other way.
Well, I was going to say maybe it's not for you an indicator of the smart money or anything like that, but it could be what we talked about last hour, which is the tech trade weak because something fundamental has changed, or because momentum players like these have decided to run for the hills. And if so, there's not anything, then it's an opportunity.
I think it's gotten a lot more dangerous. I think when you have the
Okay, S&P continues.
last 15 years, everything was moving.
Where to it? 7,500 S&P, SPX.
Like even if you got away from the Max 7, you got to an Oracle. Every year, subscription-based service, they're going to get more users and adjusted for inflation, and it didn't get any safer than United.
Broadcom, Snowflake,
Recurring revenue. Well, now that's very susceptible to AI replacement, and so
Axon, Palantir, all of these driving higher. DoorDash well above session highs, opening range highs.
I think back to you had Excite, Lycos, then you had Yahoo, which looked like it was going to dominate, and then way later, Google came, and I think that it's just not as safe as it was just 2 years ago.
I just want to ask a question about that headline, which Kelly did. Hedge funds reduce their exposure by 10%. And we kind of are giving it like it's a negative thumbs down connotation. However, that would seem to represent a small percentage of what they probably made on their AI investments. So the dumber headline would be they didn't reduce their exposure by 10%. And it's not necessarily a thumbs down on AI to take your money of huge gains off the table. Does that make sense?
That makes perfect sense, Steve. And I agree completely that right now what investors need to be doing is you don't want to bail out on AI and technology, but you do want to look at other parts of the market that are attractively valued where you can provide some diversification.
Take some free house money and play it.
Absolutely. The cyclical parts of the market, some of the more defensive parts of the market, broaden out into those areas, and that'll offset some of that volatility we're going to continue to see in AI and hyperscalers and tech, et cetera.
You have J&J.
I do.
EOG.
Yeah.
JP Morgan. I mean, so that is kind of this bull market. People always say the leadership is the leadership the whole way through.
Right.
So in other words, even if you own a J&J or a JP Morgan, you think that's fine. I feel like it still matters to you what happens with what Google says on Wednesday. Like it still matters what happens with the chip trade. In some ways, it feels like kind of the market rally, this whole business cycle might still have a lot to do with what they say, even if you look, JP Morgan's definitely an AI play. Look at what we heard from the banks with the capital markets and everything last week.
I think what we have to recognize, though, Kelly, is that we're likely seeing a peak in earnings and revenue. Earnings growth is expected to grow 31% over the next 12 months. We haven't seen that kind of growth since the depths of the recession in 2008 and COVID. That's not sustainable. Revenue growth is peaking. That's not sustainable. When these things happen, the market's going to start pricing in slower growth, and some of the more defensive areas of the market are going to benefit from that. I'm not saying bail out on Google and Microsoft and Amazon. I'm saying look at other parts of the market that are very attractive that can help offset some of that volatility, which is going to continue over the near term.
And this growth is top line growth, right? We're not hearing about companies that are making these great bottom lines through cutting expenses or workers or anything like that, which means that there's a pretty solid basis on these earnings. And I mean, I will say just a little skeptically that this is peak earnings. Nobody expected this. Mm-hmm. I get you that these are really ridiculously high numbers, but where's the profit coming from?
Well, I think the market, a couple different things. I think you've seen the stock market go from over 8,000 companies to 4,000 companies, right? So we're seeing every single industry winds up with just a few winners, and that's it. It doesn't matter if we're talking about phones or search engines, and ultimately the AI companies that we use, whether it's going to be Anthropic or OpenAI or what, there won't be 5 winners. And so you wind up with these mega winners, which allows for a little bit of market of earnings expansion there. And we're also seeing every other company is now an AI play, to your point. We are seeing every company, whether you're financial services or energy, you're going to benefit from the efficiencies that come from AI. What the market doesn't know yet is how much are we gonna benefit, and that's why you see some uncertainty.
I want to be excited for the phase in which it's not about momentum. I love
S&P still climbing.
But when Capital One, to take a pick by Chris Davis, when Capital One comes out with this blowout earnings report because they say it's thanks to AI. In other words, when that to all of the stocks and all the rest of the universe, when that trade Peter runs out, and not to get you started on a whole thing about capitalism versus socialism, which that could be a separate discussion, but in this case, that creative destruction does seem like an important part.
I think it is a big part of it, and I think that you've got this combination of everyone should benefit from this technology that makes them more profitable, creates market expansion, which becomes somebody else's opportunity, and because we don't know just how much AI is going to be able to create. I know we talk about it a lot. These companies that had moats, it doesn't matter if it's Microsoft anymore. The moats look a lot more unsteady than they did before. So if you're diversified,
Citi, by the way, says the Mag 7 moniker is no longer relevant. Yeah, I mean, we've all kind of observed this, but they're looking for a growth cluster. But it's the
Okay, there goes Cerebrus.
The Mag 7. This is Scott Croner. Is dead as a construct for assessing large cap growth dynamics.
I think if you look at specific industries, specific companies, it's got a lot more dangerous, a lot easier for competitors to come in, a lot easier for titans to fall. But if you're a diversified investor, it's never looked better because this is going to drive earnings. Whenever you have technological advancement from this, historically, it doesn't matter if it's the internet revolution or the steam engine, the economy expands when you're in a period of time like this.
Can I go down the socialist and capitalist route?
We were just talking about coal.
I mean, profits are up 30%. Wages are, right?
Yep.
This is not inuring to the average worker. And when we look at our All America survey, we see a lot of concern about the cost of goods, the cost of housing, the cost of healthcare.
Okay, Cerebrus is going here. Watch Cerebrus.
Well, you raise a good point there, Steve, and that's one of the reasons why I think it's important to get a little bit defensive. The cost of everything has gone up, right? We've got the K-shaped economy. We've got stubbornly high oil prices, stubbornly high interest rates. All of that will eventually have an impact on the economy and on corporate earnings growth. And so you have to factor those things in as an investor.
Look at these numbers here, just so you know from our survey. Okay, we asked it in April. We asked, are you reducing your spending because of higher prices? 47% said they're reducing spending on essentials. That's up 6 points at a time when gas prices fell.
Yeah.
Same thing for spending on out-of-home entertainment. Same thing for credit card use. And I acknowledge the Michigan survey did go up when we reported these data around the same time. But this data is showing me there's a lot of pain out there.
Absolutely, there is, and that pain is going to be felt throughout the broad economy. Now that
Apple's starting to turn.
people that are driving economic growth on the consumer side have benefited from these rapid gains in the stock market, and they're using that to fulfill their spending. But the people on the lower end are having to take on more credit card debt. We're seeing default rates rise, and so that is something to keep in mind. And again, as we move through a slower period of time and as earnings growth slows down and top line growth slows down, you have to be cognizant of that. You have to be careful where you invest.
I would ask the question, which society has produced more inflation? A socialist one or a capitalist one? And, yes, we've had inflation. We've had over the past 6 years, probably 20% of that goes back to what happened during COVID with policies where the government came in and had to bail out the economy, which is great. None of us wanted to see the GDP drop 70%, but that surge of inflation as a result got us probably the first 15 percentage points of the inflation.
I'm going to give you an answer that I learned from Gregory Clark, who's an economic historian who operates by a single rule. A higher than normal rate of return in an open market economy shall not stand.
Yes.
I think what
will be competed away.
David and Peter might have been talking about, especially Peter, was sort of monopoly type pricing that's going on. When he's talking about winner take all and they have earnings power.
But here's what happens.
So that is inflationary.
You have upstarts. Those upstarts compete against one another.
If you have the upstarts.
You get to and look at the New York Times over the weekend, how AI is causing a huge surge in the number of new business creations. You know how important that is? That's
true.
The new jobs.
Agreed. That is disinflationary. But if you have winner take all with pricing power, that's inflationary. Peter, last word.
Let me just answer for Peter. No. All I would posit is, in order for these industries to go from a raft of startups to the 4 major players, yes, they can. That's how we got to the Mag 7 effectively. Then what happened? Innovation came along, AI came along, and the Mag 7 are now cannibalizing one another. That trade's over. That's literally what we're talking about. Their oligopolistic status is here no longer, thankfully due to innovation, which has come along and pulled them out of those monopolies. Peter, what would you say?
Well, that's right. The question is, how long does it take for that pricing to work itself out? But your chart about earlier, and your reference to socialism versus capitalism, where you see the same 54% like capitalism, but 14% more people are for socialism. I think it's because in the last, since COVID, we have not experienced capitalism. Capitalism looks like it's problematic until you compare it to socialism and everything else, then it's the best. But when you look at what happened after COVID, with the big companies getting bailed out, that's not capitalism. Business owners getting forgivable loans, that's not capitalism.
Interesting.
People getting stimulus checks, not capitalism. Creates inflation, benefits asset owners. The working class can't buy the food.
Kelly wins the segment because she said it was a whole nother show. So either we do a whole show on this, or you can go come to dinner and we'll do a show
Can I
about it.
respond to one thing you guys said? Which style brought more people out of poverty? Socialism or capitalism? There's no question it was capitalism. Is it perfect? No. But over the long run, it is the best system.
Oh, can we leave it there?
I agree.
Peter Maloof, David Speaker, thank you. Really appreciate it. We are still just getting started. We've got a lot more to get to. We'll give you the big picture on small caps, the latest on the volatile chip complex, and a check on sports betting volume in the World Cup. But first, it's all about oil, Iran, and inflation. We'll get you the very latest with Kepler's Matt Smith on the Iran situation right after this.
All right, looking good, coming off the lows.
Welcome back. Oil is back on the boil. Brent crude topping $90 a barrel earlier for the first time since mid-June as Middle East tensions heat up while Iran says diplomacy is still an option. 3 American service members have been killed over the weekend. Meanwhile, Iran-backed Houthis have opened a new front declaring a maritime embargo at the Bab el-Mandeb Strait, a critical Red Sea choke point for Saudi oil exports. Let's bring in Matt Smith of Kepler, the commodities intelligence firm that owns ship tracking platform Marine Traffic. Matt, help us out here. Are there ships? Sorry, are there ships going through the strait right now?
So it has slowed right down, Steve. So not surprisingly, you essentially have 3 different routes to get through the Strait of Hormuz. Well, 4 if you include going dark. But you have top, middle, and bottom. So the top is the Iranian route, and that's the one that we are seeing basically mainly used now because the Iranians really have control over the strait still. We were seeing other tankers moving through the Omani route, which is at the bottom, that hugs along the southern coast there. We have seen tankers being targeted, and so that's why we have seen things slow right down again here.
How many are getting through?
We've had less than 10 over the last, individually over the last 3 days here, just in terms of tankers. And again, it's mainly the Iranian stuff. They are ballasting vessels. They are empty. So for all intents and purposes, the strait is basically closed. There may be the odd one that is managing to get through dark, but essentially we're ground to a halt here again.
Are you surprised, given this data, that oil in West Texas is only 82 and Brent is only 90? I keep hearing, and I've heard from essentially day one of this conflict that there is this point, the operational minimum, and Steve, it's going to happen. It never quite happens.
The thing to bear in mind, Steve, is if you look at the products, that's perhaps where the pain is most being felt. So if you look at a barrel of gasoline, that's over $140 a barrel now. You look at diesel, that's over 70. And so that's where the pain is being felt, because while we have lost about 10 million barrels a day of production on average over the last sort of 4.5 months, a lot of that has been offset by simply refineries not running because they haven't got the crude to run or they have dialed back. And so you just have an absence of products from the market. We're seeing product inventories being drawn down. The US is a great proxy for what's happening on a global basis because the US is sort of 20% of global demand. And so this is the challenge that we are facing. You've got on this on the screen here right now, Bab el-Mandeb.
Right.
That has been one of the saving.
Okay, Microsoft looks like it wants to keep going here. Microsoft.
Saudi Arabia has been able to reroute about 3.5 million barrels a day of its crude across to the Red Sea and then sending it south, and that's going into Asia, going into the likes of China, India, South Korea, Taiwan, Thailand. And the problem is now you've got the Houthis that could potentially now close Bab el-Mandeb, at least for the Saudis, to stop these flows from going. And then that's what ups the ante probably in terms of oil prices.
Matt, can you do the back of the envelope world geopolitical oil supply replacing the Strait of Hormuz for me? 20 million is what's missing, right? And then 4.
That's in crude and products, right? The best way I like to look at it, Steve, is you look at in terms of production. And so simply what we've had, production lost about 10 million barrels a day.
Okay.
In terms of refinery runs, you've seen probably 6-7 million barrels a day over that 4.5 4.5 month period as well. The difference in between those two numbers has been inventory draws. And so that's probably about 2 million barrels a day. And then we've seen a bit of an increase in oil on the water. And so that's why the oil market is being able to remain largely balanced. The problem is in the product side of the picture.
Looks like Microsoft wants to run here.
That's why you're seeing record refining margins.
There's also a big piece of China contributing to the ability to get through this. How long can they, am I right that it's 2 or 3 million barrels a day of effort from China in terms of their inventories? How long can they go on with that, or will they go on with that?
Steve, they've dialed back their imports by about 5.5 million barrels per day here. They have simply dropped out of the market. In retrospect, absolute genius move here. Rather than going into the market back in March, April, paying over $100 a barrel here, they've just sat this out. They are drawing from inventories, but not too much. So it's under 1 million barrels per day. What they have done is slash their refinery runs. And so they've cut those by 3.5 million barrels a day. That cannot continue forever here, but that's how they've been able to get away with it so far. They do have 1.2 billion barrels of oil in inventory still, and so they could go on for months here staying out of the market. But it's unlikely that they'll want to do this through into November, December. We still see the Strait closed simply because they've spent years building up these stockpiles because they need them, and they're not going to just draw them down willy-nilly here.
Matt, we have to go, and I really appreciate this right now, but very quickly, how long can the U.S. keep drawing down the SPR?
Not too far longer. We've already driven it down by 105 million barrels down to 300. They're getting below 300. We're starting to get into much further, Steve.
Matt, thank you so much for the rundown. Appreciate it.
Yeah, he's got it all.
Yeah,
I mean,
every number he has.
He does, and on a day like this, with all of these the news flow, Matt, thanks. And all of this has gasoline prices. Look at that, back at $4 a gallon for the national average after going down. I want to say, Steve, we were at $3.79 a couple of weeks ago. We've had a lot to grapple with in the inflation story, and that has Treasury yields higher today as Middle East tensions do reheat. Again, there's the 10-year at 4.59, 2-year at 4.21. Let's bring in Rick Santelli for more. Rick, does this mean we're going to be stuck up here at these levels?
Well, you know what it means. It means that the market's a bit nervous considering what the experts are saying. Now, granted, Steve pointed out in the first chapter of this book, the experts were not correct. But look at what's going on with gas prices. Listen to some of the comments by ex-Fed officials. And the market's getting a bit nervous in front of that July meeting that happens next week. So, yes, rates are going up. Look at a chart from the 13th of this month with 2-year note yields. Their close on the 13th was the current high water mark. That yield was 4.29%. We're not far below that. That close was the highest level going all the way back to February 25. Look at a 10-year. We're trying to move up a bit, but we still haven't taken out that May 19th high yield close at 467. However, it's certainly making a beeline to get there. And as you pointed out, Kelly, we're a little over $4 national average today. But the low water mark since the Feb 27th of 28 war began was what, somewhere between 379, 385. So it's not like it's jumped a huge amount, but it's the psychological issues associated with that. And this isn't just the two double D's here. This is big time. Now, we had a new prime minister in the UK, and his first comment was, a little budget flexibility, trying to rejigger austerity versus stimulus. And the market didn't like that comment. Interest rates moved back over 5% in their 10-year. So there's a lot of moving pieces here, but the nervousness really makes it one direction. All yields internationally see pressure to the upside.
Hey, Rick, I'm so glad you're here because I put together a chart. I don't know if you can see it, but what I did is put together a chart that looks at the Fed funds probabilities versus oil prices. And they were married for quite a while, and then they went their separate ways. So oil prices came down. It came down pretty sharply, but the yield stayed high as to the probability of Fed rate hikes. So what's going on in your opinion? Is there a lingering concern about inflation inside the view of what's going to happen with the Fed, or is it something else going on?
This reminds me of the Doolittle operation at the beginning of World War II, okay? You have these big bombers trying to take off on aircraft carriers with small runways.
Same scenario here. The 10-year, I don't need to see your chart. I know the 10-year is most likely and has stopped paying a lot of attention to crude. Today's a great example. Crude oil is basically unchanged. 10-year yields are up. Why? Because of nervousness of how much runway we have, how sticky inflation is still up from chapter 1, how it's up from post-war, how we didn't get a huge dip after the potential settlement, and the fact that it's unsettled, and we have to compete in issuance every other week with all these other countries. It's just the elixir of all time that seems to be smoky with higher yields.
You look at that, Kelly. You got the orange. That's exactly what Rick was just talking about. You got the 10-year yield, which is sort of up, and the oil prices have declined, and they separate. So many things went back to the way they were pre-war, but yields remained high.
Right.
And to me, this is, I think, it could be the market reacting to the Fed talk, or the Fed talk reacting to the data or the market, which is this lingering view of there's going to be lingering inflation out there, and the Fed will have to respond
When
to it.
people keep saying that real rates have risen, what's the Steve what does that mean?
It means that inflation has remained high, but yields haven't moved. So you take off the inflation from the yields, and the real yields or the inflation yields are actually higher, which is more restraining. So let's give the last word to Rick on this.
Yeah, Kelly, you hit on something so important, Kelly. If you look at the break-evens, we talk about it all the time. 10-year break-evens hardly unchanged from pre-war levels, but the notional, the nominal rate of 4.59 is significantly higher than 3.94%. So that is where your real rates have extended. Now, it doesn't mean we have to stay here, but what it does mean is there has to be an adjustment. So either the break-evens are going to go up or nominal rates are going to go down.
Well, I'm hoping for the latter. I think along with everyone, including every prospective.
I think the stubbornness has been
That's
what's
my
been interesting to me. And we have to say goodbye, unfortunately, to Rick for timing. But Rick, thank you for sharing your wisdom with us this afternoon.
So polite.
For something. Coming up, a lot of green across your screen. We're looking at the chip stocks today. Where is the best risk reward in the chip universe? Morgan Stanley's chip analyst joins us next.
All right. So let's see. Apple, that might be worth a shot. Apple turning back up. Calls being bought off the lows. The tech group seeing the best performance. Oh, boy. Hope everyone's having a good day. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is 2:30 p.m. Watching Apple, Microsoft. Looking for another little push for Microsoft. Oh, boy. Futures fading a bit.
Earnings season is heating up with a number of mega cap names set to report this week, like Alphabet, Texas Instruments, IBM. They are scheduled to announce on Wednesday. Intel releasing results on Thursday. And our next guest says the recent sell-off in memory creates a compelling entry point. Let's bring in the analyst Joseph Moore of Morgan Stanley. Every time Joseph enters this, making like a more kind of every time. So I appreciate you playing along.
Futures drifting lower.
Trade broadly. Which camp are you in? The camp that says even if China's AI models are different and they have Chinese memory chips that are cheaper and their stack is going to disintermediate ours, that more compute is still better for memory chips in the long run?
Yeah, I think memory is at the center of every methodology for AI training and inference. So I'm very bullish. I would say this is an unusual cycle in that you're going to get these second derivative sell-offs like we saw in April, like we've seen in the last month, because the tea leaves that you're reading are a little bit different than you might see. But the true north here is the strength of data center and the belief in data center customers that memory is going to be a binding constraint on the ability to ramp AI for really multiple years. So those second derivative concerns, the things that have been dragging down the stock, I think to me have created an interesting entry point here.
Although I just wonder about the old saying that the cure for higher prices is higher prices. And so much of the gain and the earnings gain in these names has been from higher prices that at some point, is there going to be another side? I know they have locked in contracts for multiple years and so on and so forth, but are the companies who have to pay these numbers just going to find another way? Is CXMT the answer?
Apple trying to follow through. There goes Apple.
This year, as you've seen in the price of oil, it doesn't get anywhere near the focus on a broader macro sense. We're going to see something like $800 billion of memory inflation. So it's significant, and that cost has to be borne by the electronics industry, by the capital spenders. But there really is no substitute from high bandwidth memories, some of these central memories that are needed for AI. And so I think we'll find ways to do more with less. I would say that. We had a roadshow with Jensen Wong last week, and he was sort of talking about that memory is going to stay in short supply for many years, and token growth is 10x, and memory growth is much less than that. So we have to find ways of getting smarter about getting more of DRAM and NAND, and we will do that. But I think, to me, this is a cycle that is noteworthy. The amplitude that we've seen so far of the cycle is noteworthy, but I think going forward, it's the duration that I'm really focused on. Is that this could be, really a 3-4 year situation if AI remains robust, where memory remains this tight.
Joe, I'm personally a little bit pissed about this. I got to tell you, because I'm the guy in the rock and roll, my little rock and roll band, the Stella Blues Band. That
you're more than little.
I do the recording, right? And I'll tell you what I'm used to. I'm used to going out and buying a new flash drive and say, wait a second, 128 gigs is only. It used to be $80 for 128. 64. Thank you. But now I go out.
All right. Apple on the move.
A terabyte drive and a 2 terabyte drive and a thing, and they're like $100 or $50 more than they were before. I mean, of course, they weren't all available back then. You didn't think about 3 and 5 terabyte drives, but these are real money that coming down to the consumer. I don't think there's many people who consume as much data like this.
All of a sudden, you're seeing it.
You do a set of music on video, and it's a gigabyte, and all of a sudden that stuff adds up. So you're telling me, and by the way, from an economics point of view,
S&P continues to fade.
That always dragged down the index.
Exactly.
It's not dragging down the index anymore. But Joe, I want to recap what you're saying. This is a multi-year event, is what you're saying.
Yeah, you're paying a tax when you buy that flash drive on the AI strength that we're seeing and the shortages that it creates. And it's certainly creating a lot of angst in the PC, smartphone businesses, and the other users of these technologies. But when you run a 75% cumulative annual growth rate for AI spending out for multiple years, it gets bigger each year. And we're still growing at a pretty fast rate. So that shortage is intensifying. And I think when it ends, it won't be because there's more supply, it will be because of these other markets it'll be because there's acceleration in AI spending, and that's not something that we're foreseeing anytime soon.
Sorry, Steve.
I have one word for myself. It's called compression, right, Joe? Compression. I gotta start compressing all these files.
But that's only the cure for higher prices.
It's
higher
compression.
Joseph Moore, thanks very much. Senior semi-analyst at Morgan Stanley. Mega cap this, mega cap that. The S&P and NASDAQ are both up 10% this year, but small caps are the real winner. We've got a small cap investor joining us next.
All right, Apple continues trying to climb here. Apple headed back towards VWAP.
Look at memory mix, and they only see the cyclical business, and they bet on a downturn. What we're talking about
Broadcom just off the highs. Broadcom, Intel.
it's gobbling up massive amounts of memory. We're talking
Okay, Apple. Be nice to see Apple regain a lot of today's lost ground. Okay, just kind of turning the corner here. Apple. Apple climbing.
Does it change what we've heard from the likes of the Chinese companies more recently around some of the models that they've been developing and coming out with? How these companies here in the US are actually managing costs? How closely do you think all of this is going to be scrutinized in light of what, say, for instance, the Chinese are doing right now?
Yeah, look, I mean, since the Kimi release and a lot of the views of improved models out of China that are open source and more importantly open weight, and we have started to see a kind of rotation out of the big trade that's powered the market the past year, right? Which is semiconductors, memory, hyperscalers, anything that is really the AI capex. And I think the concern is it's mainly driven by the obvious observation that
Adobe above its opening range high. It only took all day, but it's back above its opening range high. Adobe. Apple still pushing.
There's very real risk. I think the countervailing argument would be that look, there's this is the Japanese paradox point that look, if the price of a commodity goes down, that demand may go up. If it's elastic enough, you may end up in a situation where actually so many other use cases for AI that were previously too expensive are now available, and then the demand and quantity of consumption of this goes up. So I think the chip stocks, which we just discussed, this affects them less because whether or not it's powered by open source or closed source model, they stand to benefit. It is concerning though for the open AIs of the world and the closed source labs.
Futures fading again.
Trillion-dollar valuations are being thrown around. We're seeing increased competition not just from Chinese open source, but even other AI, US-based AI companies like the Metas and Googles. So I think it's become a very crowded space, and there's a legitimacy to the world whereby AI becomes a game-changing technology that completely revolutionizes how society functions. Yet the actual production of intelligence in these models end up becoming utilities, end up being commoditized, in which state of the world the value may flow to other parts of the stack outside of just the labs themselves.
Yeah, and as my previous guest said, only 2% of us are actually paying for all of these models. So it's really interesting, guys. We've got to leave it there. Thank you so much for joining us today. John Freeman, co-founder, senior analyst, Ravenswood Partners, and founder.
Apple pulling back in a little bit. Hit VWAP and got rejected. Future's still fading. And Microsoft just off the highs.
at Schwab is powered by Ameritrade, unlocking the power of think or swim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Welcome back to the watch list. I'm Stefan. It's coming to you live from the New York Stock Exchange. It's time now to take a look at the sectors that are moving markets into the close today. We're joined by Alex Coffey over in Chicago. We just had Rachel on talking about the levels of the S&P.
All right, we got a little bit more than an hour and 20 to go. Hour and 19. Heat map is still, a good bit of it is green. With breadth improving today. Breadth. New York Fang looks okay. New York Fang. Okay. We're still just below the 50-day. We need to pop above it. Maybe tomorrow. RSI. Trying to turn back up and move higher. MACD stochastic still fading a bit.
Some of those neo cloud providers bouncing back today, but the big one that stands out is Apple. As Apple has almost established itself, Sam, as a bit of a counter trade to this AI infrastructure trade. It's almost been a bastion of safety when this trade is under pressure. So with the bounce back today, at least in some of these memory names, the Microns of the world, the SanDisks of the world, you see a little bit of weakness in Apple today. So that's something to watch, especially as we roll into this week. And I know Alphabet is not a part of this sector, but it's broadly considered, technology, even though it's classified technically under communication services.
A little profit taking here and there.
We get ServiceNow earnings Wednesday afternoon. I think it's very possible that's going to be the deciding factor on ultimately whether this is a good week for the market or a bad week for the market.
Yeah, certainly going to be a tone setter. Really appreciate it, Alex. Thanks for the breakdown on what's happening in tech today. Let's move on for our ETF watch list now segment. Joining me is Mike Coe, who's the chief strategist at YieldMax ETFs. Mike, long time no speak. About SPX options.
Yeah, so this is an ETF that, like many of our other single stock option ETFs, basically takes a proxy position in SpaceX and then sells upside call spreads to harvest a little bit of income or premium by selling that upside. But it only sells the upside a little bit, so you still get that participation in the event that the stock moves very sharply higher. Essentially, if you did something like a covered call,
Amazon fading. Amazon, we took profits earlier into strength.
We've seen that options traders are highly interested in. In fact, one of the points I would make about it is that options listed very shortly after the IPO, and on the first
Okay. Let's see, what's Palantir doing? Palantir.
the third busiest single stock option traded after Tesla and Nvidia. So there's clearly a lot of interest in
Palantir fading from the high of the day. Above the 50-day, maybe we get a follow through this week. Futures continue to drop off here. Futures continue to drop off.
Yeah, I mean, I think whenever you're looking at a single stock strategy of any type, the first and foremost investor that is going to be interested in it are those that are interested in that underpinning stock. So in this case, obviously, only people who are interested in having some participation in SpaceX would be interested in this strategy. But within that subset of investors, and that's a pretty big subset, the question then is answered by those who want some participation, but also need or want some regular distributions. This is a strategy that pays distributions weekly. So effectively what's going to happen is an investor in this strategy
S&P continues to drop off here.
Participation in the underlying equity, slightly lower volatility, and regular distributions.
We went from being up 40 points down to red on the day now. Okay, we're below the 50-day. Not a good deal. This is not a good deal. We really need to stay above the 50-day.
That's a structure very much like this one in SpaceX, and the other one is one called NVIT, NVIT, and that's what we call the target 25. So that doesn't make the same weekly distributions. That one pays them monthly, and rather than trying to maximize the distribution on any given week the way NVIT does, NVIT is looking to pay about 2% in distributions monthly from the options income overlay strategy. Overall, we've got too many to mention. Obviously, Tesla is another one that has a lot of interest. Strategy stock is one that historically had a lot of interest. Obviously, crypto has gone through a little bit of a crypto winter of late, and strategy stock has followed suit. But that is another one that we have considerable investment in.
Okay, are you looking at SK Hynix at all?
Well, I mean, everybody's looking at SK Hynix, aren't they? One of the issues that you face is number one. This was one we were interested in probably even before the ADR was listed. Creating a RIC that trades options on an ordinary share overseas is a little bit problematic. But SK Hynix is definitely
Apple turning back up now.
as we see options trade on the ADR.
Awesome. Great stuff, Mike. Always appreciate it. Thanks for dropping by and breaking down some of your single stock ETFs for us on SpaceX. Mike Kovac, Chief Strategist of the Yield Max ETFs. Coming up, we will take a closer look at some of the large options trades to watch in the market. Tom White will drop by with a closer look at the big moves for Netflix, Marvel, and Intel. The watch list will be right back.
We got an hour and 12 minutes to go. Hour and 12 minutes.
That's when markets make headlines and traders make decisions. From earnings shocks to sector rotations, we're tracking the catalysts.
So not much progress. Not much in the way of progress. We had a few stocks run up like Microsoft today. S&P threatening a move, a lower levels. We are hanging in there. So if you look at the equal weight index, RSP, the equal weight index is sitting on top the 21-day NYSE. So I did not add back the SPY put flies for a hedge. I do have VIX calls just in case. Not a very large position, only 10 of those for 2025 call spread for September. I wanted to put the put flies back on, but I got preoccupied. Should have done it at the high of the day, obviously. Right there during lunchtime. That's as far as we made it, and we rolled over. Let's see what IWM looks like. IWM. 50-day. S&P.
Expecting that relief rally after those earnings came in mixed last week, Sam. You look at they beat EPS, they missed on revenue. Growth rate on revenue is up 13% year over year. Not bad, right? But they've seen their growth rate slow.
All right, let's see. I did want to sell some put premium on biotechs. This could move back to the 50-day. We'll see what it does tomorrow. I want to see it start trending again. XLE could sell some put premium on this. It is trending higher. XLE. Okay, so selling puts underneath the 50-day. Energy's working. You could sell a put credit spread down here to finance the calls. So sell a put credit spread, take that money, buy calls, or buy a call spread. I forget what they call that. Let me just look at that. XLE put credit spread. XLE. What is the implied volatility? That's one thing we should check, right? XLE. XLE. All right, pretty decent. Selling call spreads. Nah, I'll pass. Implied vol is 27%. Fix is pretty low. 89% risk reversal. Really? Huh. 89%, huh? XLE. Could run into resistance right here, I guess.
Despite this slide that we're seeing. So maybe some people taking some shots here, even though the stock is weak. But this trader, I think the key with this type of position is they've given themselves plenty of duration. As I mentioned,
55s. 55s are what? 55s are a 23 delta. It's not enough. Not enough premium. The August expiration, they're only 60 cents for a 23 delta.
Elevator moves to the upside, come elevator moves to the downside. Marvell is one of them. Shares are still up about 4% today, so having a nice little rebound. But as you mentioned, that just a month ago, this stock was hitting all-time highs. We're down 40% from those levels. But that being said, it's still up over 130% so far this year. They make the custom silicon and optical interconnections for the AI infrastructure build out. Now, if you looked at their last Q1 earnings, revenue was up about 27.6% year over year. The data center segment that grew 76% year over year basis. So finally starting to get.
All right, we have an hour and 6 minutes to go. Hour and 6 minutes. I'm your host, Cousin Eddie, coming to you from theclosingprint.com. It is Monday, July the 20th. Just a little over an hour to go. Apple is rising a little bit more. Apple so above VWAP now. Apple, can it go? Apple, can it go?
This was a cash secured put that this trader sold. It was out in the September monthly options, so about 60 days to expiration. A trader sold 2,500 of the September 200 strike puts, basically at the money. They collected an average credit on these puts of $32.47. So collected a lot of premium. So the break-even where this trader starts to lose money is below 167.53 over the next 2 months. That's about 15% below the current share price. So taking advantage of this pullback in the shares to basically say, hey, I'm either going to get to keep this hefty option premium that I collected if the stock goes back above 200 and remains there, or this trader's willing to buy the shares below or stays below 200, 167.53. So they've got put volume in there. It's elevated, but you got to remember when looking at put and call volume, it's not always traders coming in and buying puts for a bearish type of position. This trader is taking advantage of the
S&P trying to turn back up.
Selling cash secured puts with the expectations it's going to go back
Microsoft had a good day. It's taking a little profits off. It's not falling off at the moment, which is good. It's holding near the highs.
Yeah, bear market territory for Intel going into those earnings on Thursday after the close. This will be a big report because of the slide that we've seen. Now, the stock is still up about 165% so far this year, so it had a parabolic move. Also, they issued better than expected guidance last quarter. Although their revenue only rose 7% last quarter, they did improve their margin. CPU sales, supply demand issues right now. Supply not enough to meet that demand at this point. So I think this is going to be an earnings type of stock over the next few days till we get to that report on Thursday. But same thing here. We saw a trader taking advantage of this over 30% pullback from recent all-time highs. Sold some September 90 strike puts. They sold 3,600 of these, collected an average credit of $10.25 to the break-even where this trader starts to lose money is below 79.75 over the next 2 months. That's 19% below the current share price. Call volume doubling puts here.
Okay, I'm going to take a 2-minute break. I'll be right back. Watch Apple here.
They just want to keep that elevated option premium that they collected on these puts, these out-of-the-money puts, and profit that way. Or if the stock does fall post-earnings, they'd be willing to buy the shares at 79.75 or that nearly 20% below the current share price at a discount. So, yeah, another put seller here at Intel.
And also rallying alongside AMD's news, which is interesting, 3.5%. But yeah, I mean, this has come off from 140 back in June. So this is going to be a really big one as far as the earnings report is concerned. Tom, really appreciate it. Thanks for highlighting all those big trades in the market today. We're looking at a mixed picture as we approach the close for this Monday afternoon with the S&P 500 pretty much flat. The Dow is lower, the Nasdaq's higher, getting propelled by chips. They're back in rally mode, although we've lost a bit of steam. Matt Seven's next. Thanks for joining us on the watch list. I'm Sam Bias. You've got Market on Close coming up next with Marley Hayden.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide. No overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy. From the opening bell to the closing bell, we've got you covered. Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute. With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand. Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it, to leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years through purchasing of houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
It's 3 p.m. on Wall Street, and this is Market on Close. I'm Marley Caden coming to you live from our Chicago headquarters. Let's take a look at what's coming up on today's show. We'll discuss the state of the private credit market and how talent flows could be an indicator for the top performers in the group. Then we'll take a look into the health of the economy and its impact on the broader equity market. And we'll close out the show with a discussion on the future of the chip industry and key metrics to monitor for the direction of the semiconductor trade. As far as what I'm watching today, AMD higher after announcing the expansion of its partnership with Microsoft Azure. Under the expanded agreement, Microsoft will use AMD's Helios rack scale solutions, marking an increase in competition between AMD and NVIDIA. Alibaba is gaining ground after unveiling its upgraded Qwen AI model. Alibaba says the Qwen 3.8 Max is compatible to the leading frontier AI models and second only to Fable 5. And the Paramount Skydance Warner Brothers merger has hit another snag today. A U.S. district judge has issued a temporary restraining order, putting the deal on pause for 14 days following a lawsuit from 12 states' attorneys general. Lots to talk about today, but first let's check in with where our markets stand as we near the end of this trading day here. The S&P mostly unchanged right now. The NASDAQ is up about 0.4% at 28,712. On the Dow, we're trading a 0.5% lower at 51,872. We've shed about 275 points on the session. And the Russell 2K down 1/3% at 2953.43 right now. As we look at some of our futures products here, the 10-year ticking higher. We're now with a 6. We're 460. The dollar is at 101 after topping above 101 earlier in the session. Gold, though, falling on the session. We're at 40.1220 a troy ounce. Crude oil is at 82.96 a barrel, and the Bitcoin has found itself above 65,000. We're at 65,305. I do want to get to some of the top stories that I was just mentioning there, so I'm going to bring Jenny Horton to the conversation, co-host of Next Gen Investing. And Jenny, let's start with this AMD Microsoft deal. It's an expanded partnership from what they already have, but the big focus here is that they'll be deploying that Helios rack system.
Exactly. So that's a good place to start. Microsoft deploying AMD's Helio rack scale AI platform to help power the frontier model inference workloads for its own AI services and Azure customers. AMD said that it expects those shipments for the Helios platform to customers, of course, including Microsoft, to begin really in the second half of 2026. Helios combines AMD's Instinct MI455 with X graphics processors, as well as the 6th generation EPYC Venice CPUs and its networking technology and Radeon Open Compute software. And so Microsoft said that it will also be introducing 2 new Azure Virtual Machine series powered by AMD's 6th generation EPYC processors, the Azure HD V2 series. Workloads, as well as
all right, can we get a little bid here? Push it a bit higher.
More of the semiconductor design applications. So both of these companies expanding the deployment of these data processing units across Azure's networking platform also is helping integrate AMD silicon with Azure Boost. But the goal is really better cloud networking performance, which is critical for various AI workloads that are dependent on, of course, the vast data movement between chips, servers, as well as storage. And so the market rate there is that Microsoft definitely wants further infrastructure options for its AI trading, its inference, its enterprise workloads. The bullish really takeaway here is that this commitment does strengthen AMD's credibility in AI infrastructure and also say it's like longer-term data center growth expectations. The more cautious their takeaway.
Okay, Apple picking up a bit more.
Half of 2026, so investors will need to wait to see, what that actually then looks like. This is obviously not going to necessarily change the near-term threat from, say, NVIDIA. Bottom line, it is a strategic window for AMD as it does position the company to be more of this really serious full platform player in AI infrastructure. But again, it is still a story that seems like we're going to have to see how this actually plays out. But as you can see today, the market obviously reading this as a win is that AMD is higher by about 3%. And I think even more notably than that is Microsoft, well, having pulled back a bit from highs earlier today of the session, it is at least reacting also favorably. And that's where you really need some lift because Microsoft down 17% this year.
Yeah, certainly. And this is a nice boost for AMD, too, because as they try to prove themselves as a potential competitor to NVIDIA while having less than 5% of market share, they do have some big-name clients already. They've got Meta, they've got OpenAI, they've got Oracle. Now we add Microsoft to that list. All of them will be deploying Helios racks. So certainly, and then there was this broader diversification conversation that we've sort of been having throughout the day, that it's showing these companies are diversifying because NVIDIA has already said that
demand is far outstripping supply. We've heard that story from nearly every earnings report and every CEO in this space. This is another option. So if there are shortages, they're sort of protecting themselves here. So I think that could be part of why we're seeing the pop in Microsoft too. But as you mentioned, they needed a bit more than AMD did.
They did need it a bit more than AMD did. And I will say that AMD, I mean, is one of these stories of like remarkable volatility because we pulled back from highs by about 13% here, while still remaining up 138% this year. And I mean, you just can't say it enough. What other names, really outside of specifically semiconductors and memory source names, can say that they're up 225% over a 12-month basis, while still being technically speaking in correction territory? I mean, I think that any signs of stabilization from this specific AMD Micron type of the space will also, I mean, bode well for the overall market that does read through these names so much right now for overall price performance.
Absolutely. And I want to pivot to this next story too, because we have quite a few to get to today. But this one I'm just fascinated by, this Alibaba's new LLM that is releasing the update to Qwen 3.8.
Okay, Shopify, you're saying? Shopify. Okay, let me take a look at Shopify. Microsoft starting to climb again. Shopify.
It was sort of thought of as a laggard, and now the tides have really changed in the last few days here.
We've seen this threat that is almost being deemed as like the DeepSeek 2.0 threat looming back in, which has also been playing into some of the weakness we've seen in AMD. Of course, I think this all ties very nicely together. But Alibaba did preview this new AI model over the weekend, claiming that it challenged
Futures trying to hold the low here. Futures. Apple's still climbing. Apple looks like it could scoot a bit higher. Watch shorts covering Apple.
They did also go on to say that this LLM has roughly 2.4 trillion parameters, which is a measurement, of course, for basically how much knowledge can be stored. Alibaba described it as
Apple shorts are starting to cover.
currently available, comparing it to other leading frontier AI models, only second to Anthropic's Fable 5. But this news does come on the heels of Moonshot, of course, launching its K3 model, which has roughly 2.8 trillion parameters. These Chinese companies have really done an interesting job shaking up the AI race, especially those looking to compete with like Anthropic, OpenAI. But the new announcements do come as chip stocks and other names that have carried a lot of the momentum, as we didn't note, have sold off as investors appear to be rotating somewhat out of the AI picks and shovel stocks. And I was looking at a note today from Citigroup that did highlight that these developments from Alibaba underscore an accelerating AI race in China, where companies actually continue to leapfrog one another, saying that they actually believe the rapid iteration could foster a model-agnostic environment, with enterprises adopting multi-model strategies to select the best model and best price for each task, which then reduces the overall defensibility of any single model, making Alibaba, they said, in the long term, a leader in this space.
Okay, there goes Apple.
To further competition in the AI model space, especially as we
Apple's starting to go now. Apple going now.
From Anthropic and OpenAI, and investors could be looking to Alibaba as a way now to add that LLM exposure. And so we knew it was coming when they first said they were designing their own chips. You had to know that they were continuing to then expand those capabilities. But positive move from Alibaba.
Okay, Apple scooting higher. There goes Apple.
Several weeks, as we've climbed now about 31% from lows, but again, do remain fairly challenged. We're still off highs by about 38%.
I was talking to Samuel Kerr from Burger Market earlier today about how potentially disruptive these models are going to be, both the Qwen 3.8 Max and the K3 from Moonshot. And he said, if you can get something that does the job good enough or even great for less cost, who's going to choose to pay more for something that's just a little bit better? And
Such a good point.
It was a very valid point. And there's another component. Moonshot actually temporarily paused their subscriptions for their new K3 system over the weekend because they said that daily sales were up about sixfold since the model launched last week. But Alibaba, interestingly enough, actually has a 36% stake in Moonshot.
There goes Apple.
Competing against a company.
Nice pop in Apple.
Investment, so I guess you could sort of view that as a win-win.
I would say definitely, because right now, while it doesn't necessarily make sense to own, I mean, it's somewhat the same with, like, you look at the overlap between, like, ChatGPT and Apple and Meta and Microsoft, you could understand, I mean, why that is obviously occurring in China. It's occurring here with our major hyperscalers, where it does feel like there's a lot of forces tied together. Does also create a bit of a risk, though, because obviously when things are working,
Nice little pop.
all of your exposure is going well. When obviously
Apple.
trends change, there's a lack of adoption, and we are so preliminary to be further exposure means there's further risk to that very, very lucrative but very still growing LLM business, as well as just like broader AI.
Well, Alibaba having a nice session. Its ADR is up almost 5% today on this news. But I want to pivot to our.
All right, we got about 49 minutes to go.
In the markets, I know you would probably say
Apple climbing.
Skydance, Warner Brothers Discovery merger that just can't seem to forge ahead. It just has another roadblock in its way. This time, one that we knew could come. I don't know if it was expected to come, but there's now a restraining order in place in front of the merger.
Yes, and so I think that this should not be shocking to anyone. I mean, every analyst note I read when we finally got confirmation of this deal with Warner Brothers Discovery and Paramount Skydance was like, we'll see about antitrust concerns. Now, a federal judge has temporarily paused Paramount Skydance's $110 billion takeover of Warner Brothers Discovery. A U.S. district judge in Oakland did say earlier today that the companies were ordered to hold off on consummating the deal for at least 14 days. Paramount and Warner Brothers hoped the deal would close as soon as July 22nd, of course, just 2 days from now. But California and 11 other states sued to block the mega merger back on July 13th. The states alleged the deal, which seeks to combine, of course, 2 of the 5 largest studios with hardened competition for film and TV and cable TV distribution. But the judge did schedule an August 3rd hearing to whether to extend the hold indefinitely or what that exactly will look like. They said that the states showed that serious questions are going into the merits that remain in their challenge to the merger. But the deal would give the merger company control of roughly 27% of the market for films widely released to theaters, which the suit does claim. Now, Warner Brothers and Paramount also allegedly would control more than 30% of anticipated blockbusters, as well as widely released films and large production budgets. So post-merger,
What is Microsoft doing? Microsoft.
The newly formed entity, Walt Disney, Universal, and Sony Pictures. So Paramount has until June 4th of 2027 to close the deal under this current merger agreement, but it must start paying Warner Brothers a daily fee of $7 million starting September 30th until the transaction is complete. Daily fee of $7 million. And I mean, I know we talk trillions and billions of numbers so frequently. That is still a lot of money and one that you do not want dragged on longer than perhaps need be.
No, certainly. If you break it down by quarter, it's $650 million a quarter.
So much money.
And if they don't clear this deal because of regulatory concerns, remember they have that huge breakup fee, which is in the billions, a $7 billion breakup fee that they are responsible for if it is regulatory concerns that block this deal. So interesting reactions in the market today. Paramount Skydance only down about 1%, but Warner Brothers Discovery trading lower about 3.5%.
If Warner Brothers has had a bit more of a move right out of the gate, we've seen that move worsen now, and of course we've seen it hours go on since we got this news, but it's actually kind of amazing that Paramount Skydance hardly even making much of a move at all, maybe showing that this was fairly expected. I mean, this was of note. Pretty much everyone was discussing this was a looming threat that now we're at least getting some answers and some more timelines too.
Yeah, and the timeline of Paramount initially.
Low ticker -800.
All right, making new lows here.
22nd, and then of course the TRO request coming 2 days prior to that. Not a huge surprise, but a major potential legal hurdle. As the next step is whether there's
S&P making new lows.
if they can get a preliminary injunction. So of course this is one we will be talking about a lot lately, which we will be thrilled by because we love leaders.
I love the drama. Give me more of the back and forth.
It's so built for Hollywood. Perfect. I know. So Domino's had in terms of the numbers, but more so in terms of the market reaction from my perspective. A little bit of a head scratcher here in that they are trading in positive territory. But take us through the numbers and where the optimism is coming from and where potentially some of the flags were in this report.
It seemed like overarchingly, so this was better than feared, because I also was a bit mystified by the reaction, which was strong right out of the open this morning. As I mean, there were things to like. Revenue beat expectations. They also did highlight the strength in their supply chain, which helped offset some weaker restaurant demand. Global retail sales rose 3%. They also added 209 net new stores.
All right, Apple coming back down now. Okay.
Positive order growth across both delivery and carryout, despite a more challenged consumer spending environment.
Microsoft.
Actually translating into gaining more
Okay.
back. But again, we're gaining market share back. I don't think it's necessarily a pure, growth story here from Domino's, which is illustrated by earnings. Missing expectations, falling roughly from a year ago. U.S. in-store sales also gave a little to love, with it rising just 0.1%, which was a pretty substantial downturn from last year's 3.4% growth, also missing the street's expectations. International same-store sales also declined about 0.1%.
I was hoping that Microsoft would close above the 50-day. That would have been nice.
But this reinforces concerns they are feeling pressure from a more cautious consumer and a broader quick service restaurant industry slowdown. Pricing for a lot of these restaurant names has been just still so challenged. And so still, again, there were things to like. The key positive was order growth, market share gains, and the store expansion. But the bigger concern was the stall in same-store sales growth, especially because it's not just here domestically, it's also international as well. So I think that transaction growth will be a focal point if this can eventually translate into stronger sales and earnings growth during the second half of this year. They did give pretty positive commentary too, that they right now are really highlighting this growth potential stronger than ever. So that's optimistic commentary, but you look at the chart and it's a lot less optimistic. We're down 21.5% this year, 33% nearly from highs that were made, I mean, well over a year ago, or roughly a year ago now, I should say. I mean, and so I think that lowered expectations, maybe this was enough to clear the bar, but obviously, you know, low expectations, we've seen companies sell off for far less. And so the price will tell you what I think the street cares about. And seemingly, it does feel like there's conviction that the turnaround is really underway.
Yeah, I mean, the CEO said that he believes the order growth is the most important driver of their long-term growth strategy. But as you highlighted, when you see comp store sales fall domestically to the slowest pace in 5 quarters, I was just surprised to see them up at all, let alone up. I think they were up 7% in pre-market trading when I got up. It was
Future's still drifting lower.
Interestingly, we're seeing pizza fare far worse than burgers or burrito bowls.
Okay, we are. Wow, any lower and we'll be a bearish engulfing candle, taking out Friday's highs and lows if this keeps going. Oh, I wish it wasn't the low of the day. I'd love to add some puts. What's VIX doing? VIX, I got VIX, so that's helping out. I got the 20-25 call spread. Let me take a look at what VIX is doing here. VIX, yeah, that's up a bit. For September, the 20-25 call spread for VIX. Had lots of hopes. Had big hopes that we would stay above the 50-day S&P 500, but not the case today. S&P 500. If it wasn't for the New York Fangs doing fairly well, probably be worse off. Would be worse off. You know, it's still hanging in there. This feels like it's going to slip right down through this. Friday we had buyers at the low of the day. Today we opened up above, faded back down to below the 50-day on the New York Fangs. I guess I have to wait until tomorrow and see what the vote is, if we're going to get a follow through or not. We got earnings up. We got Intel on Wednesday. That could have a big impact. Most likely will have a big impact on chips, Micron, SK Hynix. Okay, that's back down to the low of the day. Okay, I can't catch a break. SK Hynix. Home Depot trying to turn up. Home Depot. Okay, maybe that does something here.
Especially as we've seen reports that, like, Meta, for example, plans to enter this cloud services and neo cloud space. Some have read this as a worry sign that maybe neo clouds are a stopgap measure until the hyperscalers' own data does come online, in which the case that neo clouds could be over-investing is the going fear. But shares of Iran have also sold off on some specific company issues, as they did see, like, a retention equity package for its co-founders that raised some concerns earlier this month. But Monday's announcement, and of course today's announcement, as I'm saying, really has helped ease some concerns over the high cost of building data centers. And I think that's why we're seeing such a huge move to the upside, as this right now at least can continue to show where CapEx is obviously going.
Okay, what is Microsoft doing? Microsoft. Okay, trying to turn back up Microsoft. Again, to be sneaky here at the end of the day. Microsoft. Should never have sold those SPY put flies. Should have never done it. Did it during the opening range too, which is even worse. That's all right. Can make a mistake every once in a while. What are those going for right now? Let's see. Might be making a big deal out of nothing. SPY put flies. SPY put flies. Okay, let's see. Got out at 18 cents. 27 cents. All right, so 26 cents. So 8 cents difference. Not enough to be worried about. Only had 10 of them anyway. SPY put flies. I had the September 740, 735, 730. If you look at SPY, that's these right here. 740, 735, 730. All right, so we're getting close to this wing. I had 10 of those. Had 10 of these here. I took them off at the high. I thought we were going to just keep going, and then right when I did it, I saw the 40,000 blocks. There was 40,000 block sells at 748 this morning, as in 748 the price. So I saw that this morning, right after I took the trade, took it off. So it was up here. We hit 748, and the block the shares crossed the tape on the level 2. 40,000, 4 in a row. Shares sold it at the highs. That's these right here at the bottom. You can see right in here. It was too late. I couldn't catch it. It went too fast. They took my trade. They took my trade too fast. Okay, what are we doing here? What's going on? SPY. 5 minute. That's the way it goes. So it'd have been it's only $80. $80 I missed out on. Still, it's $80 that would have been in my P&L for a day. Okay, shorts are starting to cover a little bit. Shorts covering. We got about 36 minutes to go. Just less than 36 minutes to go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Monday, July the 20th. That's the second time I did that. So let's go back and look at the watch list, because I put the watch list together thinking that we were going to see more weakness as we started the trade on Monday. Okay, so some of the defensive names, like Philip Morris, those are doji for now. Philip Morris. Let's see what else. What else? Okay, SPY value. I was looking at SPY value. Okay, so we had SPY value outperforming SPY growth on Friday. Okay, SPY V, SPY value. So you can see they sold it today. So 1 day change. And if you look at SPY growth, SPY G, that bounced. So that's something I was looking at for the watch list. Rivian, what's Rivian doing? Rivian, a little bounce. Rivian. Jazz Pharmaceuticals, the pharmaceutical stocks, looking for these to follow through. Defensive here as well. Jazz Pharmaceuticals, RXO, the logistics and trucking, logistics, transportation, like, let's see, JB Hunt, no follow through. Old Dominion Freight, SBLK, the shipping, maritime shipping, Star Bulk. What did commodities do today? DBC. Okay, DBC is rising. This is not something you want to see. If you're bullish equities, you want commodities to be moving lower. You want commodities to cost less, not more. You want the 10-year yield to move lower. So we got a few things. Starting off the week, we had, I believe, 4 indicators were bullish. Yeah, 4 were bullish, 8 were neutral, 8 were bearish. So we were leaning more bearish anyway. Bearish neutral. Let's see what breadth looks like. Breadth. Okay, these are all pointing down again. NASDAQ, you can see, is turned up. NASDAQ. Big cap, mid cap, small caps, these are all pointing lower. Oh, how many stocks advancing today? 163. We had 260 earlier. So we lost 100 stocks to the declining side of the ledger. Okay, so New York Stock Exchange. We know the New York Stock Exchange is pulling back. Let's go look at S&P equal weight. And the number of stocks trading above the 20. This is probably pointing lower. Yep, pointing lower. So don't be the salmon swimming upstream, as Crimson Heart used to say. This is pulling back, so that's telling you more stocks are losing support of the 20, losing support of the 50. Okay, so we lost the 21-day. So we could be headed back to the 50-day. I just don't want to buy puts at the low of the day. Oh, man, I wish damn it. Gonna beat myself up. All right, Apple's still rising here. Apple's still going. Nice recovery, Apple. We hit the 9 EMA or got close to it. Now we're back above the 5 EMA. And if we had enough time, we'd probably be back into Friday's range. SPY's still going here. Apple's still going. Sorry, Apple still. Okay, let me look at Apple because I have more Apple that I can sell here. Apple.
So
3, 4.
really know financial instruments well? Do you how is your industry expertise? I think the Financial Times just came out today.
27. Okay, so I have calls that expire next Monday. Apple calls that expire next Monday. So I got all of this week to try to make up 5 points, 3 points. Need to get above 335, 340. Also have 340, 345s, and I have some 327.50, 330 calls. All for July 27th. 327.50 is the closest. 327.50. All right, 327.50. Okay, we're above that now, right? Okay, I'm about to tag my maximum profit. 327.50, 330 call spreads. 330 is the maximum profit for these spreads, so I'll take these off into strength here. This continues to move higher. This is looking good. Nice recovery on Apple. Nice recovery. On the move, Microsoft. Nice follow through on Microsoft. Apple. Okay, nice volume into the end of the day. Look at the volume coming in, Apple.
Those always come up raising concerns. As you look at the market overall right now, Audrey, what are you seeing as some of the potential vulnerabilities? Of the market in general or private credit? Of private credit. Well, I mean, the hyperscale market, obviously, it does seem like demand has kind of kept up. that's the most important part. Investments, may not pay off on the duration.
Okay, Meta turning back up too. Apple looking really good here. Apple looking really good. Apple ripping here.
Always make borrowing risky. So there's a lot of both capital markets risk. There's, as you mentioned, kind of macroeconomic risk.
All right. Yeah.
There's still a lot of macroeconomic uncertainty with geopolitical events and inflation. So it is kind of a question.
Apple.
Again, why we see a lot of our firms making big bets on talent, even at the beginning of the senior ranks, at the VP level and above, that has really proven themselves and can execute and have
Okay.
skills that are valued by managing directors. That's become much more important than it may be in kind of a better market where a rising tide will lift all ships.
We really appreciate you taking the time to be with us today. Sadly, we have to leave it there, but we really appreciate you joining us from the floor of the NYSE. That's Audrey Sims, partner at M Research. Coming up next, we will discuss the health of the U.S. economy and its impact on the broader equity market. That's all next on Market on Close.
All right, S&P turning the corner as well. Okay, maybe I can get some puts after all. We've got, 27 minutes to go? 27. If we get a nice rip here, I'm probably going to buy some put flies. Let's see, S&P, where are we going to be here? S&P. Look at that. Apple's recovering very nicely. It was a big red candle before. All right, we're back into Friday's price action now. Nice. So S&P 500. Okay, S&P 500. Nice recovery, Apple. Microsoft also turning up. Okay, so can we get above the 50-day in the next 26 minutes? Can we get above the 50-day? It's close enough for horseshoes, right? It's a spinning top. We're not closing at the low of the day at this point. Okay, Microsoft, Apple. Apple's still going here. Microsoft. Okay, so nice little channel down for Microsoft.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
I'm Diane King Hall on the floor of the New York Stock Exchange. When markets react, we are live with analysis that matters. Watch now, only on SchwabNetwork.com.
Sometimes you could have done better. The same goes for where you invest. Level up and invest smarter with Schwab.
Welcome back to Market on Close. I'm Marley Cated. Netflix is lower today despite an upgrade to buy from accumulated Philips Securities. The firm maintained its $110 price target on the streaming giant, citing valuation after the stock's recent sell-off for the upgrade. Philips sees no signs of slowing engagement and believes the company's earnings growth will re-accelerate as advertising monetization continues to scale.
Apple,
Let's check in with how
Microsoft.
the media space is faring today here as we look at Netflix, like I mentioned, lower on the session, down about 2%, while Disney trading down close to 1.5%. Paramount Skydance is trading lower, of course, on that temporary restraining order blocking its merger with Warner Brothers Discovery for the next 14 days. And Comcast are only one in positive territory today, up close to 0.2%. I do want to pivot our attention, though, back to the broader market and the economy with Brian Davidson, the Chief Economic Strategist at Annex Wealth Management. Brian, great to have you on the show. So we got a lot to digest this year. We had tariffs, we've had war, we've had inflation numbers that have been all over the place now. We have earnings season, which is off to a good start here.
But we have seen the market remain quite resilient, and we're still relatively near all-time highs. What is keeping this rally alive?
Yeah, thanks for having me. I think
Okay, Meta turning up.
Number one, it's about just the strength of corporate earnings. If you think about what expectations are going into this earnings
Microsoft.
season, the fact set about 22% year-over-year increase in earnings, second time in a row, quarter on quarter, where we're having those types of numbers. So I think it's really that profit picture, and that explains how we got here. But it also doesn't do a good job, though, of telling us where we're going to go, because I think it actually now creates these vulnerabilities about any whiff of disappointment in the margins. You can just think about some of the people who have reported already, right? I mean, we had Samsung pre-report, very good growth, but yet their stock price dropped because it wasn't apparently good enough. Same thing, even Netflix, we're talking about with entertainment. Very profitable company, but sometimes meeting expectations is not enough, even beating them. It's really about that guidance, and I think that's really the key vulnerability here, is that after all of these shocks, will we begin to see a chiseling away at the fortress of margins that a lot of companies have really built?
Keep an eye on Microsoft.
Because he's very young, he's not afraid of 10% of the S&P. We've got a close to 90% beat rate there.
What, you want to see the bunny? What do you want to see the bunny?
Seen positive reactions to all of those names. How are you looking at that through your lens? Is the bar just simply too high right now, Brian?
Yeah, that's a great observation, because we're still in the early days of earnings season. But when I think about analyzing why it is that stocks move on the news, I always look at, did they beat or did they miss? But then also, what are they saying about the guidance, right? Was there something surprising there? So did they surprise us about where we are, which is about how we got to the most recent results, or about where we're going? And so even for the 90% that have beaten expectations, it's really about, are they expressing conviction in any of that guidance? And I think that can go a long ways to explain why it is that the stocks are reacting the way they are. And the areas that I'm finding really interesting right now is more like on the industrial side, even some of the healthcare names, especially like biotech. Then you think about like banks, think about like construction spending in general, not necessarily the high flyer tech where already embedded in the valuation is an expectation of 30% plus growth. It's like, where are the expectations maybe a little bit lower?
And so let's talk about the banks there, because there's a comparable argument to be made with some of the numbers we got from the banks because of these blockbuster IPOs that fell during the quarter, with some of these incredible numbers that we're putting up from the hyperscalers and these chip names. How are you looking at the banks right now? I mean, I think it was Jamie Dimon came out and said this could be close to as good as it gets. And we're having a lot of these peak results conversations. Is this the peak for margins? Is this the peak for net interest income? How are you looking at these numbers?
Yeah, that is one of the risks, especially when we're looking at the banks, the different business models, the extent to which do they really get their money, make their money from lending to Main Street, or is it more the Wall Street? And it's really the Wall Street picture where I think that is much more cyclical, much more driven by what we saw with some of these blockbuster IPOs. I'm still optimistic about not just the equity side with initial public offerings, but also debt issuance. There's tons of tax incentives for businesses of all sizes to invest in property, plant, and equipment. That needs to be financed, and it's not going to be done through issuing bonds or taking out a loan from a bank or by issuing equity. And so far, it seems like it's really been driven by the bigger companies, the bigger banks that more are focused on investment banking. And I'm much more interested in some of the smaller banks, even super regional banks, that it's a little bit more fee income and then also that net interest margin. But then we look at what happened today, right? Suddenly you see the tweet, or whatever you call it, the post from President Trump about possible retaliation against Iran. Things could get a little worse before they get better in terms of oil prices and then also where interest rates go. But as long as the Fed stays on hold, that spread, that margin, hopefully is going to redound to the benefit of some of those smaller banks that rely more on the health of Main Street as opposed to Wall Street.
we constantly have the debate of what you call a post on X. So I always go with tweet as well because I don't know what the verb would be there. But let's talk about oil here because that's been a big part of the conversation with all of these headlines and all of the geopolitical concern with Iran. How much we got that lower than expected inflation print, which, you know, in theory could make the view path for the Fed a little less complicated. But how much could these higher energy prices potentially derail that inflation story? Because we're looking at gas that's back over $4 a gallon nationally. I'm looking at oil holding pretty firm.
Okay, Microsoft is going.
Earlier saying they expect it to be in triple digits.
There goes Amazon, Microsoft, Amazon.
Yeah, I agree. I mean, you never know what's going to happen in terms of like a flare-up, but I think that it would be very sporadic. It would actually just be a very temporary thing in terms of going there, because I think that is the pattern here, is it gets worse, but then it can get better. And so it's a for now situation, not a forever situation with these higher gasoline prices, even though it might feel like forever as you're living through it. But if we think about where gasoline prices were for, let's say, the good chunk of this month so far, it was below $4. Now, if we average around $4, that means that when we're measuring inflation going from June to July, it is likely going to be an increase. But for a good part of the month of June, gas prices were actually higher and trending lower. So it kind of averages out where we could get pretty much flat inflation from an energy perspective and not necessarily creating that massive wedge between headline and core inflation. So even though it's very volatile day by day, when you average it out across the months, I think that the Fed is going to get a report, not obviously before their next meeting on July 29th, but before Jackson Hole at the end of August, and then their next meeting in September, that it's going to show that core inflation number still hovering around that 2.6, maybe towards 2.5.
Okay, Microsoft, Amazon, Microsoft, looking good.
For now, not a forever situation. Some great insight there, Brian. Really appreciate you taking the time to be with us this afternoon. Brian Jacobson, the Chief Economic Strategist at Annex Wealth Management. Coming up next, we've got Options Corner. Rachel Deshelle will join me to discuss the options activity in DR Horton ahead of earnings tomorrow morning. That's next on Market on Close.
My man. Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Have you ever watched an interview and thought, I wish they had 5 more minutes, or I want to know how they discovered that hidden gem? That's exactly where Market Matters comes in. I'm Marley Caden, and our podcast is slowing things down. We're going beyond the earnings to get to the heart of the people and companies driving the global economy. If you want the full story, not just the headlines, Market Matters is for you. Subscribe wherever you get your podcasts.
Hey, Pop. Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable. Wait, had a stroke? Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time. Jim, my financial consultant. I probably met 20 years ago. Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time.
All right.
Welcome back to Market on Close. DR Horton is set to report earnings ahead of the opening bell tomorrow. Analysts are expecting EPS of $2.99, a revenue of more than $9 billion for the home builder. Investors will be watching DR Horton's report closely for any signs of life in the beleaguered housing market. It's now time for Options Corner. Of course, joining us today, Rachel Deshelle, the head of technical Research and Strategy at the Schwab Center for Financial Research. Taking a look at D.R. Horton, they're down pretty significantly on this session, down more than 3% right now going into their earnings report. As you look at D.R. Horton and how they're stacking up more broadly against the market, some of its competitors, what are you seeing here, Rachel?
Yeah, great to join you, Marley. So DHI and its peers, pretty much home builders as a whole, have been pretty range bound for most of this year, and D.R. Horton's holding up pretty well. It seemingly seems pretty highly correlated with PulteGroup, as the two of them are both slightly underperforming the S&P 500. I think right now home builders are really trying to figure out the direction of rates, which have actually been correlated, or I guess consolidating in the long term, I should say. And right now, home builders are actually sitting on their anchored VWAP from yearly highs as support. So as a group, these home builders are at a structural level, a crucial key level here. And I think any data we get surrounding rates may clear the path for the direction of this group.
And then as we look at D.R. Horton on its own, obviously, as I said just before we started talking, looking for some signs of life here in the housing market with D.R. Horton. But if you look specifically just at this name and what you're seeing in the technical setup, what does it look like as we come into this report?
So just like the rest of the group, D.R. Horton's remained range-bound for the majority of the year, really trading in between these two zones with prior gaps at 170 as resistance, 135 as support, and really right in the middle of that range. DHI has formed this head and shoulders formation over the last 2 months that it's seemingly breaking through today to the downside. That's happening at the same exact time that momentum is shifting into more of a bearish regime with the MACD crossing below the zero line there. And now with that head and shoulders formation, that neckline, which was old support, now new resistance at 149, is slanted a little bit upwards, meaning that this is slightly of a less type of bearish formation, but price hasn't closed yet below 3% below that support, which most technicians would consider that as confirmation. So traders should be aware of any false breakdowns here. The last two things I would say is if they do see confirmation of a breakdown, they should look towards the lower end of that range near 135. But if price can reclaim that neckline, look for a fast move towards 170 at resistance.
All right, so if we're looking for a fast move to 170 at resistance for America's largest builder, in terms of the options action that you've seen today, the stock under some pressure today, but are you seeing any increase in the options, any action, any notable trades that stuck out to you?
Honestly, Marley, a lot of very notable activity here, which may align with possibly what we're seeing in the chart here too. So I found that the largest open interest contract was the 24th of July 2026, the 140 strike put. Had just over about 4,000 in open interest there. Today, we do have a pretty heavy day of options activity. Over 13,000 contracts were traded. About 80% of those were put options. We do have our sizzle index, which tells us that takes the current days activity compared to the last 5 trading days. That sizzle index is 5, telling us that the activity is 5 times the activity of the last 5 days. And when we look at the number of puts being traded, we can actually see that looking at the put-call ratio, it is just above 4, which signals extreme bearishness, which anything over 1 for put-call ratio is pretty extreme. So you could call this the extreme to the extreme. So all I would say here is beware of the crowd at extremes. This could mark a reversal point here for DHI. And then the last thing here.
Okay, Microsoft pulling back in now.
This morning, which honestly could have been the same trader since they were filled at the exact same time, exact same price, just on different
You have a very
exchanges.
cold nose, Miss Kitty Cat. Your nose is cold and wet. Kitty Cat just stuck her nose on my leg. It felt weird. All right, so S&P just got rejected. All right, stocks are getting rejected now. A little profit taking with 9 minutes to go. 9 minutes to go.
Today after a record-breaking opening weekend for the Odyssey. He'll break down the news and what you need to know next.
you know, you could have done better. The same goes for where you invest. Level up and invest smarter with Schwab.
From the most iconic trading floor in the world, this is Opening Bell with Nicole Petalides, live on the floor of the New York Stock Exchange, the countdown, the setups, the stories that make markets move. Minute-by-minute breakdown of the biggest headlines, earnings, and global movers, just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live at the NYSE, right when it counts.
I'm Jenny Horn. We go beyond the headlines, tracking the trends, sector moves, and fundamentals shaping the markets in real time. This is Schwab Network. Subscribe at schwabnetwork.com. Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services. Schwab Network. Available anytime, anywhere, on any device for free.
Intern, this place is incredible. It's where I get all your office supplies. Your golf balls, your fancy coffee, your giant TV. It's everything in one place. It's like Schwab. Everything investors need, all in one place. Yeah, at Schwab, they can do everything. Invest, trade, get full service wealth management, and anything in between. I think I'm going to be sick. We have to buy that now. Schwab.
Invest your way with Schwab.
Welcome back to Market on Close. I'm Marley Caden. It's time now for Overlooked Stocks. IMAX is lower despite what it calls a record-breaking opening weekend for Christopher Nolan's The Odyssey. Joining me to discuss is George Tillis, Senior Markets Correspondent. George, a very interesting day as I'm looking at IMAX's chart. I was looking at IMAX this morning. It popped on the news of this great release of The Odyssey, which was filmed entirely in IMAX's highest resolution 70mm film format, the first ever film of its kind shot entirely like that. Seemed to be a big deal. AMC had some great earnings this morning that seemed to help it pop along with. Then we just saw a complete divergence. IMAX started to fall. AMC, I think last I looked, was up more than 25%. So as you're looking at IMAX and the action we saw today, I mean, break this down for us.
Well, first off, I mean, if you consider IMAX, their business is very unique. So that's kind of sort of a standout in and of itself, with whether it's their theaters or their locations, if you will, but also their productions, their technology. Also, when it comes down to things like live performances, 3D technical post-production services, they provide a lot of back-end technology that maybe a lot of folks aren't familiar with, and that includes, of course, filming technologies. The 70mm production that was recorded using IMAX technology is sort of a standout feature to their business. The news was also very good. If you look at the successful launch or the opening of Odyssey, it was #1 at the box office this last weekend. IMAX recorded in 41 locations that showed the production. They generated about $52 million over the weekend, so that's quite a bit just from those 41 locations. Now, outstanding, the company itself has around 1,800 global locations in 91 countries. But to answer, I guess, the question initially after this good news for IMAX is what's giving with the stock? Well, I think the market, Marley, is really indicative of what's going on with this stock. Market's open quite a bit to the upside. Are trading near the flat line, at least on the NASDAQ futures, even the Russell right now trading lower.
All right, there goes Microsoft.
Volatility manifestation into companies like IMAX, but nonetheless, one of the things about the business itself, it's been growing, and it's been growing quite profitably because irrespective of an intraday pullback, we're seeing the stock is higher about 35% over the last year. And in fact, over the last 5 years, the stock is up over 134%, and that speaks to the financial position the company's in.
Okay, we got less than 4 minutes to go. Microsoft climbing.
Modestly, but profitability has actually been improving for the business. They only had a few years of struggles. Obviously, COVID was a really bad year, but 2 sequential years after that, they did post some net income losses. But since
Okay, Microsoft, nice little rally.
they've been profitable and been growing their underlying franchise.
I mean, if I look overall, I mean, momentum has been on their side over the last year, as you highlighted, but over the last month, they've been under pretty significant pressure, down about 13%. And all of this coming in advance of their earnings on Thursday. I mean, how are you looking at their setup, George, as you're looking at the chart for IMAX as we come into their report card?
Well, I think, considering the aspects of the earnings coming out.
Okay, Microsoft looking good. Okay, there goes Nike in the day, running up a little bit, Nike. Okay, Microsoft climbing a little bit more. Microsoft into the close, looking good. Microsoft.
But my point is if you look at the overall trend in the stock,
2 minutes to go. 2 minutes to go.
The business fundamentals, which have been improving, and let me just give you some context here. Their market capitalization is around $2.16 billion. Sales $400 million last year. They generated $37 million net income on a GAAP basis. Over the last 5 years, too, the company's been paying down debt, to which point they only have about $300 million in debt, $200 million in cash, and they've been buying back shares, 53 million in the float as of the last 4 quarters versus around 59 million back in 2020. So they've bought back nearly, if not more than, 10% of the shares. So overall, the business has been improving, but steadily, compared to companies like AMC, which if you look at that on a 5-year chart,
Go, Microsoft, go.
has just gone down tremendously because of dilution effects.
All right, George, appreciate you bringing us the latest on IMAX and also for that setup as we come into the earnings event on Thursday.
All right, be nice to see Microsoft above the 50-day tomorrow, gap up above Thursday's price action. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. We have 1 minute left to go. 1 minute left to go. Place your closing trades. All right, not a bad day. Not a bad day.
Real-time access, data-driven analysis from U.S. equities to global macro matters.
Okay, Nike turning back up. Nike.
Watch live. Subscribe free at schwabnetwork.com.
Okay.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over
Got 15 seconds to go. 15. Got a hard stop. Hope everyone has a good evening. Coming to you from theclosingprint.com. I'm your host, Cousin Vinny, coming to you at the 4 o'clock closing bell. I got to run. Have a good one, everyone. Take care. We'll see you on Tuesday.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping